some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector. In Scotland, around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
For us, it's a question of how do we, as rapidly as possible, transition ourselves away from a fossil fuel-based economy. And that, of course, has a huge focus on the transportation products, but it also includes energy products.
It's real, and it's rough. Groceries, the cost of groceries has gone up. The cost of gas has gone up. It's one of the highest priorities, actually, for the president and for me.
The administration's lobbying for lower energy prices. China working to release oil from its strategic reserves just 2 days after the two presidents' virtual meeting. China's State Reserve Bureau saying the following. The Bureau is carrying out crude oil release work at the moment. We will release more details on the volume and date in due time. Joining us from D.C., our Washington correspondent, Anne-Marie. Morning, Anne-Marie.
Good morning, John. What a huge win for the White House and President Biden. On the heels of that meeting with Xi Jinping, we know energy was brought up. Beijing is making the first move, trapping their strategic reserves before the United States even does. And all of this comes as the U.S. is not just lobbying Beijing, but also India, Japan, South Korea. If they were not able to get OPEC Plus to pump more and pretty much snubbed by the cartel, they were able to corral consumers. And even before we learned that China was going to tap into their strategic reserves, we already saw prices take a fall. I have to say, I've never seen verbal intervention from the United States work quite like this. I've seen it. I've actually been on the other end of it when it comes to potentially the kingdom and former Saudi oil ministers. But the United States has really pushed the price down just by talking about the threat of not just Washington, but other capitals and consumers around the world adding more barrels to the market.
It's introduced some downside risk to that oil price, and we've seen that materialise in the last couple of days. Just a final question, Anne-Marie, you know what it is. What's happening? When do we hear about it?
The Fed. It has to be about the Fed, Jonathan, if I'm on your show. Listen, we don't know. I don't know. I don't have an answer for you. Every day you continuously ask me and I'll tell you the same thing. What I do know is that the president said by the goodwill of God and his neighbors, we'll know in about 4 days. That potentially could be Friday or Saturday. Now, listen, it's his birthday on Saturday. I likely doubt he's going to come out with a big Fed announcement. Friday potentially could be an announcement, but it'll likely be after the close. So you're going to be working late, I imagine, on Friday, or he punts it to next week. But we do know, and we learned yesterday, it will come before Thanksgiving.
Sometime before Thanksgiving. AMH down in D.C. Anne-Marie, thank you. Looking forward to you breaking that news at some point, sometime before Thanksgiving. We caught up with Macquarie's Terry Wiseman on the next Fed chair. Take a listen to what he had to say about the significance of this event.
If the market perceives this to have been a politicized decision, and there are reasons for it to believe as such, yes, you can certainly see inflation break-evens in the U.S. go up. And I mean, on a long-term basis here, the market will start to price in prospectively a little bit more inflation over the longer haul. The dollar could come down, although I would say that that's tentative because other central banks have similar problems with regard to their own politicization. But yes, it could affect the market.
Back with us, Victoria Fernandez, Matt Miskin. Victoria, how significant is this event? I talk about it every single morning. We're waiting for the Fed chair. Who's it going to be next year? The one we have now, Governor Brainerd. Does it make a difference?
I think it makes a difference in the near term in the sense that it's just more uncertainty in the market. And we know the markets don't like that. They want to have a clear vision of who's going to be leading the Fed. And I think it matters for certain sectors. So you look at regulation in regards to the financial companies, in regards to banks. If Powell is not going to be the leader of the FOMC anymore, then it makes you start thinking some of that regulation could come back, or that could be stricter regulation. And maybe we see that in certain sectors. As a whole, though, I don't think think we're going to see much change in regards to rate hike expectations, tapering expectations. It's still going to be a dovish Fed, but maybe some minor tweaks. And I think one of the biggest things is that if Powell is no longer chosen, then that opens up an extra seat for this administration to fill. So longer term, you could have a shift in the overall outlook of the Fed.
Matt Miskin, I want your take on this. There's something you've said in the last week about politics that caught my eye out on Twitter. You said, please don't allow politics in your portfolio. Under the Biden administration, thus far, top performing assets are oil, energy, MLPs, regional banks. Under Trump, it was tech, growth and China. Focus on the cycle and not politics. How would you consider this event? Is it politics or part of the cycle?
I think it's all about the cycle, as you point out, John. And really, you know, the Fed chairman's going to have the same construct, the same difficult decisions to make. I just look back, though, on Powell's tenure. And you think about it, the beginning of Powell's tenure, 2018, had that tremendous mistake of, you know, walking around the room in the dark, bumping into furniture was one of his analogies. And that's how he was thinking about monetary policy. And the market corrected about 20% right into Christmas Eve. I'll never forget that. And so it's a learning process. But then by the end of his tenure here in March 2020, it was, you remember that morning, it was a Monday morning, Powell comes out and says, we are going to buy corporate bonds. It was in the midst of the pandemic. Credit spreads were blowing out. And he acted so swiftly, so immediately, and so in just a targeted way to make credit spreads stop blowing out, that he really had developed into a really solid Fed chair. And his communication style right now is great. You look at other central bankers around the world, I still don't understand what's going on with some of the monetary policy. In my job, I'm supposed to know what's going on here, but it's really hard to decipher some other central bank chairs. Powell is very deliberate. Well, he says he's very good communicator. I think it takes time for a new Fed chair to do that, and that's the risk. Is that whoever it is going to come in, they're going to have a steep learning curve, and they're going to have to get ready to go as risks come into the horizon into the end of 22 and into 2023. I'm hesitant about putting words in your mouth, but I think you're talking about Governor Bailey and President Lagarde. Would that be fair, Matt? Yes, sir, it is. I'll keep you out of trouble. I won't build on that. Matt Miskin there. Victoria Fernandez sticking with us. I understand we had some technical issues with Vishy Tirupasua. Vishy, I know you're back with us. Looking forward to catching up around the opening bow for a little bit more on your views on what's happening in this market. Coming up next, the morning calls, and later, Macy's reporting a beat and a raise, showing that consumer demand remains robust heading into the holiday season. That stock is up in the pre-market. Another 15%. Take a look at it year to date as well. We'll build on this in just a moment. From New York City this morning, good morning. This is Bloomberg.
We represent 5,500 forecourts, which is roughly 65% of all service stations in the UK. Of the ones that we were able to survey yesterday, roughly 1,500, 27% said they didn't have any fuel, 21% said that they had one fuel type or another, so that's either petrol or diesel, and 52% said that they were fully stocked. Northern Ireland, Wales, Scotland seem to be okay, but we still are seeing, like your reporters are seeing, some stock outs at sites around London and the South East, I'm afraid.
When do you feel confident that this will 100% be in the rearview mirror?
Well, what we're hoping is those people that got fuel over the last few days obviously don't need it again for another few days, and that will give us a chance to actually start to restock the network. So we're trying to get it back to a reasonable level today and tomorrow, and then over the coming weeks, because it will take a number of weeks, to get it back to the sort of more normal running levels.
We are 5 minutes away from the opening bell in New York City this Thursday morning. Good morning. There is a lift in this equity market, up 0.2% on the S&P 500, on the Russell up 4. On the Nasdaq, another lift, up 86, advancing 0.5%. That's the equity picture. Here's the bond market story. Look at 2s, look at 10s, look at 30s, and focus at the front end of the curve. 2-year yields up, let's call it a basis point on 2s right now, to about 51 basis points. The focus on the front end, not just in the US, but also in the UK and in Europe as well. Matt Miskin's struggling to get a read on Governor Bailey and President Lagarde. He's not alone, is he? What about Chairman Powell and the next move of the Fed? We'll talk about that a whole lot more through the next couple of weeks, into the middle of December, when we get all three deciding in a space for about 24 hours. That's the price action. Here are your morning calls. We'll begin first up with JP Morgan upgrading Boeing to overweight, highlighting several catalysts, including the recovery in air travel and resuming deliveries of the 787 aircrafts. Next up, Evercore upgrading Hain Celestial to outperform, $48 price target, seeing an attractive buying opportunity following recent declines. And finally, UBS upgrading PayPal to a buy, expecting some of the company's new platforms to accelerate near-term growth. Coming up on the programme, it's all about the margins. Macy's looking to avoid the same fate as Walmart and Target.
When you put the garbage inside, there's a little sensor that detects the garbage and speaks out. And this is one of the initiatives that we have created here. We, as the residents of this neighborhood, a bunch of neighbors that have come together to try to deal with the fact that our neighborhood is dirty. We want to make a difference. We want to have a clean streets that look nice and are nice to walk in.
בבקשה.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Lagging profitability that the European banks still undoubtedly have is structural weaknesses, which are linked to cost efficiency, to focus on business model, to investments in digitalization.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
23 seconds away from the opening bell in New York City this morning. Good morning to you all. Here are the scores. Equity futures up 11 on the S&P 500, advancing about 0.25% on the Nasdaq. A tidy lift here. It's firmer, up 0.5%, positive 85 points on the Nasdaq 100. On the Russell, up 11, up 0.4%. That's the opening bell. Switch up the board and get to the bond market. Your 10-year yield shaping up as follows. Yields are higher by a couple of basis points now. Can we call it 2? Let's call it 2 to 160, 61 on 10s. In the FX market, Euro had a look at 112. 12 bounces back to 113.41. It's positive on the session by 0.2%, and a turnaround in crude. A break lower over the last couple of days, and now a bounce back by 0.6%, $78.85 on WTI. Let's talk about its equity open, advancing 0.25% on the S&P. Top of the pile, information technology advancing 0.6%. Bottom of the pile, communication names. I'll get my words out. Communication names down 0.33%. Staples down about 0.25%. Utilities down about 0.2%. For the markets right now, worldwide, there's just one obsession and absolutely no consensus.
We're starting to split hairs over exactly what transitory means.
Transitory keeps getting longer and longer.
If we're still talking about inflation being transitory, by definition, it's not transitory.
Ultimately, it's going to be transitory.
Some of it is definitely transitory.
It's been long enough now where we've seen higher than expected, higher than consensus inflation.
Peak in the quarter we are in now, early next year, and then fade.
I don't think transitory is appropriate.
Back with us, Vishy Tirupattur, Victoria Fernandez, Matt Miskin. Vishy, something Gene Tenuso just said there. If we're still talking about it, by definition, it isn't. Do you agree?
I think this word transitory has been dissected far too much, in my opinion. There are some aspects of, there are some components of the inflation, that are going to change as the supply chain constraints loosen. And there are certain other aspects of components of inflation that are going to remain stickier. I would put the owner equivalent rent in that category. I want to stay away from the use of the word transitory because that's been overused. But I think the bottom line is that we will expect to see inflation higher than what the Fed had been shooting for, about the Fed's 2% target. We'll see it higher, but over the course of next year, we'll see it, or especially in the second half of next year, the level of inflation to start coming down.
Victoria, that T word is absolutely meaningless right now, isn't it?
Yeah, I mean, there's no set definition as to what it means, so people can use that word to define whatever time period they're thinking of. The bottom line here is that there are components of inflation that are going to start coming down when you look at year-over-year comparisons, and that spiked because of the pandemic. And so I think we can expect to see that 3-month number really start to decline, and that's what the Fed is going to be looking for. That doesn't mean there are not longer-term components in inflation that are going to continue. Wages we've talked about already this morning. I think rents is an area where we really need to focus, and that actually is going to be a pretty significant difference between the CPI and the PCE, knowing that the Fed looks at PCE. So I think we need to watch rents. It's a bigger component of PCE. We're seeing housing prices move higher, which means you usually see rents move higher about 3 to 6 months later. So there is going to be a stronger component to push inflation higher, but not all of it will stick around.
You mentioned wages too. I want to build on that a little bit more. There was just a quote that came out from Jefferies. Take a listen to this. We believe the US is entering the tightest labour market conditions since the 1950s. They go on to write, we recognise that pandemic-related distortions have contributed to the recent wage strength by temporarily depressing labour supply. We no longer expect wage pressures to ease meaningfully. Matt Miskin, can I get your response to that quote?
They're probably right. Yeah, wage growth is probably going to be here, and we're going to need to hire people and get people back to work. There's still a lot of open jobs. I want to kind of go back to this transitory and this thought of inflation right now. But, Emily Rowland and I, my colleague, are actually working. We just did a podcast yesterday on what we're grateful for Thanksgiving. And one of the things I think you want to put on your flip on its head right now is this transitory and the supply chain issues being a negative. If you didn't have a scapegoat for this inflation, the Fed would be raising rates aggressively. You think about where inflation is right now. If they didn't have this transitory, saying, or if they didn't have the supply chain issues, we'd be in an environment right now where they'd be going back to the Greenspan era of raising interest rates almost every month. So we've got to be thankful that, I know it's tedious. I know it's hard to get through this transitory stuff. But at the end of the day, we're actually lucky because that is pushing off the rate hikes for now. It's giving them an excuse to do so. And as we work these supply chain issues, these bottlenecks, eventually, actually, inflation will probably come down into 2022, and that's our call.
Family members everywhere skipping your Thanksgiving dinner this year, Matt Miskin, if that's what you're thankful for. the T word. Let's get to some single names. I'm joking, Matt. I'd love to be there. Some single names for you this morning. And start with NVIDIA, gaining 11% around the opening bell. A big move on that single name. We'll look at Alibaba and Macy's as well. NVIDIA up about 11% at the open. 4Q forecast beating estimates. That's one name. That stock right now, where are we? Up 8.5%, so off the highs. Macy's up 11%, was as high as 13%. Alibaba is getting absolutely slammed. Second quarter revenue miss a little bit earlier this morning. Let's pick up on Macy's, up 11%. The numbers were good. It's a beat and a raise, and this is what the company had to say. The company implemented several measures to mitigate supply chain disruptions and doesn't expect to be materially impacted during the fourth quarter. Some better news from America's retailers with more. Here's Ed Ludlow. Hey, Ed.
Yeah, good morning, John. It is good news. And what they were saying is that demand is there now, right? But it's also going to be there in the holiday quarter. Don't worry about supply chain disruptions, John. Your favorite sweater will be on the shelves. But remember, in Macy's case, this is a specific story, right? A new CFO who has had a savage cost-cutting program that has boosted margins. Without going on too much of a tangent, I want to compare that with technology because the macro picture doesn't change, right? Hot inflation, supply chain bottlenecks. In NVIDIA's earnings, they were able to boost margins by having a higher mix towards premium segment products. Cisco had the opposite. They couldn't get anything out the door because of supply constraints. If you bring it back to retail, they don't have that same equation, right? Because they're not passing on those higher input costs to the consumer. They want to protect sales. That's soft data you're looking at your screen. Foot traffic across retail stores in the US last week. Look at the gains we're seeing year on year. Remember, this margin story in retail is not you. If you think back to the August quarter, it was a lower mix of e-commerce sales that were weighing on margins. The question Wall Street is asking now, the demand is there. What is the pain tolerance of consumers to absorb higher costs? And we're talking about higher wages to boot to go with it. So Wall Street wants to know, when are you going to pass on the cost, guys, and protect those margins? I wasn't around in 1990, John. I've never known inflation like this. But as a consumer, am I willing to swallow higher costs? I don't know yet.
Ed Ludlow, you that young? Went around in 1990. Ed, thank you, sir. It's good to catch up. Ed Ludlow, out of London. Thank you, sir. We appreciate it. Invesco's Matt Brill weighing in on the situation with Macy's and the upgrade potential of several names in credit. Take a listen to this.
Macy's margins actually expanded over the last quarter. So what we're seeing out of corporations is they're learning to live with inflation. They're learning to pass it along and then some perhaps to consumers. Corporations, their fundamentals cannot be better, and inflation is really not disrupting that.
Vishy, I want to come back to you, sir, on the potential for upgrades. I want to understand within credit whether this story has played out, whether that upgrade potential is behind us, whether we've seen the gains already. Macy's has had a wonderful year in the equity market. Vishy, do you think we have seen that already? Is that behind us?
I don't think it's entirely behind us. I think there is still there are upgrade stories still to be played out. We expect to see upgrades being what we call rising stars over fallen angels. The narrative will change from fallen angels to rising stars, and that's while some of that is being played out, there is more of that yet to come.
Matt Miskin, I understand the reluctance not to cover some single names from your perspective, but just as a universe, as a group, your thoughts on the retailers at the moment?
Yeah, we see consumer discretionary as a tough spot. And I think right now retailers are doing well, but Amazon and the online retail space may get more love as COVID comes back here, and it's a difficult situation. I think right now, we'll have to see how the winter goes. Again, Europe right now is going through a tough time with COVID again. That may be coming around into the United States as we get into the winter. And I think retailers are going to have a tougher spot. But if you look at consumer discretionary overall, you've got two huge giants in there. You got Amazon and you got Tesla at the top of the index. And that's where we're seeing actually going to be driving performance. You got specialty retailer like Home Depot, things like that. They're going to probably do okay. But broad-based, we would be hesitant on the space.
We had the CFO of Target on yesterday, and you just got a sense, Victoria, there's a worry now about competitiveness. Even if the consumer price tolerance exists, there's a reluctance to pass it on too much, and that prices aren't keeping up with costs anymore in quite the same way. Have you picked up on a similar theme at the moment, Victoria?
Absolutely. We heard it from the Target CFO. We also heard it from the Walmart CEO, both of them talking about how they didn't want to pass along all of their input price increase onto the consumer because they're there for the consumer to pay lower prices. So I think you're going to see that competitiveness. There are some things that they're doing. I mean, you look at Macy's, they said online sales were up, I think 39% or something from 2 years ago. And they're looking to split their online business just like Saks did. So I think companies are looking at ways that they can kind of divvy up their business for those online shoppers. They can be more competitive in certain areas than others. And I think we're going to continue to see that going, along with seeing partnerships. Kohl's on their earnings, they had great earnings. They partnered with Sephora in order to bring people into the stores. So I think we look for more of that type of activity from the retailers, but we like that space. We come back to the consumer. We've said we think they're driving this market, and they're going to continue to do so with demand so high. And so we think it's a good space to have in your portfolio.
Just on the margin story, though, exclusively, specifically, Victoria, we seem to be coming into every quarter asking the same question, and we just about get by. In fact, over the year, we've done more than that. Earnings have been terrific. Margins have really held up. But every quarter will be another stress test for that story. Q4 this year, Q1 next year, potentially Q2 and beyond. Do you get the sense, do you have the confidence they can completely keep repeating the act?
I don't think they're going to repeat what we've seen over the last couple quarters, Jonathan. I mean, we had amazing margins. You had 13, 14% margins. Is that going to come down some? Yes, I think it is. But I think comparing it to historical levels, it's still going to be pretty strong margins at this point in time. I think these companies with scale have the ability to reduce their input cost as we go through some of the supply chain efforts. You see Walmart, getting their own carriers to bring goods over. They've changed the way that they do trucking in order to get things sooner to the stores. They're going to use their scale in order to lower their input costs and try to keep those margins up as best as possible. But I don't think we're going to see them at the same levels as the last 2 quarters.
Macy's up 13%, about 11 minutes into the session. Victoria Fernandez, Vishy Tirupattur, thank you. Matt Miskin, I'm thankful for you, sir. Thankful for you. Not for the word transitory. Anyway, happy Thanksgiving to you, sir, if we don't catch up soon. Equities up about 0.2% on the S&P. The Nasdaq up 0.25%. Coming up, we're counting down to the next Fed chair.
Continuity is very important. I think he's done a great job, and in my opinion, I think he's earned the right given how he's been able to navigate through this pandemic. So I still think that he will get it, and it'll reduce some of the uncertainty. And if Brainerd gets the vice chair job, I think that that's a win-win.
That conversation up next. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
There's a pretty good chance that you use products made by Meta every single day. If you've never heard of Meta, that's because it's the new name for Facebook Inc., the parent company of Facebook, Instagram, and WhatsApp. All right, perfect. In a spiffy presentation on Thursday, Mark Zuckerberg showed off his vision for what he's dubbing the metaverse. That's a sort of mix of augmented and virtual reality worlds which will let the user explore virtual ecosystems. Much of what he showed isn't yet available. It's really his vision. In that sense, it was more like the sort of presentation Elon Musk does, where he looks at what he hopes might happen one day, than what Steve Jobs does, or Steve Jobs did, which is showing off products he already has available. He also, in the course of it, announced a name to Meta. The company will be called Meta from now on.
Our mission remains the same. It's still about bringing people together.
That's an effort partly to show the vision for the future, but also a way of casting adrift some of the toxicity associated with Facebook. But if this new company is going to be a success, or the new company vision is going to be a success, he will still have to deal with a lot of the same challenges that Facebook has faced. Concerns about privacy, content management, those are going to be just as pertinent, if not more so, in the metaverse as they are right now on Facebook's existing apps.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says, I look like I'm on.
I noticed that.
Do you think I need a lift? Is it time
What
that
did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I had no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
It's Brainerd versus Powell.
Lael Brainerd.
Jay Powell.
Who's going to be the chair of the Fed?
The big differences, of course, are more on regulatory policy.
From a policy perspective.
Not a lot of daylight, honestly.
Financial conditions, broadly speaking, are very, very easy.
Inflation is definitely running hot.
Whoever comes in is going to have to tighten rates.
Whoever's in the spot has a hard job ahead of them.
It is seemingly Powell versus Brainerd. Investors awaiting President Biden's nomination of the next Fed chair. The team over at Goldman put in their market bet since, saying the following: because Brainerd is viewed as more dovish, I'd expect a rally in the level of yields and curve steepening on the idea that a Brainerd Fed wouldn't want to go until a more expansive view of full employment is met. With more on this, let's bring in Bloomberg's Katie Greifeld. Hey, Katie.
Hey, John. While real yields are at a record low, Fed chair speculation is at an all-time high. The White House said yesterday that Biden will likely make a pick by Thanksgiving. John, that is 1 week from today. Now, betting markets still have Powell as the favorite, but Brainerd's odds are rising. And if she were tapped, Brent Donnelly of Spectrum Markets said that would inject meaningful uncertainty into markets because it's not clear that she would clear confirmation. And at least in the bond market, there's already plenty of uncertainty priced in. Looking across asset classes, implied volatility in treasuries is already well above that of stocks. If you look at the VIX, actually, it's near the lows of the year, whereas the MOVE index for bonds is close to the highest level since April 2020. And of course, a big reason why we're seeing turbulence in the bond market is because inflation is back in a big way. Core PCE is at the highest level since Alan Greenspan was your Fed chair, all the way back in the early 90s. Now, Brainerd is thought to be more dovish than Powell, more likely to let inflation run hot. So PCE could jump even higher should she get the nod, John.
That line at the end there, Katie, just build on that. Goldman said the same thing. Brainerd is viewed as more dovish. When we speak to Fed watchers, they don't say that. They say there's not much daylight between the two people, but for some reason in markets, that's where perception is right now. Is that the sense of things that you get too?
So far, talking to people, I think Ian Lingen of BMO had a really insightful note yesterday that basically no matter who the pick is, these people are going to be tied to the inflation data on the ground. But even still, the knee-jerk is expected to see a little bit of a pullback in the belly. Should Brainerd get the nod? Maybe a little bit of a sell-off should it be Powell.
You wonder how temporary that would be. Katie, thank you. Katie Greifeld there on the difference, potentially, between Chairman Powell and Governor Brainerd. It is perception versus reality right now. And for perception is always important for things like confirmability, because there are people who believe there is a difference here. Politicians especially. Key senators are weighing in on the future of the Fed. This line from Democratic Senator Sherrod Brown, who is certain that the Senate would confirm either candidate. Then you've got Republican Senator Mitt Romney, the latest to weigh in on supporting Powell. And as you know, Senator Warren has her thoughts on Chair Powell. Bloomberg's Anne-Marie Hordern back with us for more. Hey, Anne-Marie.
Good morning, John. Well, it's obvious the White House is still trying to figure out who are they going to appoint. This has been quite an indecisive decision for the White House, and they're looking at who in the Senate is going to support either or. But they have this backing from Senator Brown saying, by and large, widely, we will able to get through one of these individuals. It is going to be either a renomination of Chair Powell or potentially an elevation of Governor Brainard. But John, if I could just quickly chime in on the debate about Brainard being dovish, potentially that is a narrative, yes, in the markets, but also here in Washington as well. They do think that she is a bit more dovish. But there is no evidence at all about how either of these individuals would handle high inflation. During both their tenures at the Fed, inflation was running well below 2%. And we've heard more from Jay Powell, of course, talking about inflation's transitory. We haven't heard from Governor Brainard. The key question for either of them is going to be how they evaluate broad-based and inclusive employment when inflation is running hot. And Democrats have in the past been inflation hawks. You look at Fed Chair Volcker during Carter and Reagan, widely accredited with being able to bring inflation down. So I don't really trust that narrative because the evidence doesn't match it.
At the end of the day, though, this is perception versus reality, and when it comes to confirmability, the former is the latter. Can you help me understand the confirmability of, say, Governor Brainard versus Chair Powell right now when you hear from the different senators in Washington?
Well, Governor Brainard potentially will have a little bit of a harder time. She's going to get those progressives like Senator Warren who don't like Chair Powell, who thinks he's dangerous, and those who want to see a little bit more of a clampdown on banking regulation. But there aren't even Republicans, Jonathan, who are also so gung-ho on Chair Powell. Senator Rick Scott, I've spoken to him a number of times, and he thinks that what the Treasury has done, buying so much Treasuries, has been a wrong judgment of this Fed. So on either end of the spectrum, you also have these individuals who are against what you would think for the mainstream of their parties. What will be very interesting, of course, is the hearing. For Chair Powell, it's going to be how can you continuously say we have transitory inflation and now we have a 6% handle? And for Governor Brainard, it's of course going to get political. This is an individual who's a registered Democrat who also donated in the past to a political party.
Anne-Marie, thank you. It was imminent, then it was 4 days, and now it's before Thanksgiving.
A week.
Maybe a week away. Anne-Marie, thank you. Down in D.C., we appreciate it. Your equity market up 0.2% on the S&P. Let's lift the lid on the index, get you some sector breakdown. Here's Kriti Gupta.
Well, good morning, John. Green on screen on the benchmark level. Even though 9 out of the 11 sectors are in the red, your laggard is energy this morning. Your leader is information technology, thanks to those chip makers. NVIDIA is the big mover, results showing a strong outlook coming amid a backdrop of concern that the industry wouldn't be able to meet the demand. But for NVIDIA, it's all thanks to an expansion into the data center chips, the kind that Facebook is going to need for the metaverse, something powering AMD shares as well. And you can see on the chart in front of you, year to date, chip makers have had a pretty good rally. The latest leg up coming for the EV boom. After the close, though, we do have Intel and Applied Materials reporting as well. We'll see if it's a NVIDIA story or a broader sector story, John.
Kriti, thank you. Kriti Gupta with the sector breakdown. Here's the bond market breakdown. 2's unchanged at about 50 basis points. On 10's, yields higher to about 160. On 30's, yields higher by a couple of basis points to almost 2% at 199. Coming up on the programme, I'll get you your trading diary and a ton of Fed speak still ahead. From New York, this is Bloomberg. I was just finishing what you were saying, Tom. November 3rd is when the decision is. Just in case people got confused, I will. Just one more story, Tom.
Yeah, thank God for that.
We're at 137 right now into weakness. Is this where they play the music in the Academy Awards? Is this it? Do I thank my mum again? Are you in charge of this?
Is she the only one?
Kill the music. You know who's in charge here. Live from New York City, about 25 minutes into the session, your equity market is positive by 0.1% on the S&P. On the Russell this morning, negative by almost 0.1%. Right now on the NASDAQ 100 positive 25. We're advancing about 0.1% as well. Not much going on here in the equity market. At a single name level, tons going on. The likes of Macy's, a big mover to the upside. Alibaba, a big mover to the downside. In the bond market, yields unchanged on 2s at about 50 basis points. On 10s, advancing a basis point to in and around 160 at 159.92. The focus, of course, on the next Fed chair. Then on from there, December 15th, middle of December, a Wednesday, when we get a Federal Reserve decision. Then after that, you'll hear from the ECB and the Bank of England. Governor Bailey seemingly teeing up a rate hike at the Bank of England, and the ECB President Christine Lagarde seemingly pushing the other way. Do we get some central bank divergence within G10 that could set up some interesting FX plays through next year at a time where the dollar index is in and around 95, 96 still? That's the bond market story. Here's the story for the day ahead and into the weekend, your trading diary. There is a ton of Fed speak. Bostic, Williams, Evans, Daly, all on the agenda. The President of the United States, President Biden, meeting with Canada's Prime Minister and Mexico's President a little bit later this afternoon. You'll hear from the Fed's Waller and the Fed's Vice Chair, Rich Clarida, on Friday. We have not heard from the Vice Chair in quite a while, and Vice Chair Rich Clarida right now not even talked about. And as you know, for this market, he's been a guiding light for many of you, I know, when Chairman Powell had some difficulty with communication. All eyes on the White House, of course, going into the weekend. Will we get a decision on the Fed chair? From New York City, thank you for choosing Bloomberg TV. For our audience worldwide, this was the countdown to the open. This is Bloomberg.
Front, when your shares are down 20%, it's going to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution: fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
financial centers of the world. This is Bloomberg Markets with Alex Steele and Guy Johnson.
Union 1, Deere 0. Deere's month-long worker strike ends now with a 6-year contract, a 10% pay bump, and a bonus. Is this finally wage inflation? And stocks really fight for a rally. Macy's blowout quarter hurdles the stock to its highest level in 3 years. Alibaba, though, missing estimates, falling the most since December. And oh, Sweet Green. Sweet Green finally goes public. We're going to talk to the CEO, Jonathan Neman, later on in the show. From New York, I'm Alex Steele, my co-host in London, Guy Johnson. Welcome to Bloomberg Markets. Guy, we can get into the nitty-gritty in a second, but for me, that Philly Fed Index just pointed to an economy that is super, super hot, which really echoes what we heard from, say, Macy's and Kohl's. And that, to me, is part of this underlying story in equities.
So I don't know a lot about retailing. I don't know a lot about shops. I don't know a lot about Macy's. But I do know that everybody's been down on Macy's for a long time. So if Macy's is doing well, that tells you that this economy is absolutely on fire and demand is absolutely massive. That Philly Fed number, it's a hugely volatile set of figures. But nevertheless, to your point, it just basically highlights the fact that the U.S. economy is on fire right now. Demand is absolutely strong, huge momentum. And we're going to talk about as well, the labor story in the mix as well. But Macy's is the real tell for me today.
Well, the Philly Fed Index, and this kind of ties into Deere and Macy's, prices received index was up by 12 points. It's the highest reading since 1974. Yet, Macy's and the consumer sentiment may be lower, but the sales are really good. And I think that speaks to the fact that consumers are still willing to spend, which kind of feeds into that wage story.
They're willing to spend at Macy's, which is kind of interesting in itself, but they're also willing to take on the higher prices.
Yeah, true.
You are the discounting experts. I don't think there are many discounts out there right now. People are paying up, and they're prepared to do it. Tells you a lot about the demand story.
I did get a small discount in that Barbie Dream house, though, which is what I really needed the discount on. Just so we can say that.
Okay, but it's a small one. Normally you'd have expected a huge one. Let's talk about that labor story as well, because I think that's absolutely front and center. The other real tell for me today was that Deere story. So Deere union workers, they're going back to work. They're going back to work this morning. Basically what we've seen here is an ending of this month-long strike. Now, UAW members ratified a new labor contract. That happened Wednesday. Alex ran through some of the details at the top. There's an $8,500 signing bonus. There's an immediate 10% pay bump in the first year. And then basically you've got a series of sequential bumps beyond that. This is, I think, a 5-6 year contract. That's not all. Workers get a 3% bonus every other year. It goes on and it goes on and it goes on. And it basically tells you that labor have the grip on the situation at the moment, which I think is such a big turnaround from the last few decades. So let's kick this around a little bit. Let's get an idea of what all of this is telling us about these markets right now and what you can do in terms of your investment decisions based around it. Joe Doe, he helps lead metals and agricultural coverage here at Bloomberg. He does so in the Americas. Katie Greifeld, Bloomberg cross-asset reporter, writing a fantastic piece about inflation this morning. Well worth a read on the Bloomberg terminal. Joe, let me start with you. Alex framed it this way. UAW 1, Deere 0. Is that the correct way of interpreting this situation?
You know, I mean, listen, if you talk to the company, they probably feel like they won because their workers are back to work. And not only did they start this morning, they started last night, 10:30 Central Time shift. It's the third shift. But yeah, I think on the whole, whether you're talking to analysts or anybody else in the market, they do feel like the workers finally got paid, right? I remember when the second one of the 3 deals that went up, when it failed, I was kind of asking around the market and various union workers, why did this fail? Like, what specifically, what's the nitty gritty? And somebody explained to me, you know, Joe, you're missing the point. It has gotten personal now. We are recovering from the pandemic. It has been years where Deere workers and many other union workers took pay cuts for a couple decades. And now they're just saying, you know what? We were essential workers during the pandemic. We put our lives at risk to be in those factories. Pay us. You are seeing EBITDA, you are seeing profits at levels that you've never seen before.
Yeah, and Joe, I have to wonder if this is a Deere-specific thing, or do you think it's going to go to some of the other companies? Because, quite frankly, I've heard of, strikes in Hollywood. My goddaughter had to strike because she works in Hollywood. I know that there's museum worker strikes. Like, it's really a broad-based thing.
Yeah, it really comes down to, when does your collective bargaining agreement end? And listen, I was talking to some folks inside Deere who said, hey, our collective bargaining agreement is due up in 2023. So maybe mark that on your calendars, right? I think it really is timing as a part of this. I mean, this is a conversation that we've had a lot at Bloomberg about the broader labor story. And if your contract is up now or maybe in the next year, your company is going to probably have to have quite a long negotiating period.
Katie, the market by and large, though, the equity market, the capital market, seem pretty comfortable with the inflation narrative that we've got thus far. To Joe's point, what he's basically saying is this is going to go on and on and on. Labor wants more, and that is going to be sticky. Do you think the market at this point has got a grip on what is coming towards it?
I would say it depends on which market you're looking at, because to your point, stocks seem totally comfortable. The S&P 500 up 25% this year, the VIX near the lows of the year. But if you look at the bond market, that's where things get a little funky. And especially if you look at implied volatility in treasuries right now, that is at the highest level since April 2020, which is never a good size and scope when we're talking about volatility. So I think the bond market is looking at the inflation on the ground, the inflation that's expected to come, also trying to suss out who the Fed chair is going to be next year. And you're starting to see much more anxiety in that market than you are in equities right now.
Which is so interesting, because Howard Marks was talking to Taylor Riggs yesterday, and here's part of what he had to say about the S&P, but also how he is positioning for inflation.
Oaktree is certainly not taking a strong position on the assumption that there will be a lot of inflation and that we have to avoid it. We are doing our normal thing. We certainly have not inverted our portfolios to prepare for inflation.
What did you make of that, Katie?
It's interesting. It really depends on who you're talking to and what their time frame is. So in this article I have up for Bloomberg Business Week, I spoke to someone who said that she feels totally comfortable because she's looking 3 years out. She's picking companies based on balance sheets. But if your timeline is a year, this is the call you have to get right. Whether we are going to see this spiral in inflation, maybe driven by wage pressure, or whether this really is going to be transitory. It's something that's going to cool down, peak maybe in February. I know that's Citigroup's call, but if you're trying to manage money around this, this is the question that you have to answer.
One of the things that I think the market's beginning to pick up on as well is the idea that actually food price inflation is starting to rise and rise fairly rapidly. You're seeing wheat. Wheat, I think, is at a 9-year high, Alex. I think you've got a situation where you're starting to see a bunch. I think it was coffee the other day hitting a 7-year high. That's a major crisis. Joe, when we think about Deere, I was looking at a chart as well of used tractors earlier on. I think they're up by 25% this year. Input costs are up massively for the food industry. There's the wheat futures story. In terms of what the near-term effect of a Deere strike is, a Deere strike sounds like something you do in your car, but a Deere strike does in terms of the food industry. What is the translation effect, the input cost story? Because people are starting to feel this in the grocery stores.
Yeah, listen, Deere union workers were very aware of this point, right? Like, this is I've heard so many times people say this was a perfect storm. You have global supply chain issues. You have companies trying to ramp back up production to meet the unbelievable demand that they just did not see coming in 2021. You have the rise of commodities. I cover the metals industry, cover the ags industry. You look across the board, everything is up. Every day we're saying, what's the next redhead, right? What's the next big headline about prices being up? And I think you look at Deere, you have workers not working, right? We reported that parts were taking weeks to get to farmers at the peak of the harvest, right? The busiest time of their farming season, instead of 1 to 2 days. And it was all of these things compacting into one. And that's why you started hearing farmers say, we want these people back to work as quickly as possible because we're getting it on all ends on the price curve, on the price levels.
Hey, Joe, I'm wondering, the contract is for 6 years. So I'm just wondering, does that in some way cap any kind of wage inflation? Because if inflation actually runs hot, we're going to need a lot more wages to keep up with it, right? And that's sort of the dynamic that Katie is also talking about on the market. And I'm wondering if, because the price increases is like just 3% and then 5% down the road, does that change the dynamic? What do you think?
Yeah, and listen, I mean, Katie's looking a lot more macro than if we were just looking at Deere. Deere's 10,000 workers, right? I mean, this is on the grand scale of thing, not a lot of workers. And then you also have to ask, well, how many unions are actually up for, contract negotiations? And that's where we start asking internally at Bloomberg, like, is this labor wide, right? This is a moment. We feel like this is a moment. But how widespread is it? And I think the markets are still trying to figure that one out. I don't think anyone is saying, yes, for sure, we're going to see this wage inflation go not only in 2021, but 2022 to 2023. And I think that's one of the things Katie's kind of getting at is some people are just saying, well, hold on a minute. We've been around these markets a long time. There's a lot of people who do remember seeing wage inflation, back in the 70s, but it's been a while. But I don't know if we can quite say for sure that we're going to just see rampant wage raises going on for years. But maybe I'm wrong. I mean, this has been some sort of a shift or sea change that we've seen this year that really we haven't seen, especially in the manufacturing space, probably for 30 to 40 years.
Wow.
Yeah, and that's the point, isn't it, Katie? That this is a once-in-a-generation shift. There are people I'm 50, there are people my age that vaguely remember inflation, but never really had to deal with it in the office. There's a huge number of people that are younger that have never even seen inflation, never seen interest rates in the teens, never seen house prices going up at kind of similar amounts as a result of what is happening here, and asset prices reacting. Katie, is there the institutional memory that is in the market that is capable of kind of contemplating such a big pivot?
Well, that's part of the worry, because if we're talking about core PCE, we're talking about headline CPI, it's at the highest level since 1990. I mean, 3 decades. Even if you've been managing money for 10, 20 years, you probably haven't seen this in a long time, and you haven't had to deal with this. And I mean, the risk is that we do end up going back to, what we were seeing in terms of the late 60s to the early 80s in terms of how the bond market reacts, how the equity market takes its cues, and whether that institutional memory is there. I mean, again, we're talking in terms of decades, so it's definitely questionable.
And if that's enough to kind of move the market then. All right, Katie, thanks a lot. Joe, thank you as well. It was a really good conversation. We appreciate that. We're going to have more about inflation, how it's showing up in food prices. We're going to talk to Jonathan Neman. He's a Sweetgreen CEO. He'll be joining us later on in this hour. Coming up right now, how do you hedge your portfolio against all of this? Anastasia Amoroso, iCapital Network's chief investment strategist, joins us next with her strategy. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
For us today, it's a lot more about things like services. So people come because they want to find the local plumber, maybe a contractor, maybe it's a babysitter, and they tend to convert very fast. So we do well for advertisers, top of the funnel, brand, and then bottom of the funnel, direct response.
Not only have rates come down, bringing with them the prospective returns on all securities and all investments, not just bonds. But at the same time, markets have become more efficient. It's not easy to beat the market these days, and the margin of superiority, to the extent it exists, is smaller. That's the definition of efficiency, and you must expect that markets will become more efficient over time, as this one has.
That was Howard Marks, Oaktree Capital co-chairman and co-founder, speaking to Bloomberg earlier yesterday. Joining us now, Anastasia Amoroso, iCapital Network's chief investment strategist. Easy money's been made. Take a look what happened with Deere and wage inflation. Hot economy. How do you hedge it? How do you hedge inflation?
Well, I think it's the critical question to ask for 2022 because hedging inflation this year has not been a problem. If you look at equity returns, we're up 25%. And even though fixed income has done pretty badly, you still have a 60-40 portfolio that probably is giving you about 15%. But I don't think that's going to be the case next year. So if inflation persists next year, and most economists agree that it will, we're still expecting inflation of 4.6% next year. That means that hurdle rate for your investment returns has to at least beat 4.6%. But when you look at consensus, Alex, and you look at the expectations for the S&P, we might get a 9 or 10% return. And if you look at bond prices and where they might be headed, there's probably going to be another year of declines. So my point is that the 60-40 portfolio is just not going to be enough to beat inflation and deliver returns in real terms. So that was a long-winded way of saying is that you need to look elsewhere for those returns. And there's three things that I would point to. First of all is real estate. Second of all is private credit. And the third one is crypto. I think has to be a part of the inflation hedge portfolio. But real estate, many people probably do have an allocation to REITs, but it's small, right? It's 3% of the S&P. So the area that we're looking at is in private real estate, where you get sectors like apartments or leisure and hospitality that give you a pretty good inflation pass-through.
Yep. So there is an alternative to equities, is what you're saying?
Yes, there is an alternative to equities, and I think investors need to increasingly look there. Obviously, that's been a big part of our discussion with clients is what's the alternative to the 60-40. So I like real estate. I like private credit because we badly need, an alternative to fixed income as well. As I mentioned, if you look at the global bond market performance, you're probably down 2.2% for the year.
So Anastasia, just to be clear, you're talking about the 40, you're not talking about the 60. The 60 is still in equities.
Well, the 60 is in equities, and I think the 60 is going to be fine in terms of delivering the 10% return. The 40 is not going to be fine. It might deliver a negative return, but you blend the two together, you're not going to get a very high rate of return most likely next year. So the things that you might want to do is peel a little bit from the 60 and allocate to something like cryptocurrencies, because if the portfolio has a chance of beating inflation, you have to have hyper growth in the portfolio. And if I look around the world today, if I look across disruptive technology, that hyper growth is happening in cryptocurrencies. I mean, look at the returns this year. In crypto, something like a Bloomberg DeFi index is up more than 200%, I think 250%. So this is clearly where that growth is happening. And the problem with inflation, it's not just denting your disposable income, it's denting the real return and the real value of your portfolio.
So I'm trying to understand then sort of what crypto follows, because sometimes it seems like it's a hedge.
Yeah, Alex, it doesn't unfortunately fit in neatly in any one category. When you think about something like Bitcoin, it probably has most of the classic inflation hedging characteristics because we know that it's supply constrained, and as long as the demand and adoption of it continues to rise, that should do fine. But the way I think about it is really what is the space that can deliver that hyper growth, and it is crypto. So I do think the that for most investors, it's more of a tech play, it's more of a growth play than maybe it's a classic kind of a commodity currency play. And by the way, when you look at technology, one way to value technology, like we were doing in the early days with Facebook and Netflix, is the network value. So it's all about adoption. It's about the number of new wallets, the number of new addresses. And we've seen that number surge this year. And I think there's a lot more potential ahead.
So David Solomon yesterday, over at Goldman Sachs, CEO, was talking about the fact that fear and greed are out of whack, that greed is basically in charge and is in the driving seat right now. You're talking about looking at alternative ways of valuing some of these assets, and many people will say, well, that sounds exactly like what we were talking about in 98 and 99. Do you think fear and greed are out of whack here?
I think there's definitely performance chasing. I do think there's a lot of greed that has crept into the market. I will say, you look at something like call buying, call options. We saw the net buying in the top 2% since 2000 the other week. So there's definitely some aspect of chasing here. But you have to step back a little bit and to go back to crypto for a minute. If there is 100 million Ethereum and Bitcoin addresses right now, what is that 100 million going to do? Is it going to go to 200, 300 more? And I think the answer to that, most likely, yes, it will over time. There's over 5 billion adults worldwide. So I do think that a potential adoption curve is pretty significant. So, Guy, maybe near term, you could definitely make an argument for a lot of the assets, not just crypto, but equities, semiconductor, software. Maybe that has run up a little bit. It's a little bit too stretched. So I would not be shocked. In fact, I would love to see a pullback in some of those risky assets, but it is a pullback that you would want to buy given what lies ahead in terms of adoption.
So it's not 2000, or is it?
I don't think it is 2000 in many ways. Probably one of the most significant ways. If you looked at 2000, you had interest rates that have been hiked significantly leading up until then. And as a result of that, you actually would have been better off in the bond market versus the equity market. And that's just not the case today, given where real rates are and given the Fed that is not really rushing to hike them anytime soon. I think it is just a very supportive environment for markets. And look, I'm sure there is plenty of young and unprofitable companies that are commanding stretched valuations, and that's something that we need to be aware of. But I think the amount of disruption, the amount of innovation, the amount of opportunity is really significant.
All right, Anastasia, thanks a lot. It was great to see you in person, too. Thank you so very much. Anastasia Amoroso of iCapital Networks. Thank you. Guy, here, stocks really rolling over. Cisco really leading the decline. Salesforce also lower as well, and some of the large cap names.
Absolutely. You've seen it from the get-go, really, in Europe. We've been down from the start of trading. There's the Stoxx 600, as you can see, really nosing over now. It's been some of the old stocks that have been doing it. It's been some of the heavyweight miners that have been doing this. You have to take a step back, though. What was the number there? 487. We were at 490. Record highs still aren't that far away. We're kind of bouncing around. But nevertheless, a little bit of a sell-off, and it's on okay volume. The volume's kind of mixed across Europe. It's better over in the United States. What are we going to talk about next? Nvidia, the chip sector, absolutely hot right now, surging to a record. Its growth in the last 8 quarters now makes it 3 times the size of Intel. We're going to talk more about that next on This is David Wilson. This is Bloomberg. Think competition is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever. But nevertheless, talk to me about what you think the competitive landscape is going to look like here.
We've seen a bit of departures in this market, and this market has three very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the US, New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one directional traffic from the US to the UK, and now it's open, of course, to UK nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
From New York City,
in London, in Sydney,
in San Francisco,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Stock of the hour, NVIDIA. Dave Wilson, over to you.
Fiscal third quarter results went over well. Earnings and sales beating analyst average estimates in the Bloomberg survey. Fourth quarter revenue outlook, same story. And it's all about data centers at NVIDIA. That's the fastest growing area of the business. 55% increase in revenue in the latest quarter. Overall, 50%. Sixth straight quarter where they had that kind of increase. And NVIDIA, which took over last month from TSMC of Taiwan as the biggest chipmaker in the world. Now, that gap is now about 30% after these results. And if you look at companies this year in terms of market value increases, NVIDIA has now jumped to third. It was fourth as of yesterday. Only Microsoft and Google's owner Alphabet have added more market value. So it's just NVIDIA's on a roll.
Yeah, no kidding. Definitely on a roll. Huge market cap. Now, hey, Dave, thanks a lot. Really appreciate it. Bloomberg's Dave Wilson watching NVIDIA stock up by about 9%. All right, coming up, salad chain Sweetgreen goes public. So we're going to talk to the CEO, Jonathan Neman. That's coming up next. What is he going to do with the money? What about inflation? This is Bloomberg.
We landed with 40% remaining.
Years ago, Ewan Dixon was the first guy to do it. It's taken a century for us to change our propulsion system away from liquid fuels.
There are dozens of international companies in that airframe size who have realised the opportunity, are in a race to get those commercial aircraft out there at that scale. It's an area that can be served by hydrogen, which we're well placed with, through fuel cells.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Live from New York, I'm Alex Steele with Guy Johnson over in London. This is Bloomberg Markets. We are about an hour into U.S. cash trading. Kriti Gupta is looking at where we stand. Kriti, we are rolling over now.
We are, and we started green on the screen thanks to those chip makers in particular, but you can really see it was the rest of the market that started dragging the indexes lower, not just here, but over in Europe as well. You can really see it is a risk-off tone. You're not seeing that, though, in treasuries, which was really flat on the day. Yields not moving anywhere, really in anticipation of whether or not we're going to hear about this new Fed decision. Is it going to be Lael Brainerd? Is it going to be Chairman Powell again? We don't know, and you can see the Treasury market really just bracing for that. But where all the action seems to be, Alex, is going to be in the oil market in particular. After days and days of trying to find some way to really get those oil prices lower, it looks like Joe Biden has had some success talking about a potential reserve release, not from the United States, but over from China. One of the results of the conversation between Xi Jinping and Joe Biden as well. So you can see it is that's kind of pressuring oil prices just a little bit. But the question is how much and when is it coming? So that's where you're seeing a little bit of choppiness intra-session today. Let's get to some of those micro movers, though, because those earnings stories are still trickling out hot and heavy, especially when it comes to those retailers. You do have Macy's up a whopping 17%. Same story with Kohl's, up almost 7%. The story here, beating their earnings, a positive holiday forecast. But here's the difference. Macy's talking about expanding their digital marketplace, using that buzzword, e-commerce. And that's why you see that 17% increase in Macy's at the moment. A different story when it comes to Victoria's Secret and Bath & Body Works. Remember the two spin-offs of limited brands in particular. Victoria's Secret, once again, 14%. For them, the story is a little bit different. They beat expectations when no one thought that they would. So coming into that, they are having a pretty good boost. I'm going to end here with the tech story in particular because NVIDIA was the big market mover intraday. You did see that up, expanding their business from gaming into data center chips in particular, and ending with Cisco, which of course missed their estimates, blaming those supply chain concerns.
Kriti, thanks very much indeed. There are some reports suggesting that this sell-off may be down to the fact that we are seeing Joe Manchin tweeting that his votes around Build Back Better, the second part of the Biden plan, by no means locked in. I don't know why anybody is surprised by that, but it looks like that could be the case.
Yeah.
He's proved a little tricky when it comes to corralling him with the rest of the party. We'll see what happens next, Alex.
Yeah. Also, I should point out that there's a lot of options that expire tomorrow. So there's going to there's volatility around that too. So we can't discount that part, and volume's thinning out.
No, I think it's going to be a real bumpy one tomorrow. Really bumpy tomorrow. So it could be a fun Friday. We'll see what happens. Let's talk about an IPO that is happening today. Salad restaurant chain Sweetgreen going public. It's doing so on the New York Stock Exchange. It's raised $364 million in an above-range IPO. The business founded back in 2007. It's got 140 locations. It now operates across 13 states. Joining us now from the New York Stock Exchange is Jonathan Neiman, Sweetgreen's CEO. Jonathan, really appreciate your time today. Thanks for taking some of it to talk to us. Look, you set up the business a while ago. You've obviously been working towards this moment. You're IPOing the business. Now what?
Well, first of all, thank you so much for having me. You know, over the past 14 years, Sweetgreen has built an amazing brand, supply chain, tech capabilities, and most importantly, culture and team. And we believe we're at a very exciting inflection point. As you mentioned, 140 restaurants across 13 states, but we have a very big mission and very big vision. Our mission is building healthier communities by connecting people to real food, and we'd like to transform fast food and make it healthy. So the current plans are to double our footprint in the next 3 to 5 years and over time create a massive global iconic brand that changes the way people eat.
Hey, Jonathan, congrats on the IPO. Still waiting for it to trade. Where are you going to be building? You're obviously very much geared towards urban centers, and we've seen a lot of people sort of relocate to the suburbs, particularly during the pandemic, and a lot of work from home. How do you take advantage? What do you do with that?
Yeah, so we started the business in Washington, D.C. and really intentionally wanted to open in a lot of the major cities around the country, whether that be New York, Boston, Chicago, Los Angeles, and San Francisco. But over the past few years, we have expanded our reach to many more communities, including Colorado, Texas, Florida, and we are really excited to continue to meet our customers wherever they are and follow them home. So Sweetgreen has stores, successful stores in both urban and suburban markets, and eventually we'd like to be everywhere. So we're looking to open new markets every year and bring our healthy offering to more and more communities.
How do you think that Sweetgreen should be valued? Are you a tech company? What kind of a company are you? I know you've got the Spice acquisition, which I think you are still incorporating. What kind of business are you, particularly with kind of rolling Spice into the business? Do you think, how should investors see you?
So first of all, Sweetgreen is a brand and a food company first. We leverage technology in order to make it a better consumer experience and a better experience for our team members. Whether that be our 5-channel model and having multiple ways of ordering from a customer perspective, the software we build inside of our kitchens from a supply chain perspective to create a more efficient working environment. And eventually we do believe automation can help create a better working environment for our team members while creating a better experience for our customers with faster speed of service and many other attributes. We're very early in our development of automation, but very excited for what that can do over time.
Jonathan, does that mean that you're going to replace workers with robots and a robot's going to make my salad?
We're actually not going to replace workers. We believe the workers will work side by side with humans and elevate the job of humans and allow us to open many, many more restaurants than we would without it, thus creating many more jobs. Today we have 5,000 passionate team members, and one thing I'm really, really proud of is yesterday, right before going public on the eve of our public offering, we did what we call a gratitude grant, an equity grant to every single team member in the company. That means from the dishwasher through the executives, every single person received equity, so they are an owner in Sweetgreen as we look to expand.
In terms of those team members, what are they earning now versus what they earned a year ago? Are you struggling to find people? Is there a labor shortage that you're struggling with? Just give me a sense of, from an operational point of view, where the struggles lie.
So, of course, as you read in here in the news, labor has definitely been challenging for our industry. However, people want to work at Sweetgreen. We have a mission-driven brand and amazing culture that people are attracted to. A lot of growth opportunities with the number of stores we're building. You can come join Sweetgreen and within 3 years go from a core team member to a general manager, or what we call a head coach. On top of that, we have best-in-class pay and benefits, including parental leave for every single person that works at Sweetgreen. We pay above market rates for all of our team members, and like I said, we offer things like equity as well. So we're really proud of the working environment and what we do for our team members, and they are our most important ingredient. They are what makes Sweetgreen come to life every single day.
In reality, though, the ingredients are actually like salad and stuff and vegetables and things like that. Guy and I were talking earlier about wheat prices being high, coffee prices being high, soybean prices being high. How are you managing the cost inflation right now? How long do you think it lasts for?
You know, Sweetgreen is a really interesting supply chain. We have over 200 domestic and suppliers and partners made up of both small, medium, and large partners. We really focus on the relationship with those partners, thinking about the soil health, the nutrition, and the taste of that food. Because of the way we've set up our supply chain, while there's definitely been challenges that we face like everyone else, we've been able to navigate it really well and have a lot of resiliency in our supply chain. So I'm very proud of the way our team has navigated and the way we've taken care of our farmers and partners along the way.
So you've got more suppliers than you've got outlets right now. Do you think ultimately that balance changes? Do you think ultimately you will have to consolidate some of those suppliers?
No, we look to build both a national and regional supply chain. So we have national partners as well as regional and local partners in every city we go to. So as we continue to scale, we would love to bring more suppliers onto our network, but we'll also be able to leverage the suppliers that we have today. Over 60% of the suppliers we have today, we've been working for multiple years at a time. So we're really proud of those deep relationships and what that does to bring the Sweetgreen experience to life.
Jonathan, thanks a lot. We appreciate it. Waiting for that stock to start trading. We appreciate you the time today. Jonathan Neman, Sweetgreen CEO. All right, coming up. Kriti was mentioning it. Oil prices rolling over, but is it going to be enough? U.S. propane prices are also dropping from those October highs. So have we hit the top? Are the worst fears about a winter shortage actually overdone? We're going to break it down with Suburban Propane CEO. Will be joining us next, Michael Stavala. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The app is doing exceptionally well. So let's talk about the paid users for a moment. Our strategy has been to create value-added experiences that our users want to pay for, that adds value to their experience.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Let's check in on the Bloomberg First Word News. I'm Rishika Gupta. The leaders of the US, Canada and Mexico will hold their first in-person meeting since President Biden's election. The three will meet at the White House today. Amongst the issues likely to be discussed, energy borders and auto manufacturing. Trade disputes remain despite the rewrite of the North American Free Trade Agreement. In Canada, the city of Vancouver has been cut off from the rest of the country by land due to flooding and mudslides. Major highways and rail lines going in and out of Canada's third largest city have been blocked after what local officials call the storm of the century. That's led to panic buying at grocery stores. And inflation's on the mind of bankers around the world. Economists at JP Morgan now expect the Fed to raise interest rates next September. JP Morgan is the latest Wall Street bank to abandon an earlier forecast that the Fed would stay on hold through next year. Meanwhile, the CEO of HSBC also sees rising prices as a big issue. We talked to Noel Quinn at the Bloomberg New Economy Forum.
I am concerned about inflation because I think at the same time as the supply chain recovering, there are some new issues. Supply chains are repositioning, partly because of geopolitics, partly because of resilience considerations by governments. Oil prices are going to remain high for quite a while.
And after hitting what was a 7-year high, oil prices have eased over the last 4 weeks. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Alex.
All right, thanks so much, Ritika. So let's stay with oil prices for a second. Will it be China that's going to further help ease those concerns over higher oil prices? China does say it will release some of its strategic petroleum reserves to help the global energy markets. Joining us now, Emery Hordern from the White House. Emery, did the Biden administration do this? How did this sort of come about?
We don't know yet because China has done this in the past, and they recently did it in September to the tune of a little bit north of 7 million barrels. But the timing is interesting, and it comes off the heels of President Biden and that virtual summit with Xi Jinping, and they talked about energy security and the volatility. And then the next day, we heard from National Security Advisor Jake Sullivan, and he said that the two leaders agreed that they would work on energy and task their teams expeditiously. And then what do you have? Just 24 hours after that, China looking at tapping their strategic reserves. It is a huge win, we should say, for the White House. They have not have to tap their own reserves just yet. Just corralling consumers and the threat of it has been able to push down prices.
So are we now in a situation where you've got a cartel of producers, we call it OPEC, OPEC plus, and now a cartel of consumers?
I wouldn't go that far yet. I wouldn't say it's a cartel of consumers. We only just heard from Beijing. We still need to see what maybe India, South Korea, Japan, and the United States will do. I think the question is the verbal intervention enough, or will the U.S. have to actually go tap the SPR to try to put a lid on gas prices and, of course, ease concerns for consumers at the pump? Because that's really the president's biggest problem, those rising prices in gasoline and groceries, and just the threat of higher inflation still yet to come.
Groceries and gas A lot of people pay attention to that. Anne-Marie Hordern, thank you very much indeed, joining us from the White House. Let's stay with the energy theme. Propane prices in the US have actually dropped from their recent highs. We're down by around 25% off the October highs. So are concerns over a winter shortage story kind of a little overdone? Suburban Propane operates in 41 states and is one of the largest propane suppliers across the nation. Its CEO is Michael Stivala. He joins us now. Michael, really appreciate your time today. It is perfectly timed, this conversation. October saw the highs. We faded since then. Are we going to be okay this winter, or are we going to revisit those highs, do you think?
Well, first of all, thanks, Guy, for having me this morning. Really appreciate being on the show. And look, the supply situation in the U.S. is not necessarily what I would consider temporary. Okay, there's three real factors that are playing into the current supply situation for propane here in the U.S. One, you have to look back at pre-pandemic activities where you had a significant ramp up in the industrial complex in Japan, in China, and other parts of Asia, as more and more production of the goods that we need every day was coming from overseas. Mm-hmm. And so that significant ramp up in manufacturing activity in Asia, a lot of that is fed by NGLs that are exported out of the United States, and propane in particular. On top of that, recently, obviously, we've seen a significant shift in energy policy and significant regulations placed on the oil and gas industry, which has really made production and refining activities very difficult in this environment. And so that's not allowing the production to keep up with some of the demand.
So, Michael, on that point, let's just pretend that the U.S. does release some oil from the SPR and that China does the same. Does that materially impact what you do?
Certainly not what Suburban Propane does. We're a retail distributor here in the United States. We serve 1 million customers for their home heating, cooking, clothes drying. We serve commercial industrial customers. So we are a domestic provider of energy to our consumers. Let's face it, the release of strategic petroleum reserves ultimately needs to be refined. So the move just to release reserves is not going to immediately impact the supply of propane here in the United States until ultimately it gets refined. And I think that's where some of the regulatory framework can get in the way. The other aspect is we are exporting a significant amount of propane out of the United States into Asia. Exports have typically ranged in the 1 million barrels a day range. And over the last several months, as economic activity has increased, we're touching closer to 1 million, right. 1.5 million barrels a day of going overseas.
Wow.
Michael, do you think the president should say enough's enough and say, actually, we're going to put some export bans on? Do you think that propane should be staying in the United States?
I'm not a proponent of bans, from an export perspective. I think I'd rather see a little bit more regulatory relief to help out some of the situation. I mean, certainly, if the situation here in the United States gets to be very challenging, then that could be on the table. But the reality is, it's all going to be driven by the weather. Okay, the last time we were at propane prices that were this high in November was in 2011, and it was almost the same pricing structure. And we happened to hit the warmest winter, one of the warmest winters on record for 2012, and that ultimately significantly brought prices down immediately. By February, prices were almost a third below where they were in November. So a lot's going to depend on the severity of the winter weather that's coming up, where the weather occurs, and how sustainable we get challenging weather or traditional winter weather.
So, Michael, later on today, you have AMLO, Justin Trudeau, and President Biden are meeting. And something that's going to be talked about, most likely, is Line 5, which is a pipeline that runs from Canada to Michigan. Propane is on it, and oil is on it. Do you think that closes, or does it live?
Well, I sure hope it lives. I think it's a very misguided thought that we can do without the amount of propane and oil that comes in from Canada to serve some of the critical needs particularly in the upper Midwest there. I mean, that line is a significant contributor to the energy needs, particularly of Michigan, Wisconsiners. And I think if that ultimately gets canceled, that can be a real significant constraint on the energy needs in that particular part of the country.
Michael, how much of the propane that's being used in the United States at the moment is related to outdoor dining? COVID's starting to make a return in certain parts of the United States. Outdoor dining could be a feature once again this winter. Where is the propane that you're selling being used right now?
Well, we've seen a bit of a normalization in propane demand over the course of the last 12 months. Right when the pandemic hit, you saw commercial industrial demand just completely crater. And we were surprised and pleasantly surprised by the residential sector that picked up significantly on that on the demand side, both because of the stay-at-home initiatives where more people were in their homes and therefore using their heat, but also the outdoor activities. And through the summer of 2020 and ultimately into the fall of 2020, we did see a significant change in outdoor dining activities that brought demand for propane. But as we got into the winter of 2021 and we started to see some of the COVID restrictions easing, businesses opening up again, we saw a real normalization of demand where commercial activity came back, industrial activity was back, and residential sort of got back to a more traditional heat-related demand.
Right.
Yeah. Michael, thanks a lot. Really appreciate it. I've just walked in all the restaurants here in New York to see all that propane. Michael Stavala, Suburban Propane CEO, thanks very much. We're going to have more on oil and gas prices and the SPR release on Commodities Edge just coming up at 1 p.m. in New York, 6 p.m. in London. Don't miss that today. This is Bloomberg.
Extra $1 trillion in spending, not increase inflation.
By increasing the productive capacity of this country. And that's a very important thing that we frankly have not successfully done across most of my lifetime. You know, I've been waiting for this legislation for months since I became Transportation Secretary, but various presidents have been hoping to reach this day for decades, and it hasn't happened for all kinds of reasons. The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future. Let me also point out to the fact that Part 2 of the President's agenda, what I like to call the big deal. But Part 2 of that, the Build Back Better Act, has even more that will help beat back inflation by lowering some of the costs that Americans feel most acutely, the cost of childcare, the cost of healthcare, the cost of housing, the cost of prescription drugs, bringing those down while also making sure that we ease some of those labor market issues we have by making it easier for working parents to afford to go back to work.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
From London, I'm Guy Johnson, Alex Steele over in New York. Let's take a look at where European stocks are. We're heading into the close. We're fading into that close, but there's some single stock names that we really need to talk about and dig into. Hermès, the French luxury giant, trading really strongly today. JP Morgan suggesting maybe, just maybe, this is a stock that gets put into the Euro Stoxx 50. That certainly would provide a huge tracking boost. ThyssenKrupp, the steel giants, up by 7%, let's call it. Good set of numbers today. People are a little iffy on the free cash flow outlook statements, but nevertheless, this is a company that still has an awfully long way to go to the sum of the parts valuation that people talk about when you break this business up. We talked about it earlier on this week with the hydrogen story. And here's my story of the day. Naked Wines down by 5.2%. The reason? We're all going to bars. We're not drinking at home. Alex Steele is still drinking at home. This is Bloomberg.
Esta operación definitiva para dar con la captura de este bandido la planeamos el 15 de octubre del año en curso. A las 8 de la noche en una guarnición de Bogotá nos reunimos con los oficiales de inteligencia de la policía, nos reunimos con los oficiales de planeamiento de operaciones especiales de las fuerzas militares y de la Policía Nacional, y es cuando se decide cambiar y darle otro salto a esta estrategia.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says I look like I'm on.
I know, I noticed that.
Do you think I need a lift? Is it time that
What did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I have no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
For us, it's a question of how do we, as rapidly as possible, transition ourselves away from a fossil fuel-based economy. And that, of course, has a huge focus on the transportation products, but it also includes energy products.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Thursday, November the 18th, European stocks fade. We're being led lower by commodity stocks. Oil stocks are lower, mining stocks are lower. Got the banks down as well. There's 30 minutes to go. The countdown to the close starts right now.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
So European stocks are fading into the close. That's the narrative we're watching right now. We are seeing the mining stocks coming down a little bit. Some of the oil stocks are also fading on the back of the move that we were hearing about from Anne-Marie Hordern that is being driven by the Chinese. The FTSE 100 is down by 0.6% on the continent. We're looking a little bit better, but it's definitely feeling a little bit more risk off right now. As I say, the banks are drifting a little bit lower as well. That's adding some heavyweight downside to these markets. But It is worth remembering, as ever, that we are near record highs, Alex.
It's such a good point. Here in the U.S., I got some winners and some stark losers for you as well. To pick up on your point about energy, that is the worst performing sector in the S&P, down by about 9 percentage points. But it's also metals and materials. Metals are really rolling over as well. So just watch that commodity space in general. Well, of course, I would say that. On the upside, you have consumer discretionary up by 1%. Macy's crushed it. Kohl's crushed it. Victoria's Secret crushed it. Bed Bath crushed it. Who knew? At the end of the day, individual stocks, Cisco, worst performing stock on the S&P. Their outlook fell short. It was a rare miss. It's falling the most since August 2020. Upside, Nvidia, super solid. At one point hit a record. One analyst says we could see a $1 trillion market cap here. This is most definitely the chip story. Winners, losers. Guy?
Well, let's talk about what is happening in terms of one of the big drivers here in Europe. European countries starting to make significant U-turns as they face a brutal fourth wave of the pandemic. Workers are looking to return to working from home. Bill Gates, the founder of Microsoft, spoke with Bloomberg editor-in-chief John Micklethwaite at the Bloomberg New Economy Forum. They spoke about what is happening with COVID and the strategies that are going to be required to deal with this next phase of the pandemic.
The idea that economic activity will resume in full once you get to flu levels, it's very likely. Now, you'll have some hot spots where you'll still have to have non-pharmaceutical interventions or, huge incentives for people to get protected. Any country that was able to do what China did and stop it early before it exponentiated up, where you had case rates, above 2% of population, that's a huge blessing that they were able to do that. That means they have very little natural immunity, and so they have to drive their vaccination coverage up dramatically before they drop sort of that wall that's allowed them to exclude infection from coming in.
That was Bill Gates, Microsoft co-founder, speaking with Bloomberg editor-in-chief John Micklethwaite. That's at the Bloomberg New Economy Forum. Let's go deeper into the virus right now and the latest surge. Sam Fazeli, director of research for EMEA for Bloomberg Intelligence. He joins us now. Sam, something that Guy and I have talked about a lot has been record high equity prices in Europe, yet also rising case count, particularly in Germany, over in Europe as well. Is the rising case count, why is the market ignoring it? What's within the numbers that should leave us feeling better?
Yeah, well, hi, Alex, and thanks for having me back. Well, we've seen that there's been so much progress in terms of antiviral pills, in terms of the third shots, booster shots, whatever you want to call them, of vaccines. So I think the investors are probably, and rightly so to a degree, hoping and believing that these measures will be implemented correctly by the various governments, and that it will lead to a control and a dampening, and that hopefully this is a fire that can be put out across Europe. I don't think that's misplaced, but that requires a lot of the governments to really make the right politics to make sure that that happens, and also put the systems in place.
What do governments need to do now to get in control of the situation, Sam?
Yeah. And my favorite thing has been always talking about masking. It is the cheapest, the easiest, the simplest way of reducing the risk of transmission. Keep people going back to offices, etc., but please ask them to wear masks and guide them a little bit so that people don't wear what looks like just basic thin tissue over their face, thinking they're covered. If we do that, it's a lot less about protecting me, but if I am infected, I will have a lower risk of infecting somebody else.
How are vaccination rates going? I mean, here in the U.S., we're talking booster rates now. We're not talking vaccination rates anymore. It's a different story in Europe.
Yeah, but also, I have to say, Alex, I think that's really wrong in the U.S. Because if you've still got 40%, 20%, 30%, depending on what state you're in, of your population never vaccinated, not even have their primary series, that's bad news. And if you look across Europe, I think you find that the countries with the lower than 70%, 75%, 80% coverage are suffering a little bit more in terms of infection rates. So that's what we're seeing across Europe. But every country seems to be going up. Italy may be just slowly coming up.
Sam, I'm going to leave it there. Great update. Thank you very much indeed. Bloomberg's Sam Fazeli joining us from Bloomberg Intelligence. Let's bring in now into the conversation Mark Hafele of UBS Global Wealth Management. Mark, we thought we might have put this behind us. It doesn't look like we are. The European growth story may be at risk here. What do you make of the rise of infections that we're starting to see? Do you think investors should be concerned?
Well, we don't think it's the primary concern at the moment. What we are seeing, of course, along with this is not necessarily the spike in hospitalizations yet. And I think that's what we have to be focused on now that we're in a world of breakthrough infections, for governments to really take significant action to slow the recovery growth that we see. That would be the metric that we would be focused on.
Hey, Mark, it's great to see you. It's been quite a long time. You guys came out with your 2022 target, or your outlook for this year today. And I just wanted to sort of tie in your bull case, and that's the S&P hitting 5,200. And I'm curious, what's your base case for COVID if we hit that level?
Well, we see that in the base case, we see COVID tapering off as a problem based on not just the infection rates falling with the boosters and the vaccination rates rising, but the hospitalization rate, which is our new focus, remains low and continues to go lower. So that's part of our base case.
Janet Yellen said the other day that if we beat the pandemic, we'll beat inflation. Are we going to beat inflation if, as you say, the scenario unfolds that we can get control of this virus and actually this fourth wave may end up being effectively an exit wave?
Yeah, I think that was a really important statement for a couple of reasons. First of all, when we look at this inflation, certainly a lot of it is in that supply and demand imbalance, right? So, as you've had some people on talking about this, parts of the world open up and they want to buy, they want to spend, while other parts, have, like, for example, the third largest port in China can be closed, and that contributed to these supply demand imbalances. And so, and we think that is the largest component of this inflationary spike that we're seeing. So I think from that perspective, that's a very important point. But the other important point is that, that story around that inflation is temporary, coming from Treasury, coming from the Fed, likely means that the Fed will be very circumspect before they take actions to perhaps over tighten. And I also think you have to factor that in, the policy response, into what we're seeing in the data.
All right, Mark, hang tight with us. I'm Mark Hafele of UBS Global Wealth Management. You'll be sticking with us. We're going to get more on that 2022 outlook next. This is Bloomberg.
Common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector. In Scotland, around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
inflection
was just
point.
finishing what you were saying, Tom.
Thank
November
you.
3rd
You
is
did
when the
your
decision is.
extend
Just in
this,
case
Jim,
people
please.
got confused, I will. Just one more story, Tom.
Yeah, thank God for that.
We're at 137 right now.
Wrap it
into
up.
weakness. Is this where they play the music and the Academy Awards? Is this it? Do I thank my mum again? Are you in charge of this?
Is she the only one?
Kill the music. You know who's in charge here.
18 minutes to the European close. I want to talk a little bit about what is happening in different asset classes and the impact that volatility is having from one to the other. Then I want to talk a little bit about what that means for your portfolio. So what we've seen is a lot of volatility in the fixed income channel. That's now starting to bleed into the FX channel. What we've seen over the last few days is a significantly strengthening dollar. The euro's down through 113 against the dollar. The euro's also weakening up against the Swiss franc. I think we're at a 6-year high on that one. So we're getting back into some interesting spaces here. And that's going to have a meaningful impact in terms of the portfolios that everybody's trying to manage on either side of the Atlantic. There has been this idea that you push out of the United States into Europe and vice versa. But I'm going to kind of lean in on that because the FX story is starting to get exciting and it's going to have a material impact. And my piece of evidence for this is off the WEI screen on my Bloomberg. And it's right at the end here. And it's basically year-to-date performances and year-to-date performances currently adjusted. And what you've got here is the S&P, 24.74% year-to-date. That's the gain that you are getting if you're a dollar investor. If you're a euro investor, you've made 34%. So a nearly 10-point gain vis-a-vis what you would have made if you were a dollar investor. So that is a huge factor in terms of thinking when you have to currency adjust your portfolio. It works for Europeans into the US. It works against the US investors into Europe. So let's think about this in the context of the year ahead. As Alex has already indicated, UBS Wealth Management out with theirs. Mark Hayfley obviously writing around all of that. Mark, what do you make of the story when it comes to currency adjustment? What should we be thinking about here when we think about currencies and the impact it's going to have on our equity market performance?
Well, look, we think that the dollar can strengthen next year versus European currencies, versus the Swiss franc, because you've got the chance that the Fed is going to be tightening at the margin, or perhaps even later if the economy is strong, seeing rate hikes, whereas we just don't see these rate hikes taking hold really in Europe next year, or in Switzerland or in Japan. But also for the pound, we think it could lead to some pound appreciation because the Bank of England is on the more hawkish side. So I think the driver on the currency side, you want to first look at what's going on in the relative central bank action. And then, of course, how that relates to equities, well, we would say go where the growth is. And we do think that the European recovery can continue here. European equities have not had quite the strength as some of the other regions, and it's a very cyclical region. So we think it'll benefit as this global growth continues into the first half of the year.
So, Mark, if I'm a U.S. investor, how do I buy European equities? What's the best way and the best hedge?
Well, look, there's lots of ways to buy European equities. But so regionally, but we're also thinking about this in sectors, and so global financials would be another sector that we would look to play this, and also in the energy sector or the commodity equity space, because there again, it's another way to play this kind of global growth. Now, in terms of hedges, I'm not saying that it's a direct hedge, but as we look out further into the year and we see that growth normalizing, one of the sectors that we're looking at is healthcare, because healthcare has both some attractive valuations and some defensive characteristics on the pharma side, but it also has that kind of disruptive technology component when you look at things like gene therapies.
If you're a European investor and the dollar's going to go stronger, and you guys think the dollar's going to get stronger, then the outlook for investing in the United States looks pretty solid. You've got some pretty good performance coming through. We are maybe going to see Europe outperforming, but nevertheless, once you put the currency overlay on top of that, you're going to get a nice pop. What should European investors do? Should they stick their money at home? Or are they going to get a better bang for their buck, I excuse the use of that, over in the United States?
Well, right now, I think that particularly earlier in the year, we think there's more bang for the buck in European equities and Japanese equities than playing it, even with the currency component involved. So for right now, this growth is just so strong. I think that and the inflation is high. We don't see it as a threat, but to the extent that it plays to the upside, I think that focusing on the equities that are in the growth sector and more resilient to inflation is the number one idea that we have right now.
What about the back half? You do see a turn in the middle of the year.
Yeah, I think so. As mentioned, healthcare being a preferred place to look for the back half of the year. But then also, is it time to build up some strategic or more strategic holdings in areas like emerging markets or China, where, we just haven't had the same moves that we've had this year. So we do see some signs that China's growth slowdown, will be bottoming out, and that a lot of the noise around regulatory changes are getting into stocks. But I think that's an area where we're going to be looking to try and move capital as we get into the back half of the year.
Mark, how do you think about where we are now? We've been debating this all week. David Solomon of Goldman Sachs thinks that greed is outpacing fear right now. A lot of people are concerned about valuations. You see the EV stocks taking off, these hyper-growth stocks. We were talking to Anastasia Amoroso about this, the Rivians of this world, now worth more than Volkswagen. What does that tell you?
Well, look, there's certainly a lot of capital sloshing around in these markets at a time when, longer-term growth projections are, would be normalizing. And so there are still people who are willing to pay up for growth. We would suggest that the places that you want to look for that are indeed the areas like clean energy, energy alternatives, where both China and the United States, and as 55% of the world's largest carbon producers are now on track to kind of cut emissions by 2050. There's a lot of regulatory policy support in these areas. So I think it's a mix of large amounts of capital flows, but also this positioning for where the growth is going to be exceptional over, say, the decade ahead. And that's one of the things that we cover. But I also just want to come back to valuations. We really saw this third quarter earnings as a test. And keep in mind, the earnings beat expectations, which are already elevated. The margins remain strong, and companies did not guide down materially in most sectors, really, around anything around this supply chain or the labor issues. And therefore, the valuations are not that stretched compared to where they have been, given that earnings growth.
Mark, always a pleasure. Great to get you on the show. Thank you very much indeed for your time. Mark Hafler, UBS Global Wealth Management CIO. What are we going to be talking about next? The Turkish lira, very much in free fall. Another rate cut today. We've seen another 100 basis points. What comes next? Well, the hints are maybe that we're coming to the end of this cutting cycle. But nevertheless, the Turkish lira very much under pressure once again today. This is Bloomberg.
on the supply chain, are you starting to see things improve? And if you are, where specifically, sir?
Well, this year we have been mostly affected by the semiconductor situation, and we believe that the Q3 was the quarter that was most affected.
Turkey's central bank cut its key interest rate for a third consecutive month. That in itself was no surprise, but the move did push the lira to a new record low and frustrated investors who are saying monetary policy is becoming increasingly erratic. Damien Sassower, Bloomberg Intelligence Chief Emerging Market Credit Strategist, joins us now. Okay, 100 basis point cut. Surprise or in line?
In line, but I mean, look, the reality is what I'm not surprised about is the move in the lira. I mean, what's different this time, right? I mean, we've talked about this before. You know, Erdogan tries to pursue his dovish policy. He then basically starts cutting rates. They have to dip into their FX reserves because the currency is depreciating too quickly, and then rate hikes begin anew. What's different this time, Alex, is the fact that their reserve base, their net FX reserves are negative 36 billion. And so the moves we're seeing here, these digital binary moves in the lira, are because the government can't step in and stop the bleeding. And, you know, this has basically been the call for, a run on the lira that many have kind of been out there talking about for a long period of time. And so if you just look at where the lira is, the one thing I do want to correct a lot of people here today are talking about, down 32% year to date, down 3% overnight. They're looking at the movement in spot FX. But what real institutions do, if they have the risk tolerance to invest in Turkey, is they're investing in non-deliverable forwards, or they're investing in local, in a way where they can extract that interest rate return. So that negative 32% year to date return in spot is only negative 16%, when you take into account the fact that there's an interest rate return there in the front end of the curve.
Are we about to come to the end of the cutting cycle? There was a kind of hint about that within the statement.
That's a great question. I mean, it depends on, just how far we go in the lira, I think, Guy, before Erdogan really sees the error of his ways. I mean, again, what's really scary here is that he's, he cited the Quran in his most recent statement. This is about usury, this is about Sharia law and his beliefs therein. And, when you have that kind of, firm religious belief that, high interest rates are bad, it may be very, very difficult to get you to move the other way. And I guess at what point, Guy, to your question, at what point is it $12, $13, $14 lira? At what point, do you really kind of step back and say, wow, this is just not working?
Quickly want to switch to South Africa for a second. So the central bank actually hikes and the rand goes down. What's up with that?
Because basically they're behind the curve. They're not hiking enough. They definitely have problems domestically, power shortages and the like. I mean, their economy is hurting. And so any hike is really going to, it's going to basically take away from their growth trajectory. But, a 25 bip hike to 3.25%, not what the market was really hoping for. And certainly the split decision really has something to do with that. And now dollar rand, highest of the year or lowest of the year in dollar terms, right? And so yeah, we're going to probably need to see more hikes coming through in South Africa for the markets to come to terms with the fact that, hey, this is an inflationary environment and it's not going away anytime soon.
Damien, we're going to watch this very carefully. We're going to continue to see exactly what happens in Turkey, South Africa, and the bigger picture, what happens with the dollar. Damien Sassower of Bloomberg Intelligence, thank you very much indeed. One of my favorite subjects, tea. We need to talk about tea now.
Your favorite subject's the weather, and then it's tea.
Okay, well, the two things go hand in hand. When the weather is bad, you drink tea. When the weather is good, you drink tea. Anyway, we are seeing a changing of the guard in the tea business. Unilever looks like it's going to be exiting. We're talking about brands like Brook Bond here. I know you guys like Lipton over there. I have my question marks around Lipton tea, but...
Yeah, you should. It's gross.
I wouldn't quite go that far, but we can fix this. I'm going to bring you guys some nice tea. But anyway, it looks like CVC is going to step in, 4.5 billion. These food companies are trying to basically move up the value chain. Unilever's no exception. They're able to pass prices on. They're looking for that margin story, so they're going up the value chain, offloading some of their older businesses. Tea's been around for a while. They make some good stuff, some of it not so good, but anyway, on balance, not bad.
Okay, well, bring us the tea. We're waiting. We're waiting.
I'll bring you tea. I'll bring you tea. We've talked about naked wines already. We've got to talk about tea. Okay, what do we got coming up? We're going to talk about steel next. ThyssenKrupp gearing up for its most difficult sale yet, the disposal of its heart and soul steel business. We're going to discuss that with Alan Spence of Jefferies. The numbers today, pretty good. Stocks rising. This is Bloomberg.
When your shares are down 20%, it's going to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution, fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Will we get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point, when the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
So we're wrapping up the trading session here in Europe. We've definitely been fading into the close. In fact, we've been fading for most of the day. But as I keep pointing out, we are still very close to record highs here in Europe. FTSE 100's down by around 0.5% today. Actually, the market's on the continent a little better, down by 0.2%. We are seeing some of the banks. We are seeing some of the oil stock. We are seeing some of the mining stocks coming under pressure. That's weighing on London a little bit as well today. Plus, you've got the FX factor in the mix once again. Let's talk about the session. What kind of a day has it been? Remember, Stock 600, we've been north of 490. We're now trading 487. We're off by around 2 points today, down by around 0.5%. You can see the gradual kind of move lower that has been taking place throughout the day. On okay volume, not great volume. Then we got that dip lower that was largely driven out of the United States. Some suggesting it may have been down to a tweet that we got from Joe Manchin talking about the fact that he's still not convinced about the whole story around Build Back Better, the phase 2 of the Biden spending plan. So that kind of knocked things off a little bit. We're off the floor, but we're still down, as I say, by around 0.5% on the Stock 600. So we're kind of moving away from our highs. Where have we seen the gains? Where have we seen the losses? Real estate is where we've seen the gains, up by around 0.5% today. But as I've already indicated, energy, miners, banks. That's where the heavyweight hits have come through. Plus, you've got some healthcare stocks down as well. These are big heavyweight sectors that are definitely dragging on the market today. Individual names, though, continue to be where I think actually the interest really lies. This increasingly feels like a stock picker's market. It's about bottom up rather than top down. And I think you can certainly see evidence of that clearly today. Hermès, the French luxury stock, up by another 3.25%. This stock has been on a tear. In fact, it's been on so much of a tear that JP Morgan's suggesting today that it could be included in the Euro Stoxx 50. Cmpro, the steel giant, the engineering giant out of Germany. Such a torrid time of things recently, but the numbers are starting to turn around. The review, the sort of change in strategy that was implemented a couple of years back, starting to deliver the goods. We'll talk about that in just a moment. There's still, I think, a significant discount to the breakup value. And then one of my favourite stories of the day, Naked Wines, down by 10% today. This was a darling of the lockdown phase of the pandemic. Everybody was drinking at home. They were buying their wine in bulk. That was the narrative. But now we're starting to see a shift. We're going from drinking at home to drinking in bars, which sounds like a good thing to me. It's either one or the other. But at least people are now maybe getting out and about. Be interesting to see whether that's maintained, Alex, if the COVID story continues to develop here in Europe.
I mean, I have a kid, so I'm still drinking from home. I don't know these people who go out and drink at bars. That's kind of crazy. Let's stay with the spirit of drinks for a second. So Bloomberg spoke to Moet Hennessy, CEO at the New Economy Forum, on the company's price and demand.
We have raised prices, but not because of supply chain issues. We raise every year our prices as to, we are selling limited products.
Now, I, for one, Guy, my palate got a bit more refined during the pandemic, so I am willing to pay up for more stuff and better quality. And I wonder if that's maybe a little bit of the distinction, potentially.
Does that, so you're moving from Prosecco to Champagne? Is that what's happening? Because I'm sure Hennessy would be very happy to hear that. Moet Hennessy would be happy to hear that. No. I'm not sure that's entirely true, though.
No. I'm still the Prosecco person, but I do the mixers now. So, like, I can't have elderflower. It has to be Saint-Germain. That's like, $80 for a bottle this big. And let's be honest, that's not going to last me very long.
Okay. Well, I know the team's getting together this Friday, so I hope that I'm going to get some good stories of Alex Steele's drinking prowess.
My mixing prowess. I'm very good. You'll just see.
Mixing.
You'll see.
Oh, right.
You'll be on Zoom and you'll see.
Okay, we'll find out. Looking forward to it. Okay, let's talk about another stock that I just mentioned, Cmpro. The company had a huge strategy review a while back. We're starting to see some evidence that that's coming to the fore. We're definitely not there yet. We had the hydrogen story earlier on this week. Alan Spence, Jefferies European Metals and Mining Analyst, joining us now to give us his take on this. Let's just talk about the journey that we've been on with Cmpro. This was a company that people were worried wouldn't survive. It has survived. It's starting to make progress. It's starting to see some good evidence that the plan is working. Where do you think we are, Alan, in the journey that Thyssen is on?
Apologies, I'm having technical issues. I can't hear or see.
Well, that probably is a sort of prerequisite for getting television done. So we'll come back. We'll figure it out. It's going really well in this show today. So we'll make sure that we nail that one down. This is a company, and there are so many industrial companies like this that have been through the review that are starting to see some evidence of the benefits of it, Alex. But nevertheless, still trades at a significant discount to the breakup story. We were talking about what was happening with GE only a few days back. There are plenty of big conglomerates that still may be in breakup mode, and Thyssen is definitely one of them.
And I think the point of the IPO is that, and we were talking about this earlier too, is it a bit early for it? I mean, the hydrogen is a super green, no pun intended, industry at this point, and it's going to need a lot of capital behind it. So to spin off now versus when it's more developed was also an interesting choice.
It's going to need a lot of green. Maybe that's what we should be talking about in terms of the investment. Yeah, I think they are going to hold on to a significant chunk of it, but it's the pictures, it's the kind of stuff that we're looking at on the screens right now that I think where the real challenge is going to lie. What do you do with the steel business? What do you do? How do you green that? How do you make green steel? And I think that's where the challenge is really going to lie. They've also got huge automation business. They've got other parts of the business that are dependent on the chip shortage as well. So there's some real challenges coming here. So yes, things are improving. Is there still a long way to go? Well, that certainly seems to be the case right now. European stocks have settled. Let's take a look at what the final numbers ultimately look like here. This is the picture. As we've indicated, it has been a down day for Europe, dipping by around 0.5% for the Stoxx 600. But the banks, the miners, and some of the energy stocks coming off. The steel stocks, certainly, Alex, coming a little lower.
Yeah, all metals really getting hit today. Iron ore as well. Okay, so Sweet Green is now indicated to open between 32 and 34. It priced at 28. It's going to list on the NYSE. This is the first indication of what we're getting. So a little bit of a pop there as the company seeks to raise some money to really expand pretty much everywhere. Yeah, we'll track that for you if we get any more closure on that price, indicated to open 32 to 34. This is Bloomberg.
Reducing global warming continues to be an uphill battle in the fight against climate change. 1.5 degrees Celsius. That's the temperature deemed the safe limit for global warming set by the Paris Agreement in 2015. To limit warming to 1.5 degrees Celsius, CO2 emissions would need to be reduced by 45% by 2030. 191 Paris Agreement signatories committed to setting national targets to reduce CO2. But current national targets project a 16% increase in greenhouse gas emissions by 2030, with global temperatures expected to rise to 2.7 degrees Celsius by the year 2100. Among the most vulnerable to global warming are many of the world's smallest and poorest countries.
Do you think competition is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever. But nevertheless, talk to me about what you think the competitive landscape is going to look like here.
We've seen a bit of departures in this market. And this market has three very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the US, New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one directional traffic from the US to the UK, and now it's open, of course, to UK nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Lagging profitability that the European banks still undoubtedly have is structural weaknesses, which are linked to cost efficiency, to focus on business model, to investments in digitalization.
Let's check in on the Bloomberg First Word News. I'm Ritika Gupta. The leaders of the US, Canada and Mexico will hold their first in-person meeting since President Biden's election. The three will meet at the White House today. Amongst the issues likely to be discussed, energy, borders and auto manufacturing. Trade disputes remain despite the rewrite of the North American Free Trade Agreement. European countries are making a U-turn in their fight against a fourth wave of the pandemic. They're increasingly forcing countries to let employees work from home. In Belgium, the government said that employees need to work from home 4 days a week until mid-December. Germany is poised to agree on mandatory remote working as long as there are no operational issues. And the risk of a trade war between the European Union and the UK may be receding. The bloc is suggesting that its forceful negotiating stance led to a softening in London's position. European Commission's officials told ambassadors that the UK's threat of ditching parts of the agreement related to Northern Ireland may be off the table for now. Still, the UK pushed back against the idea that anything has changed. And Goldman Sachs is ramping up operations in London to target the world's super rich. The firm has hired at least 9 private wealth advisors in the city this year from its rivals. Goldman is boosting its wealth management and consumer banking unit as part of a new strategy. The goal is to make the firm less reliant on trading revenues. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Alex.
All right, thanks so much, Ritika. Just to update you, Sweetgreen now indicated to open 38 to 40. It priced at 28. It was an upsized IPO. Should point out, though, that 71% of its IPO peers fell on day one. So it would be a relative outlier if it still continued with this pop, but looks to indicate on the high end to about $40 a share. All right, let's stay with banks for a second. Bloomberg spoke exclusively to Noel Quinn, HSBC CEO, at the Bloomberg New Economy Forum, and he talked about the world cannot truly decouple ever from China.
The world's economy is recovering. It's recovering well. There are tensions in the supply chain. We shouldn't be too surprised by that. We went into fast reverse. We're now going fast forward. There will be friction in the supply chain for a period of time. But take it as a positive that the world is recovering and economies are rebounding. If I then look at the concerns for the future, I am concerned about inflation, because I think at the same time as the supply chain recovering, there are some new issues. Supply chains are repositioning, partly because of geopolitics, partly because of resilience considerations by governments. Oil prices are going to remain high for quite a while because there's constrained supply, and the investment cost of new sustainable infrastructure is going to have a premium in the near term.
But do you worry about shocks, or do you worry about monetary mishap? What does it mean for a big bank?
I think controlling inflation is going to be a fine art as opposed to a science. And I think we're going to have to make careful judgment calls in the central banks over the next few weeks and months as to how they keep the balance between economic recovery and making sure inflation doesn't get out of control. And I think they'll do that through pulling back on QE and progressive, gradual increases in interest rates. And I think countries will move at different times on that, and that's okay. But it's going to be about balance.
We just heard from the former Treasury Secretary, Hank Paulson, also saying it's almost impossible for the U.S. and China to decouple. Yeah. Like, how do you read the Chinese economy right now? And has HSBC rebuilt ties with them?
Well, listen, the Chinese economy has been big as a manufacturer of the world for many decades. It's also huge as a consumption market for the future. And I don't think the world can decouple from one of the biggest manufacturing nations of the world and what will be one of the biggest consumption markets in the world. So I really hope it doesn't decouple. Will there be differences? Differences in views on technology, differences in views on politics, yes. But I think it's important that there is a level of connectivity between the world and Asia and between the US and China.
In general, for your wealth business, do you see, how many bumps along the road do you see? Do you see it like a clean trajectory upwards in terms of how you build and grow?
For us, it's continuous investment. We already start with a very strong platform in Hong Kong. We're one of the biggest wealth managers in Hong Kong. We have on our balance sheet over 1.6 trillion of assets under management, wealth assets under management for our clients, whether it's in private banking, asset management, it's in our retail operations. Now, for me, it's about a continuous investment program. I guided the market that we were going to spend $6 billion over the next 3 to 5 years. $3.5 billion of that is building out our wealth business within Asia, and we're going to do that across all of Asia. I think there's wealth opportunities in Hong Kong still. China, definitely. Singapore, absolutely. And also India. Now, that will be a combination of organic investment, recruiting people. And as you've seen in Singapore, we bought a business, or are in the process of buying a business from AXA, bring that business together with our insurance business, and we have a much more powerful wealth proposition here in Singapore. And I'm looking at 3 or 4 other opportunities like that as bolt-on acquisitions over the next few months across Asia.
Noel, have you spoken to Hong Kong authorities so that you don't have to do a quarantine next time you come back, as they rolled out the red carpet for...
I'm not planning a trip at the moment. I think it's important for Hong Kong to establish what they need to establish with China on reopening the Hong Kong-China border. I don't want to do anything that may jeopardize that. I would love to get back to Hong Kong as soon as I can, and when the authorities feel it's right for me to go back, I will do.
Yep, the authorities are definitely in charge of that process in Asia. It's interesting how it's developing. HSBC Group CEO Noel Quinn, speaking exclusively, of course, to Bloomberg's Francine Lacroix from the Bloomberg New Economy Forum. Alex, the story in China feels like a very different one at the moment. Noel Quinn, I always feel like he chooses his words incredibly carefully, trying to manage this process of effectively being a Western bank operating in China, mainland China, in Hong Kong. Incredibly difficult. He hopes he doesn't see decoupling. I wonder if we were to see it, where that would leave HSBC.
Yeah, and many other companies as well that's trying to do something relatively similar. I also find that we have not spent a lot of time talking about China and what's happening there with COVID and the zero tolerance policy. Why don't we think that's going to have implications for ports and for goods again? And that's when we talk about inflation and supply chain issues. If China continues down this route of the zero tolerance, I don't know how the supply chain issue gets resolved quickly, like some are predicting.
Well, it does get resolved, but the operative word there in your sentence was quickly. And this feels like this is going to last for a very long time. You listen to the car guys, they're certainly talking about it lasting for a long time. The port congestion looks like it's going to be lasting for a while. The only thing I would say is that maybe post the holidays, some of this eases. Maybe this kind of huge push, this consumption push into the holidays starts to fade a little bit, and maybe that allows things to balance out a little bit more.
Well, yes, true. And we are seeing freight rates come over a little bit. Some port time, congestion time is easing a little bit as well. Hey, Guy, there's a headline just crossing from the Hill, and it's about Powell and Manchin. So Senator Manchin apparently says looking very favorably at Powell after a chat. Tom Porcelli of RBC had a really interesting note out yesterday, and he was saying how he thinks that Lyle Brainerd is President Biden's pick, but that having them both come to the White House was sort of how they were going to introduce that idea to the market and politicians, see how it played, and then now they're kind of taking the temperature of what a Lyle Brainerd versus a Jay Powell would be. But that Brainerd's the preferred pick, but that Powell might be the one to take it. Manchin says he's looking favorably at Powell now after the chat.
Well, that's interesting, considering where he lies on the political spectrum. Obviously, Powell, a registered Republican, that's going to cause issues maybe at the other end of the party were we to go down that route. There's also this kind of whole argument floating around that Brainerd potentially could be a Treasury Secretary candidate. She's obviously got a lot of pedigree at Treasury, and she knows a lot about it, so that would be a fit as well. So maybe there are other kind of elements in terms of the chessboard that need to be thought about here. But we await the news from the president. We're all agog with anticipation. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We're off the lows. Equities starting to gain a little bit of traction on the upside. Let's figure out what's going on. Kriti Gupta has the details.
Well, Guy, it's all about those retail earnings, and it's actually starting to spill over into even some of the companies that haven't even reported. Gap, for example, leading the charge up 6%. This coming after foot traffic doubled from the same time last year. Nordstrom as well, announcing a partnership with a sports franchise company called Fanatics. Petco, the obvious, the clear, really loser right now in this kind of broader theme of retail's beating their earnings, missing their third quarter margin, as well as their fourth quarter guidance forecast. You have Amazon, MasterCard, Visa. I want to follow up on the story from yesterday where Amazon's talking about co-branding with MasterCard instead of Visa, really talking about the power some of these retailers are having against credit card companies. Let's wrap it up here with Deere, which is a really big story, of course, finally hitting that deal with its union workers. And you can see coming up, and finally, its biggest day gain since November 1st, which was the last time you thought that they were hitting a deal. This time, let's see if the momentum sustains.
All right, Kriti, thanks so much. Love the update. Bloomberg's Kriti Gupta joining us there. Well, West Virginia Senator Joe Manchin now saying he hasn't made up his mind on the Fed chair, Jay Powell or Lyle Brainerd, but that he did look favorably at Powell after a chat. This comes from the Hill report. Anne-Marie Horde-Durham, Bloomberg Washington correspondent, is at the White House. Hey, Anne-Marie, is this normal, like Manchin talking to Powell, etc.?
Well, it is normal that the Fed chair or a governor would go over to Congress and meet with senators and lawmakers. What's so interesting about this Manchin-Powell meeting is that on August 5th, Senator Manchin sent a letter to Chair Powell saying that we shouldn't overprescribe the patient being the U.S. economy coming out of a once-in-a-lifetime pandemic that needed incredible help of monetary support. And now he is saying, and he has in the past said that he thought inflation was going to be a problem. He wanted to make sure the Fed was pulling back on treasuries, and now he's saying he looks favorably on Powell. So he's really done a 180 when it comes to how he thinks about Fed Chair Jay Powell, and potentially this could be a key vote for the president as he's making his decision on who he's going to put in the top spot.
Yep, we're looking for news. We wait it with a great deal of anticipation. Anne-Marie, we've got a NAFTA chat coming up a little bit later. I know we're not allowed to call that anymore. What's going to come out of it?
The old NAFTA. Well, we're not going to get a joint press conference. So it does seem like the tone is going to be a little bit more friendly than the prior administration. Remember, the last time these three countries met was in 2016 when President Obama was in the when President Trump was in the White House, in Ottawa. Now, what we do know is going to be top of the agenda is going to be energy and car manufacturing. Now, already President Trudeau was at Congress, and he said that what he thinks in the president's Build Back Better agenda when it comes to car manufacturing and EV tax credits is unfair. And he says that goes against their current trade agreement. So that'll be one thing, as well as, of course, energy. President Biden has killed Keystone Pipeline. Trudeau had backed that. And now there's a lot of talk on what's going to come next when it comes to the Line 5 pipeline that goes to Michigan. So energy and cars will be top of the agenda for what everyone calls the Three Amigos.
Three Amigos. Yeah, we had that propane chat a little bit earlier on. Anne-Marie, yeah.
Okay, first of all, the Three Amigos movie is one of the best movies of all time. Let's just be very clear on that. Steve Martin, Martin Short, Chevy Chase. Just let's get that out there. If you haven't seen it,
can I just say that I want to be Chevy Chase? I know that I'm going to have to fight Matt Miller to be Chevy Chase, but nevertheless, if I was going to be one of those characters, that's who I would want to be.
If you haven't seen it,
Anne-Marie, I'll let Anne-Marie pick later. Online, offline, who she's going to be. Anne-Marie Horde-Durham, thank you very much indeed.
She hasn't seen it, please. You can look at her face. She has not seen it.
Yeah, she has no idea, does she?
No.
Age is not always a blessing.
No.
Anyway, let's move on. I know, I'm sorry. Inevitable. Let's talk about the next 24 hours. What's coming up? Bloomberg New Economy Forum continues. We're going to continue to monitor some of the great conversations that are coming out of that. After the bell, this is what I'm looking forward to, Alex. Matt, going to really be fascinated to hear what's the latest out of the chip sector.
Yep. And tomorrow, UK retail sales. They were awesome here. Let's see what happens over in your neck of the woods. Plus, Fed heads Richard Clare and Mary Daly, they're all going to speak at the Asia Economic Policy Conference. We'll look forward to that as well. Plus, Foot Locker. They're there's still a Foot Locker. That's going to report here in the U.S. That wraps it up for me and Guy here in New York and in London. Coming up, New York Congressman Gregory Meeks will be joining Balance of Power on Bloomberg Television and Radio. And Guy and I are headed to radio as well, DAB Digital Radio, the cable. This is Bloomberg.
目前眼前状对我们军方来讲的话，我只跟委员报告，是我从军以来40多年以来看到真的是最严峻的时候。要翻台的话，他目前有这能力的，都有的，但要看怎么一个结局。所以我们不做任何挑衅但如果把他激怒了，就跟我们人一样，你把我激怒了，我手上能力我也会发挥出来。所以2025是我们研判要全面我们这样研判的。
Well, China has, I've spoken with Xi about Taiwan. We agree we will abide by the Taiwan agreement. That's where we are. And we made it clear that I don't think he should be doing anything other than abiding by the agreement.
Today it's a lot more about things like services. So people come because they want to find the local plumber, maybe a contractor, maybe it's a babysitter, and they tend to convert very fast. So we do well for advertisers, top of the funnel, brand, and then bottom of the funnel, direct response.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
From the world of politics to the world of business, this is Balance of Power with David Weston.
From Bloomberg's Washington Bureau, I'm Joe Matthew along with Emily Wilkins, and we're in for David Weston today on Balance of Power. Thanks for joining us. And Emily, it's great to see you on what is an incredibly important week here in Washington as the president's economic agenda appears to be moving forward on Capitol Hill. The debt ceiling is looming yet again, and we've got foreign policy landing on the president's doorstep today.
It is a lot going on today, and we just heard the latest from House Speaker Nancy Pelosi saying that it could be possible that the House will take the vote today to move forward that social welfare and tax plan that's so critical for President Biden.
Pretty big deal. We could get a vote tonight, maybe tomorrow, if not tonight, but it looks like this is going to be done by the time we walk into this weekend here. Not a done deal for Joe Biden, but another turn of the screw on his economic plans.
It's one step forward, and hey, at least it looks like lawmakers aren't going to have to stick around for the weekend like we thought they would earlier this week.
Yeah, that's right. Let's go to the White House right now with Bloomberg Washington correspondent Anne-Marie Hordern, who is reporting on a number of issues today. Anne-Marie, it's great to see you, including, as I mentioned, foreign policy, and two important leaders are going to be sitting down with President Biden today.
Yeah, certainly. This is the first meeting of what everyone in the media and international community calls the three amigos, the heads of state of the United States, Mexico, and Canada. And we haven't seen a meeting of these three individuals since 2016. And really front and center is going to be cars, automobile manufacturing, and energy. And it's so interesting off the heels of the president yesterday riding that EV Hummer in GM. He wants Americans to start buying EVs. And Trudeau says, hold on a second, that's a little bit of a problem. If you're going to give tax credits to American-made electric vehicles, that goes against what we have all decided and prior trade agreements. The other big issue is, of course, energy. This is a president who wants to be a climate president. He killed Keystone Pipeline, something Trudeau had backed. And now there's a lot of concern and question marks about how they're going to lean forward with the Line 5 pipeline that goes to Michigan. And there's no joint press conference. So friendly, but maybe not the biggest of the family reunions.
Yeah, Anne-Marie, we talk about the social welfare and tax plan like it's something that's really in Congress, which it is. But really, this is President Biden's signature social policy plan. And I'm wondering, we did see President Biden come to the U.S. House several times, talk with lawmakers there, really help get it to where it is. When that bill goes over to the Senate, are we going to have to see President Biden do similar things with senators to make sure that bill actually gets to his desk?
Potentially, we could see him making that trip on Pennsylvania Avenue to the other side. Today, though, Emily, as you say, with Speaker Pelosi saying that we're going to get the CBO score at 5 p.m., he's going to end the week likely with a win, right? The moderates are not pushing back on the CBO score and the fact that already the indication is it's not going to match the White House analysis, especially when you look at the money pumping into the IRS on what you're going to get out of it. They analyze this very differently. When it comes to the Senate, this is where they're going to have a number of issues. Paid family leave, what's going on with SALT. There are going to be a number of issues that potentially the president is going to have to start whining and dining a lot more senators in the weeks ahead.
Many thanks to Anne-Marie Hordern, Washington correspondent with us at the White House. I started my day earlier on Capitol Hill in a conversation with Senator Rob Portman, of course, Republican from Ohio, who was one of the key architects of the infrastructure bill that the president signed into law earlier this week. We talked about the next stage here, among other issues, the reconciliation plan that, as Emily mentioned, could get a vote as soon as tonight, a plan that Republicans say will cause inflation to grow even worse, and one that Democrats say will, in fact, lower prices on everything from drugs to housing to other issues. And that's where I started asking Senator Portman if the White House and Democrats were wrong.
They're wrong about the lowering costs. In fact, it'll increase costs for everything because it'll add to the inflationary pressure we already have in our economy. If you look at what happened in March when the $1.9 trillion bill was passed, it added more demand to the marketplace, more stimulus spending, which put a lot of pressure on inflation. By the way, that was predicted by a lot of people, including a lot of smart economists on both sides of the aisle, Larry Summers being one, former Democratic Treasury Secretary for President Obama. A lot of us raised that concern, and we're seeing it again. So with the high level of stimulus spending in this second bill, this is the so-called Build Back Better legislation, yes, or also called the Reckless Tax and Spend bill, also called the Reconciliation bill. There won't be a single Republican supporting it. It'll be a bipartisan, it'll be a partisan bill that's jammed through the process. And it's going to add to the inflationary pressure we already have. So it's kind of scary. We had 0.9% inflation increase last month. If you annualize that, that's 11.4% or so. Double-digit inflation is what we're looking at right now. We haven't had that for 40 years. So it's a serious concern. Second, of course, it has big tax increases that'll hurt our economy right now. And then finally, of course, it has significant spending that's not offset. We don't know how much yet. It's somewhere between, I think, $270 billion and $3.5 trillion, depending on how you look at it. But that's just adding to our debt and deficit in ways that does not add to economic growth, and therefore, more revenue coming in through growth, which all of this is in contrast to the infrastructure bill, which is long-term spending. Much of it won't be spent for the next 3 or 4 or 10 years even. and that goes into hard capital assets, adding to the supply side of the economy, which should be counterinflationary.
I know you've been involved in this debate, like I said, since the outset, so you've had a good sense of what the president's priorities are. When you hear about specific issues like universal pre-K, expanded child care, for instance, the CBO says they came in under cost. The price tag seems to match what lawmakers were looking for here. Do you support any of those as individual investments?
Well, I mean, we don't know what they are, first of all, so we have to see the details. But look, we have a situation now where our debt is approaching $30 trillion, unprecedented, not just in terms of the nominal amount, which of course is the most ever, but as a percent of our economy. We have raging inflation. If you ask folks what their number one concern is back in Ohio, they'll tell you it's the price of gas. I filled up my pickup last week and it was $100. I mean, people just are blown away by the inflation numbers, cost of groceries and so on. So that's what we ought to be focusing on right now. And to add new social programs at this time, to me, is a mistake. By the way, we just did it again in March, $1.9 trillion of spending. To put that into context, we have about a $4 trillion budget. We've spent more in this first 7-8 months of the Biden administration than we normally spend in an entire year's budget. So
will this bill be dismantled in the Senate after the House sends it over, assuming that passes the House?
We'll see. It's a 50-50 Senate, and it's very ambitious to get something like this through a 50-50 Senate. It's equally divided. Not a single Republican will support it because of the tax increases, because of the high spending, because of its impact on inflation. So, I mean, it's not up to me. It's going to be up to Democrats like Joe Manchin and Kyrsten Sinema. They're both, fiercely independent senators, and they want to do what's right for their constituents in the country. So We'll see how it ends up.
I'd like to ask you about the debt ceiling that's creeping up on us once again. Will you vote with Democrats to lift or suspend the debt ceiling to avoid a U.S. default?
Well, we cannot default, and Democrats control the White House and the House and effectively the Senate, because although it's a 50-50 Senate, because of a tie vote by the Vice President, they have control of the Senate, so they have the ability to do it on their own.
And they should?
They should, and they know that. And again, if you add the $1.9 trillion, which no Republicans supported, to the next bill, which may be somewhere between $2 and $6 trillion, depending on how you look at it, that's the main reason you need to raise the debt ceiling. So they need to make space for that, and I would think they'd be happy to do that.
Does it bother you that the debt ceiling's become a partisan issue? This is something that you've gone through many times in your career.
Well, it's always a partisan issue, and it's a tough one. And I was, one of the 11 Republicans who voted to stop debate and allow a vote on it several weeks ago, because we cannot default and we shouldn't default. Everybody knows that. But, I think it's important that Democrats take responsibility here. They have the ability to do it. They're in control, and it's to make room for their spending that we need to raise the debt limit as high as we do. So I think that's the better way forward.
We're on watch for an announcement on the Fed. Senator, as you well know, the president is expected the next couple of days to announce his nomination, at least for Fed chair. It appears to be either Jay Powell or Lael Brainerd. Would you vote to confirm either of them?
Well, I'm a Jay Powell supporter. I am concerned about what the Fed has done in terms of particularly its balance sheet, expanding its balance sheet at a time of this high inflation. So I think of the two of them, Jay Powell is better equipped to be able to deal with that issue. I also think he has more trust and respect among the markets, which is going to be important as we get into these tough times where we're looking at inflation, looking at what to do on interest rates and so on. So my hope is that the president will nominate Jay Powell and that we can find the votes here to confirm him.
Can you imagine a world in which you'd vote against the Fed nominee if it's not Jay Powell?
Well, we'll see. I mean, you say there's only two choices.
That's what they're telling us.
Yeah, life's about choices, right? So
that's right.
My hope is that it'll be Jay Powell.
My interview with Senator Rob Portman, Republican of Ohio, as the gears turn on this reconciliation plan. Obviously, he's not a supporter here, Emily, but interesting to hear him talk about the debt ceiling. It doesn't appear that he's going anywhere near that either.
No, and I mean, this is something that we knew from the point that the Senate did raise it the last time. Mitch McConnell was very clear that that was a one-time thing. It was temporary. It was to give Democrats the time they needed to raise it, because remember, this isn't something Democrats can just snap their fingers lawmakers and do. They have to do this. They might need to do this via reconciliation.
Sure.
That's going to take a couple weeks.
Reminding everyone that all of this actually could have been handled last summer, but here we are again. Coming up, Congressman Gregory Meeks of New York, who chairs the House Foreign Affairs Committee, will join us. We'll ask him about the debt ceiling, among other issues. This is Balance of Power on Bloomberg TV and radio.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
How does an extra $1 trillion in spending not increase inflation?
By increasing the productive capacity of this country. And that's a very important thing that we frankly have not successfully done across most of my lifetime. You know, I've been waiting for this legislation for months since I became Transportation Secretary, but various presidents have been hoping to reach this day for decades, and it hasn't happened for all kinds of reasons. The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future. Let me also point out to the fact that Part 2 of the President's agenda, what I like to call the big deal. But Part 2 of that, the Build Back Better Act, has even more that will help beat back inflation by lowering some of the costs that Americans feel most acutely, the cost of childcare, the cost of healthcare, the cost of housing, the cost of prescription drugs, bringing those down while also making sure that we ease some of those labor market issues we have by making it easier for working parents to afford to go back to work.
From New York City,
in London, in Sydney,
in San Francisco,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew, along with Emily Wilkins, in for David Weston today. Emily, fascinating conversation with Rob Portman. We're going to speak in a moment with Congressman Gregory Meeks, as promised, but interesting for folks who are just joining us. We actually have breaking news today from Speaker Pelosi. There could be actual votes. This is to everyone who's been living with us through Groundhog Day for months. Actual votes on reconciliation tonight.
I feel like we have to temper that just a little bit.
You're probably
yes,
smart to.
Yes, the House, there's a chance that they could vote on this social welfare and tax plan tonight, but it's not even close to being done. From there, it has to go to the Senate. The Senate has to toy with it. It's going to send it back to the House. This could easily stretch on until the end of the year.
And we've heard before that there are going to be votes tonight, right up until midnight, and there were no votes. So here we are again, Emily.
Yes, we're all buckled in, ready to see what happens next. Well, joining us now is Congressman Gregory Meeks of New York. He is the chairman of the Foreign Affairs Committee. Chairman, thank you so much for taking the time to join us today. So, are we getting a vote today, and what are your plans for the weekend?
We're all going to get a vote, whether it's today or tomorrow. We're waiting on the advisory coming from the CBO, so as soon as we get that, there'll be a vote. And my plans for the weekend actually is going to be quite ambitious because I have to. Actually, I'm flying to Pakistan to deal with some international issues as it relates to Afghanistan and some other things that are important to the United States and our relationships.
So no plans for weekend votes then?
That's some confidence.
We're going to get it done before the weekend.
Congressman, why spend so much time right now? I hate to ask the dumb question, but why spend so much time hashing out details, butting heads together on pay-fors, getting involved in the nitty-gritty when we know that this bill could come back in very different form once it goes through the Senate?
Look, we've got a job to do on the House side. And so that's what you're going to see. We're going to pass a bill that we know builds back America better. and it's the president's agenda. He talked about it when he ran. It's what the American people want. And so we're going to do just that. And as happens with all bills, it then goes over to the Senate. And if the Senate wants to make some changes, then we will have a conference and work out the differences so that we can get something on the president's desk. That's just the nature of the process here in Washington, D.C.
Understood. Talk to us about inflation. Americans are hearing two very different stories from Democrats and from Republicans, both talking about the very same thing. This reconciliation plan, according to Joe Biden, will lower costs on everything from drugs to child care to housing. We just talked about it with Senator Rob Portman, who says no, like most Republicans, that is not true. It will, in fact, make inflation worse, Congressman. Who's right?
Well, clearly the Republicans are not right. If we had not done a number of the things that we have done already, our economy would be in worse shape. This, number one, is a pandemic economy, and it's not only affecting the United States of America, it's affecting us around the world. As you said, I'm the chair of the Foreign Affairs Committee. I recently was over in Europe, and the inflation rate there is probably worse, and their economy is worse than what we're going through right now, because they were not able to do the things that we've done, like the American Rescue Plan, and now like Build Back Better and the 1.2 bipartisan bill, infrastructure bill, because we put those in place. But understand where we are. It is, as I said, a pandemic economy where individuals did not go to work, could not go to work for safety. They stayed home. But what happened was they saved money and they were buying things. But the people at the ports and the global supply chain came to a halt because all over the world, nobody was working. So it caused this huge backlog. And now supply has to meet the demand. And that's
Chairman Meeks, I also want to talk quickly about another important bill that I know that you are very involved in. This one deals with the U.S.'s ability to compete with China. It includes $52 billion for semiconductors. The Senate has passed this bill. I know that your committee is one that is working on it. Last night, we got some news from House Speaker Nancy Pelosi, Senate Leader Chuck Schumer, saying that there was going to be a conference now on the House versions and the Senate versions of the bill. I just wanted to get your thoughts on that process going forward and what role you are going to be playing in this conference.
Well, I'm going to play a big role, and I thank the Speaker for moving forward. We're going to pass the EAGLE Act, Ensuring American Diplomacy and Engagement Act, that will have a number of items in there that's not in the Senate's bill that we believe is tremendously important. And so when we go to conference, again, as we talked about before, to work out the differences between the two bills, I will play a very prominent role at the table negotiating for what I know is important to include in that bill to make sure that we're competing with China. For example, climate. You know, I just came back from Glasgow. And we need to make sure that we put and have the same rules in that regards to save this planet. Also to try to make sure that a number of the undeveloped countries get the resources that they need so that some of these island nations could be gone. So I'm going to play a big and an important role to make sure that I'm voicing the opinions of the House and the people of the United States. These are issues that are very important to them.
And Chairman, what's the timeline here? When does the House and the Senate, when are they going to start meeting? When do you guys need to wrap something up and get something on President Biden's desk by?
Well, I think that the conversations are starting now. I hope that we pass our bill sometime after the Thanksgiving break. And then conference can start, and we want to get something done sooner rather than later. I would hope that we can get something done either before the end of the year or or early in the next year. But the process is starting to move right now.
Congressman, when will Democrats handle the debt ceiling? That's also coming up. Or will you drive this up to the cliff again in hopes that Republicans will join you?
Well, I know that on the House, we're going to get it done here. But I just think it's unfortunate, and I heard what Senator Portman had said earlier. Why would the Republicans want to threaten this good standing, the credit of the United States of America? This has always been a bipartisan bill. I voted for it when the Republicans had control of the House, the Senate, and the presidency, because I understand that some things are bigger than politics. So why play politics with the debt and the credit of the United States of America, which could cause, just the threat of it, causes us to have insecurity in our economy all over the world. So
but if you take them at their word, Congressman, why not just take care of it now? Democrats could have done this over the summer. We would be talking about the Biden economic agenda instead of the debt ceiling again.
Well, because we, want to do, and we should be showing the American people, as we did with the infrastructure bill, that we can do things in a bipartisan way. And so we've been trying to work together. But when you have, if we're gonna have to now do it ourselves, you generally have the filibuster that the Republicans generally put up. So we'll do what we have to do. But I just think it's bad for the American people. It's bad for the global economy and our economy when people don't have the confidence that we can do things in a bipartisan way. And the Republicans clearly showing that they know, Department said we can't default. Well, if we can't default, you understand that, then let's vote to make sure that we don't default. Fact of the matter is, most of the debt that we're talking about is Trump's debt from the tax cuts and the things that they did during the Trump administration. So the Republicans very well should be a part of this bill to say that we're not going to default.
Chairman, we've already talked about the social welfare plan. We've talked about the debt limit. One thing that we haven't talked about is government funding. That's going to run out December 3rd. What is the timeline right now to make sure the government's funded into next year?
Well, there's an active conversation and discussions that's taking place right now. Unfortunately, again, the process always, I've been here for over 20 years. And oftentimes it always goes down to the last 2 to 3 days, and then we get something done. It's just like baking a cake. So I know it would make it or seem easier if we did it much earlier, but that's just the way it has worked for the last 20 years. But we do get the job done. Whether it's the budget or a continuing resolution, if we have to do that, we got to look at what's happening with the overall economy and things of that nature. But we're going to do something before the deadline.
Sounds like the cake is in the oven soon here. Thanks to Congressman Gregory Meeks, chairman of the House Foreign Affairs Committee. Coming up on Balance of Power, more on the midterm elections and whether Democrats will keep the House. This is Balance of Power on Bloomberg TV and radio.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Balance of Power on Bloomberg TV and radio. I'm Joe Matthew in Washington, along with Emily Wilkins. We're in for David Weston. Fascinating, Emily, to hear from both a Democrat and a Republican there on the debt ceiling. Gregory Meeks, Rob Portman. It sounds to me like we're going to walk up on this cliff one more time.
I mean, that's the way it really seems. And it's surprising that we are doing this dance yet again, knowing how it went last time, getting so close to the point that we did, everyone kind of reaching that panic mode. And now here, as you pointed out, Democrats have the chance to make this a non-issue. They can just do it. I understand why they want to do it in a bipartisan manner, but Mitch McConnell was really, really clear. He might have gotten 10 votes to do it last time. I don't think there's going to be a way for him to get 10 votes to do it this time.
Not going to touch it. So December 15, right? Janet Yellen says we run out of money. We have to have this figured out by then. If Democrats put this in reconciliation, does that allow enough time?
It could potentially, but at this point, the discussion isn't putting it in this reconciliation bill. It would be a new reconciliation bill. That would take a couple weeks.
Well, a couple of weeks is just about exactly what we have. We'll see about that. Coming up, our political panel, Jeannie Shanzano and Doug High. This is Balance of Power on Bloomberg TV and radio.
We represent 5,500 forecourts, which is roughly 65% of all service stations in the UK. Of the ones that we were able to survey yesterday, roughly 1,500, 27% said they didn't have any fuel, 21% said that they had one fuel type or another, so that's either petrol or diesel, and 52% said that they were fully stocked. Northern Ireland, Wales, Scotland seem to be okay, but we still are seeing, like your reporters are seeing, some stock-outs at sites around London and the South East, I'm afraid.
When do you feel confident that this will 100% be in the rearview mirror?
Well, what we're hoping is those people that got fuel over the last few days obviously don't need it again for another few days, and that will give us a chance to actually start to restock the network. So we're trying to get it back to a reasonable level today and tomorrow, and then over the coming weeks, because it will take a number of weeks, to get it back to the sort of more normal running levels.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says I look like I'm 101.
I know, I noticed that.
Do you think I need a lift? Is it time that
What did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I have no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
The mobile app is doing exceptionally well. So let's talk about the paid users for a moment. Our strategy has been to create value-added experiences that our users want to pay for, that adds value to their experience.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew, along with Emily Wilkins. For Bloomberg First Word News now, we go to Mark Crumpton in New York.
Joe, thank you very much. At the White House today, the leaders of the United States, Canada, and Mexico are holding their first in-person meeting since President Biden's election. Among the issues to be discussed, energy, borders, and auto manufacturing. Trade disputes remain despite the rewrite of NAFTA, the North American Free Trade Agreement. Bill Gates says that COVID deaths and infection rates may dip below seasonal flu levels by the middle of next year.
Well, the vaccines are very good news, and the supply constraints will
more than 30 teenage players and their families, about 130 people in all, flew on the chartered plane to begin their new lives in the UK. The Taliban has banned women from playing sports in Afghanistan. Hundreds of female athletes have left the country since the Taliban returned to power in August. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Joe, back to you in Washington.
Mark, thank you. Joining us now, our political panel on Balance of Power. Bloomberg Politics contributor Jeannie Shanzano is with us, along with Republican strategist Doug Heye. Jeannie, I want to start with you as we balance a number of topics here, beginning with the social spending agenda, the reconciliation bill that we've all been talking about for months. Nancy Pelosi says it could actually get a vote tonight. Does she have the votes to pass it?
I think she does. The White House, Democratic leadership in the House, they're feeling very optimistic about this. And the moderates have shown that they seem to be indicating that they will go along. And of course, this isn't the last time the House will see this bill. So I do think they have the votes. I would bet it may not be tonight. I'll probably be wrong, Joe. I think it'll probably be tomorrow, but they do want to get home for Thanksgiving.
Somebody sounds burned, Emily. They've been here before.
Look, at least we're not going to have another weekend vote. I think that's what everyone was really hoping to avoid here. But, Doug, I want to throw this forward. I mean, the House votes tonight, the House votes tomorrow. The bottom line is that this is going to go to the Senate. What is exactly going to happen there with this piece of legislation? What is the expectation for when it reaches that chamber?
Well, we don't know yet. Obviously, we have to see when the House will vote. One of the struggles they had with their previous vote was we were promised the vote will happen tonight, and it didn't. The vote will happen tomorrow night, and it didn't. So we'll have to see if they go through that process again. Once it gets to the Senate, one thing's clear. They can't depend on Republican votes on this bill like they did on the previous one. And it sets up a case where, you know, shocking in Washington, D.C., a lot of people will be looking at Joe Manchin and Kyrsten Sinema.
And we also want to talk a little bit about just Democrats overall. I mean, part of the reason that is so important for them to pass this policy legislation is because this is what their plan is to run on in 2022 midterms. But the midterms are not looking good for Democrats right now. I mean, you have historical precedent. The party that's in the White House usually does worse in the midterms. Plus, you have states that are redrawing congressional lines right now and redistricting. That's also not doing very well for Democrats. I mean, Jeannie, what sort of a realistic expectation do we have here for the midterms? Is there any way that Democrats maintain control of the House next year?
Their best hope, to your point, Emily, is they get this bill passed and they go out and they are able to sell what they've done. I mean, I can add another sort of on the negative list that you were giving, which is the inflation numbers, which whether it's transitory or not, is going to hurt the Democrats. But what they can do is pass this bill and do what the president was doing yesterday in your home state, selling the bill, talking about the future of the automotive industry in the United States, making sure that they're talking about the positive things they are doing, getting out of talking about the costs of these bills and the infighting in Washington, D.C. And of course, I think making sure their messages against what are going to be the Republican onslaughts about critical race theory and other things like that, that they are able to address those. And that is going to be critical for these moderate districts where if they're going to have any hope of holding the House, they're going to have to win those districts.
Yeah. Doug Heye, Kevin McCarthy, the minority leader in the House, has been counting his chickens lately. He says he can pull more than 63 seats the way things are in the midterm elections. Is he getting ahead of himself?
Mm-hmm. Well, on election night, with the Virginia governor's race being such a big win for Republicans. I heard more measuring of curtains than I did corking of champagne bottles. But, what I would say is go back to, Kevin used the number 63 on purpose. That was 2010 and what Republicans picked up then. I was at the Republican National,
or better for him.
Sure. And I was at the Republican National Committee in 2010. Our magic number for Obama was 46. We felt that if Obama was at or below 46% approval, we'd take back the House. Joe Biden's numbers are well below that right now. And if his numbers are today, they may not be, but if they are today, or excuse me, in a year from now where they are today, it's going to be a very, very big problem for Democrats.
Well, so, Jeannie, as a Democrat, will you be judged by the outcome versus expectations? Anything less than 63 is a psychological win for Joe Biden?
I think I'm old-fashioned. I think a win is a win. I think they lose seats. They're going to have to own that. Emily is right. It's historical. It's history. They probably will if it's a guide. But they do have a shot here. And I think more important from my perspective, they need to focus on doing what they campaigned on and doing what they know is right for the American public. The Build Back Better bill has that, including the all-important issue of climate change. People care about these issues. It's a popular bill. They should pass it and get out and talk about what they've done.
Doug, hi. I'm wondering what Republicans need to do here. I don't want to make it sound like victory is guaranteed for them. What are the do's and don'ts if you're a Republican running in 2022?
Sure. I would say their focus is going to remain on doing what they can to block the Biden agenda, to not give him those things to run on where they can, and also to highlight those things that are critically unpopular. If you look at issue after issue, the environment is favoring Republicans in a way that it generally doesn't. And one of the big examples of that, and there's very little that a president can do, is on the issue of inflation. Obviously, we've been talking about it as to how it's affecting families, how it's going to affect them over the holidays, as we're seeing, turkey prices rising, beef prices rising, and so forth. And I'd give one piece of advice to Democrats. Stop using the word transitory. That is a Washington, D.C., Wall Street word. If you live in Winston-Salem, North Carolina, my hometown, and you're going to the grocery store, you're filling up your gas tank, you're not using a word like transitory.
I mean, Doug, are there any rules as far as what Republicans need to do in regards to former President Trump? He's obviously still a political force in the party.
Yeah, look, this is the real rock and hard place that Republicans find themselves in. Glenn Youngkin did a great job of holding on to that Trump base without hugging Donald Trump. Obviously, Trump is going to make a lot of news over the next year, and it's one of the real fears that Republicans have is that Donald Trump could not only tank House Republicans' hopes, but given what candidate he supports in a House race or certainly in the Senate races where he's made endorsements, that having to use a polite term, lack of quality vetted candidates may sink Republicans in a few states.
We only have a minute left. I'd love to hear from both of you on the Fed, as we do expect an announcement from President Biden on his nominee for chair, at least in the next couple of days here, we understand. Jeannie, all signs seem to be pointing to Jay Powell. And I'll ask you both, is that the smart choice politically for Joe Biden as he tries to straddle both sides of the aisle here? Jeannie?
I think it is. It's one of the few things he can do, to Doug's point, to deal with the issue of inflation. And I think Powell is the betting person right now. You have to put your bets on.
What do you think on that, Doug?
Yeah, I'd agree. And in inflation is, I really think, the number one issue that this administration is dealing with right now, because it affects everything, and it's the supply chain as well. If they can get inflation under control, it's the best thing they can do politically for next year.
Well, thank you so much to Doug High and Jeannie Shanzano, both of our contributors today, for weighing in on all wide range of issues. Coming up, former U.S. Ambassador to Canada, Bruce Heyman, talks to us as President Biden meets with Canada's Prime Minister today at the White House. This is Balance of Power on Bloomberg TV and radio.
I was just finishing what you were saying, Tom. November 3rd is when the decision is. Just in case people got confused, I will. Just one more story, Tom.
Yeah, thank God for that.
We're at 137 right now.
Wrap it
It's
up.
a weakness. Is this where they play the music and the Academy Awards? Is this it? Do I thank my mum again? Are you in charge of this?
Is she the only one?
Kill the music. You know who's in charge here.
There's a pretty good chance that you use products made by Meta every single day. If you've never heard of Meta, that's because it's the new name for Facebook Inc., the parent company of Facebook, Instagram, and WhatsApp. All right, perfect. In a spiffy presentation on Thursday, Mark Zuckerberg showed off his vision for what he's dubbing the metaverse. That's a sort of mix of augmented and virtual reality worlds which will let the user explore virtual ecosystems. Much of what he showed isn't yet available. It's really his vision. In that sense, it was more like the sort of presentation Elon Musk does, where he looks at what he hopes might happen one day, than what Steve Jobs does, or Steve Jobs did, which is showing off products he already has available. He also, in the course of it, announced a name to Meta. The company will be called Meta from now on. Our mission remains the same. It's still about bringing people together.
That's an effort partly to show the vision for the future, but also a way of casting adrift some of the toxicity associated with Facebook. But if this new company is going to be a success, or the new company vision is going to be a success, he will still have to deal with a lot of the same challenges that Facebook has faced. Concerns about privacy, content management, those are going to be just as pertinent, if not more so, in the metaverse as they are right now on Facebook's existing apps.
This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew, along with Emily Wilkins here in Washington. Emily, I'll tell you, one of the things that they say at the White House is you have to be able to walk and chew gum at the same time, and this president is proving that need. Once again today, we'll see how well he does with it, not only ushering through the economic agenda that we've spent a good chunk of this hour talking about already, but he's got two major world leaders to deal with today as well.
Yeah, and remember, this was a really key part of President Biden's agenda, really getting the U.S. back on a place where they are interacting with their allies, strengthening those close relationships, and certainly the two individuals headed to the White House today. I mean, this is the first meeting between the Canadian, Mexican, and U.S. presidents since 2016.
As Anne-Marie said, the three amigos meet today. But is it feeling like that to you right now? They're not terribly happy about everything as they sit down together with a president who is pushing, I won't say America first, but made in the USA.
I mean, if we thought that President Biden could just warm up relationships by simply not being Trump, that's not the case. Biden has more to do. And joining us now to discuss further is Bruce Heyman, former U.S. ambassador to Canada. He is also the author of the book, The Art of Diplomacy, Strengthening the Canada-U.S. Relationship in Times of Uncertainty. Ambassador, thank you so much for joining us. I should just start off by asking, is this a time of uncertainty between the U.S. and Canada?
Well, the uncertainty is small relative to other places in the world. Let's just be clear. The U.S. has no better friend, no better ally, no better trading partner than we do with our friends to the north, Canada. There will always be, because of the complexity of the relationship, there will always be some issues that will pop up on both sides of the border. But this is an opportunity to sit down and discuss those face-to-face and in person, using the broader cabinet in the U.S. and using his ministers to come to the table to discuss each of these things. And I think that's an important part of the relationship. But no, the U.S.-Canada relationship's in good hands.
The president's reconciliation plan is controversial, apparently not only here in the U.S., but cross-border, with incentives to buy EVs made by union labor and made in the USA here, of course, has created some concerns in Canada. What's Prime Minister Trudeau going to tell the president about that today, and how much of an issue is this really?
I think it's a big issue for the Canadians. Look, we've been doing things together from the automobile sector since the 1960s.
That's right.
When we had the Auto Pact. And then we have NAFTA, that we work together and build things together. I visited many U.S.-based automobile plants in Canada when I was there. We make our cars together across our shared border. And the importance of this new evolution to electric vehicles will be important, I think, from a North American perspective. And I think the Canadians have a point here. That being said, the president also has a point to jumpstart electric vehicles in the United States and create incentives for it. I hope that we can find a pathway to making both work.
Another point of potential tension here is dealing with pipelines. I mean, President Trudeau, he was disappointed with President Biden's decision to cancel the Keystone XL pipeline. And now there's another pipeline, Line 5, that's coming into Michigan that environmentalists are pressuring Biden to call off an expansion of. Is this something that you expect to be brought up in the meeting today?
I wouldn't be surprised if it's brought up in the meeting today. You know, while the Canadians were disappointed on Keystone, they could not have been surprised given the president's signaling of this back from the Obama administration and during his campaign. This shouldn't have been a surprise to anybody. But this Line 5 coming out of Michigan is a very sensitive issue. It's sensitive for people in Michigan in that they've experienced leaks of pipes in the Kalamazoo area. And so they know about this and they know the costs of it. Simultaneously, we need that oil and we need this relationship, and the Canadians need that relationship to stay solid. So the president's team has said they're going to investigate it through the Army Corps of Engineers and see if, in fact, what the risks are here. But, you know, we're going to face this with pipelines, and we see leaks in pipelines at various times, and we are in an evolution away from fossil fuels, but that's not happening in the morning. It may not happen over the next several years, as we all know, and we're going to need Canadian oil.
Yeah. Ambassador, how important is border security in this conversation today? The president is hammered on this on an almost daily basis by Republicans. Does he need to bring this up with the president of Mexico?
I think the conversation with the president of Mexico, which led in the document that the White House released to talk about migration within the North American context, I think they have to just have that discussion. But importantly, is there a creative way the Canadians can get involved here and be helpful in some way? You know, they've been very welcoming of Syrian refugees and Afghan refugees. Is there an opportunity to be helpful to the U.S. and Mexico in this regard? I think stay tuned on that.
That'd be a pretty major deliverable if all three parties had an announcement on that today.
Yes, that also brings up another point. There's not going to be a joint presser between these three leaders. Ambassador, I'm wondering, how do you read into that?
I'm disappointed, honestly. I think we should never shy away from chatting with the press as we're doing here. I was the U.S. ambassador in the last North American Leaders Summit. We had it in Ottawa, and it was followed on by a presser with all three leaders. I think it's healthy to have that conversation, even if there are difficult points that have to be raised. And even if there are differences, we need to be able to have that conversation with the press. And I'm hopeful that we find ways, at least on, pull aside, that there are conversations. I know the Canadian Prime Minister is going to address the press from the Canadian Embassy.
Sounds like it could be a far-ranging conversation today at the White House. We thank Bruce Heyman, former U.S. ambassador to Canada, for being with us today. Coming up, we head to the Bloomberg New Economy Forum in Singapore, hear from former U.K. Prime Minister Tony Blair. This is Balance of Power on Bloomberg TV and radio.
When you put the garbage inside, there's a little sensor that detects the garbage and speaks out. And this is one of the initiatives that we have created here. We, as the residents of this neighborhood, a bunch of neighbors that have come together to try to deal with the fact that our neighborhood is dirty. We want to make a difference. We want to have a clean streets that look nice and are nice to walk in.
בבקשה.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew, along with Emily Wilkins in Washington. Former British Prime Minister Tony Blair joined the Bloomberg New Economy Forum in Singapore, spoke about relations between the West and China with Bloomberg's Francine Lacqua.
It's really important that even though there are going to be areas of confrontation with China, areas of competition with China, you've got to reserve some space for cooperation. Look, if you're trying to deal with climate change or COVID or stabilizing the global economy, you can't do it without a relationship with China. So I welcome very much the Biden-Xi Jinping summit. I think the Americans are actually coming to the right type of policy posture towards China. None of that means that there's not going to still be some pretty fierce action on both sides, and you know, there are all sorts of risks and dangers with this relationship, but it remains the key to 21st century stability.
But what is this about? Is it overall supremacy of who has the best, biggest economy, for example, with AI, or is it just confrontation on certain limited things?
Here's the problem. No one quite knows what China really wants to achieve. Now, some people say they want to achieve supremacy. Other people say they simply want to develop. We can't be sure of that. And there's no doubt at all that in the last few years, China has moved to the reassertion of Communist Party power inside China and a much more externally aggressive, assertive position. So how do we deal with this when that obviously causes us anxiety, and we have to be prepared for that? At the same time, we need to work with China on these other issues. So my view is you need engagement and strength in equal qualities. In other words, you need to build your own strength. We've got to be strong enough in the West. This is why the American-Europe relationship is also important. We have to be strong enough to do whatever is necessary. But we need to engage. We need to engage to understand, to be able to work with China, and to ensure that the relationship isn't subject to mistakes that are accidental, and rather than situations of confrontation which may be deliberate.
Do you worry about something escalating with Taiwan that maybe, you know, it's not voluntary?
Yeah, no, I do. I think that's a big anxiety. And I think it's important that we understand what China's position is in relation to Taiwan, how deep this one China policy is. But they have to understand that Taiwan is not the same as Hong Kong. And, you know, there are very strong views on this in the West.
So what role should Europe play? Should they square with the U.S. in putting pressure on China on this point? Or is it right to remain more neutral?
Europe, in my view, should not be kind of navigating between America and China as if, for us, in terms of values and interests, it's an equal relationship. It's not. You know, America's our ally. The transatlantic alliance is important. We need to keep it strong. So I think provided America also recognizes Europe's got interests in respect of China, and Europe needs to be part of the conversation. We can't just have an American position put down on the table and we're expected to support it. Provided America is sensitive to our concerns, I think that the majority of people in Europe know we've got to be alongside America.
That was former British Prime Minister Tony Blair at the Bloomberg New Economy Forum in Singapore. It's just been a wealth of news this week. Emily Wilkins, fascinating to think that it was only 2 days ago President Biden was meeting with President Xi in that virtual summit, if we can call it that, at the White House. No deliverables, but it does seem important for these two to meet again and maybe actually in the same room next time.
And as you did see them say, you are seeing more confidence from other nations about how the U.S. is handling China. Mm-hmm. That's really key to Biden's strategy on making sure that the U.S. can handle China and have good relationships with China, is its allies.
That's absolutely right. You'll be continuing this conversation in the next hour of Balance of Power that continues on Bloomberg Radio. What do you have coming up?
We've got a lot of good stuff. Recapping a little bit of this show, I'll talk to Congressman Brian Steele, Republican of Wisconsin. This is Balance of Power on Bloomberg TV and radio.
Common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector in Scotland, around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Alex Steele. Welcome to Bloomberg Commodities Edge, where we focus on the companies, physical assets, and the trading behind the hottest commodities with the smartest voices in the business. I want to get right to the data dig. Let's look at the top market stories of the week. And I did want to start with oil inventories because they saw a surprise draw of about 2.1 million barrels. And a huge part of that decline was actually based in PADD 3 because exports from the Gulf Coast actually rose. They're now at the highest since July. Part of it might be demand, but the other part might be strategic selling out of inventories before the end of the year. That way you can avoid some taxes, not necessarily a true demand story. So that's sort of the day-to-day. Now let's look at the next year and what we're expecting in terms of a deficit or a surplus. This added a little bit of heaviness onto oil prices. The market could be ready to swing into a healthy surplus. That's according to the big international energy forecasters. IEA, OPEC, and the EIA all show global oil deficits shrinking in the current quarter and then a surplus next year. However, all of this is provided upon OPEC plus producers hitting their individual output targets under the supply deal, which they have yet to do. And one thing I did want to highlight this week, so spot prices for metals have been a bit weaker, but backwardation has not. Now you have 6 of the base and industrial metals like aluminum and zinc. They're all in backwardation. That's the first coordinated time since 2007. That means the spot price is still above future prices. All right, let's get back to the energy story. Front and center is, what are we going to do about the oil price? China could be releasing some of its oil from its strategic reserves days after the U.S. invited it to participate in a joint sale. The world's 2 biggest oil consumers appear to be willing to work together at this. Bloomberg's Will Kennedy, who leads energy coverage over in Europe, joins me now from London. Will, thanks for staying late for me. In theory, how much could China and the U.S. release? What's the commercial availability?
Well, in China, commercially and in their strategic reserve, you're looking at more than 900 million barrels of oil, so a huge amount of oil. And of course, obviously, the US has several hundred million barrels in its strategic reserve. So it's a lot of oil. But of course, it is a the commercial reserves are one thing, but the state-controlled strategic reserves are there as a strategic reserve. You need to maintain them. You can't release them all in one go. So you're probably talking a fraction of that, tens of millions of barrels.
Has China and the U.S. done this before together?
No, I think that's what's really fascinating about today's story, Alex, is that you've got the 2 world's largest oil consumers working together. They have quite an antagonistic relationship in many respects, but here they seem to have found a common interest. It was discussed at the summit between Presidents Biden and Xi on Monday, and they seem to be acting quite fast. And I think it's a really important moment in the oil market that they're willing to consider this sort of coordinated action to bring prices down. And I think that people in Riyadh will really be taking notice, actually.
Right, you have an OPEC plus are the suppliers, and now you kind of have like a cartel of consumers. What would they have to do to materially change the oil price? What kind of release and how quick?
I think what's interesting about the oil price over the last 3 weeks is that nothing's happened yet, and yet all this boning and pressure, diplomatic pressure that you've had from the Biden administration to some extent has worked. After the OPEC meeting in early November, when they very clearly said, the Prince Abdulaziz, the Saudi oil minister, clearly went out of his way to say to the Biden administration, no, you're not getting any extra oil. We think that's fine. The president changed tack and started talking about a release, started putting diplomatic pressure on other consuming countries to perhaps act, started talking about changing refining mandates. And oil prices are $7 lower than they were at that point. So in some senses, it's working. And I think what's happening in the market is it's hard to be long in this market. If you're a trader, you might want to be long on the fundamentals. The fundamentals still look pretty good. But if you know that the US president can put 50 million barrels into the market at anyone's time, it's a dangerous place to be. And I think that's really had an impact on the front price. So that's a very long-winded way of saying, Alex, is it's had an impact even before it's happened.
No,
when it happens, it will probably have an happen too. I think the real issue for both China and the US here is you can't keep doing it again and again, otherwise you'll quickly have no strategic reserve at all.
Well, but my question was, will the verbal intervention and agreement be now a tool in the toolbox?
Yes, I think so. But with like any verbal intervention in life, you have to show a willingness to follow through. Otherwise, eventually the market will call your bluff. So, there's going to be that sort of tension. But what I think what we can take away from this period is that we have a president who is not keen on OPEC, who is really under pressure because of inflation broadly and high gas prices in particular, and is willing to make it a top political priority. And I think that changes the equation of political risk in the oil market for people trading.
Such great analysis, Will, and such a good point. Bloomberg's Will Kennedy joining me there. Time now for Commodity in Chief, where we talk to one executive in the commodity world. Today, it's Doug Campbell, CEO of Solid Power. First, I want to take a look at how traditional lithium-ion batteries work. Tiny ions of lithium move from an object called an anode to the cathode, which is made up of materials like nickel, cobalt, aluminum, and lithium, and that generates electricity. Now, these batteries pack a serious punch and can produce a lot of energy. Plus, you can also reuse them a lot. So to prevent the battery, though, from overheating, an EV uses a cool liquid that flows between the batteries. And as you can see here, it then takes an inverter, takes this power, and changes it to an alternating current. Think of it as a voltage that changes. Now, this produces a rotating magnetic field in the motor, and voila, you have power. Here's one problem: range anxiety. Just how far can you really get on one charge? And instability. Sometimes these kind of batteries can catch fire. One solution is solid-state batteries. The liquid is replaced with solid matter. Enter Solid Power. It's producing these solid batteries in a traditional lithium-ion manufacturing process, and that helps streamline that process. And we will deliver these batteries in 2022 to Ford and BMW for testing. These two companies back Solid Power. Plus, you got SK Innovation also announced it will manufacture its own solid-state battery cells with Solid Power's material. And it's in a SPAC, a combination with one of Riverstone Energy's decarbonization platforms, and that's going to help it fund its growth plans. Now, the solid-state dream has been around for a while, and every car maker wants a piece of that pie. I recently caught up with Solid Power CEO Doug Campbell, and I asked him why this time was different.
One of the main consumer pain points right now is cost of electric vehicles. The cost of those vehicles needs to come down. And front and center in that cost challenge is the battery. That is far and away the biggest cost driver. And where solid state batteries deliver on cost is by enabling dramatically simplified battery packs because of things like high temperature stability, meaning there's no need for things like pack cooling, as well as substantially higher safety in comparison to lithium ion.
You're basically saying that these won't light on fire and then we won't have to recall them.
That is correct. And that is absolutely some data we just recently released.
Where is the track and path to revenue generation? If that's the use case, and then you have here's their production outline, and it's all about dollar per kilowatt hour. When do you get to revenue growth?
Yeah, so for us, there's really two paths. One is on the cell product, which is, of course, what we sell to the automakers and what they put into their electric vehicles. As I said before, we do have to go through this formal and very extensive automotive qualification phase, which will kick off next year. So what we would expect is a production ramp beginning in about the 2024 timeframe, and then getting to a gigawatt hour scale by 2027. In parallel is our material side of our business. And this is what makes us a bit more unique in that long term, we see ourselves as a materials business, specifically the industry leader in solid electrolyte. And there we anticipate generating revenues a bit sooner. And that is because we would be supporting a variety of other groups developing solid state batteries, which in today's environment is pretty much anyone and everyone in the automotive supply chain.
So aren't you cannibalizing yourself? So you're making solid state batteries and then you're providing the materials for other companies to make solid state batteries?
I get that question all the time. Absolutely not. And let me explain why. So if you're a customer and I come to you and I say, hey, we've got two products. I've got this great cell design and I've also got this electrolyte material. Oftentimes, there's a bunch of competing cell designs out there, and I cannot prevent the Toyotas, the Panasonics, the CATLs, the Samsungs of the world from developing their own solid state cell designs. They are, and frankly speaking, if I were in their shoes, I would be doing the exact same thing. And so in those cases where there may not be as much interest in our particular cell design, because again, they've sort of invented their own internally, what they do require is materials. And so the way I view it is really any any really customer across the full spectrum is indeed a customer. So we're working with Ford and BMW. We're delivering cells to Ford and BMW to fit their needs. But of course, with materials, we could, in theory, get into the entire addressable market.
Once you perfect your solid state battery, what else can something like that, or at least the template, be used for?
We're targeting really the mobile power markets, which you could simplistically think as anything that moves. So everything from, batteries are everywhere in aircraft. This emerging urban air mobility, which I would argue performance of batteries determines whether their business cases even close. Consumer electronics, our military is increasingly electrified. And so those are areas right now where we have active development efforts. And I would venture to say that we potentially would see commercial products sooner.
That was my interview with Doug Campbell of Solid Power. All right, time now for our commodity kicker. Crowded chicken coops are reprehensible, and a new report indicates that companies are falling behind their cage-free egg pledges. The nonprofit group Compassion in World Farming reports that among 116 companies with U.S. commitments, only 12% met their goals. That's a foul situation. Most hens live in a cage with only 67 square inches of room, about the size of a sheet of paper, and talk is cheap. While cage-free egg laying has increased over 200% in 5 years, it still makes up only about a third of flocks in the U.S. For all cage-free commitments to be met by 2025, companies are going to need to speed up that pace over the next 3 years. That's just simple economics. That does it for Bloomberg Commodities Edge. Catch us every Thursday, 1 p.m. New York time, 6 p.m. in London. This is Bloomberg.
You should be thinking about formerly incarcerated people as representative of their families also and of their communities. These are human beings. They're not disposable items. They are not to be warehoused, locked away, out of sight, out of mind. And so I'm out here in the public because I am the conscience of those folks of America, I hope. I'm hoping to prick their conscience and know that I am just a symbol of a much greater problem.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
It's a question of how do we, as rapidly as possible, transition ourselves away from a fossil fuel-based economy, and that, of course, has a huge focus on the transportation products, but it also includes energy products.
This is Bloomberg Markets. I'm Matt Miller. Coming up this hour, we'll be focused on inflation and how it is or isn't affecting retail, depending what you sell. The CEO of cosmetics maker Coty joins me, along with Dana Telsey of the Telsey Group. Plus, we'll look at how inflation is causing a make-or-break moment for Wall Street professionals. Let's take a check at what's going on in markets right now. The S&P 500 rising just about 1/3 of 1%, just over 4,700, 4,703.5. The U.S. 10-year yield coming down as investors feel comfortable enough to let go of the perceived safety of government bonds. The Bloomberg Dollar Index coming down. And by the way, if you look at a year of the Bloomberg Dollar Index, we're at a pretty high level, so it's giving up a little bit of the gains that we've seen. And NYMEX crude coming back, but at 78.94, and you look across the oil industry, you'll see prices have come down substantially since President Biden and President Xi talked about releasing strategic petroleum reserves. Other countries are going to do it as well, and that's taken a little bit of the pressure out of the oil complex there. Take a look at the lira. After the Turkish central bank cut again, we see the currency slumping. And I do this slumping in an upward motion because this is the amount of lira you can buy for $1. So as it is green here on the screen, that means the Turkish lira is dropping in value. You can now get 10.98 lira, and for a while you could get more than 11 lira for $1. So an all-time historical record low for the power of the Turkish lira. Now, for a generation of investing pros, stable prices were a fact of life. But now, with inflation on the rise, those working in finance are feeling the pressure to call the path of higher prices. Either it's going to stay or it's going to go. It's the focus of this week's Bloomberg Business Week magazine. You can get the actual paper product or you can get it online. We welcome the author of this cover story, Bloomberg's Katie Greifeld. So, Katie, it's interesting because a lot of people, even I, don't really remember the inflation of the 70s and the 80s at my great age, which means that, normal people, all younger than me, didn't experience anything like it.
Yeah, Matt, I wasn't close to alive in the 70s. And I mean, even in the 1990s, that's when we last saw headline CPI this high, core PCE this high. A lot of money managers that are on the street today, they weren't yet managing money. I mean, we're talking about 3 decades ago. We're not measuring in months or years. It's been a long time since we've seen a moment like this. And I mean, if you are looking out over the next year, this is the question that you have to answer. Because if you think about asset allocation, this reverberates across bonds, stocks, commodities, everything.
We're looking at headline CPI going back to before Nirvana and Pearl Jam. So this goes way back to 1990, and we have a Fed that seems more reluctant to fight inflation than, say, Paul Volcker was in the 80s. I was looking back today when you and I were on Bloomberg Radio today. Paul Volcker raised rates to 20%, 4 times in less than 2 years in the 1980s. Of course, the market came crashing down when he did that, and the economy came to a halt. Jay Powell, even Lael Brainerd, is unlikely to want to do that sort of thing.
Yeah, and I mean, if you look at what's priced in, I think the current terminal rate that's priced in is 1.75%, far cry from 20%. And to your point, Jay Powell, I don't think he's going to raise rates that much. The market doesn't either. A Brainerd Fed certainly wouldn't expect a ton of rate hikes out of that regime.
Even more dovish, think.
I mean, that's the Wall Street consensus. Either candidate would be responding to the inflation that's on the ground. But, I mean, the Fed is in an interesting position because before the pandemic, they introduced this new framework, this flexible average inflation targeting. They've really trying to stick to their guns here that they're going to let inflation overshoot. I don't think that they could have looked into the future, into their crystal ball and seen, a 6% handle on CPI. I don't think that was in the offing when they made that decision.
I love this story because you get a sense of how ominous a situation we're in for Wall Street strategists. I mean, if they make the call and it's wrong, that they're just gone, right? If they make the call and they're right, they could be superheroes like John Paulson or Michael Burry, and they're the kind of names that we remember and will continue talking about for decades.
Absolutely. There is some optimism here that you're alluding to that, this could kill your portfolio, your returns, but you could also be a hero. This could make your career. But in terms of that uncertainty, I love if you just look at the 21 forecasters that Bloomberg tracks, their year-end targets for the S&P 500, the highest is at 4,800. The lowest is at 3,800. That's a 1,000-point point gap, and that just really speaks to there's not really a consensus here.
Yeah, what is that, like a 26% spread?
Yeah.
Great story, Katie. Congratulations on the Bloomberg Business Week cover story. Katie Greifeld. You should check out this week's edition of Bloomberg Business Week. You can see it online or on your newsstands. You can also see Katie on Bloomberg Quick Take. This is Bloomberg.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says, I look like I'm on.
I noticed that.
Do you think I need a lift? Is it time that
What did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I had no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
On the supply chain, are you starting to see things improve? And if you are, where specifically, sir?
Well, this year we have been mostly affected by the semiconductor situation. And we believe that the quarter three was the quarter that was most affected.
This is Bloomberg Markets. I'm Matt Miller. Bayer's CEO, Werner Baumann, joined Bloomberg earlier at the New Economy Forum, rejecting the idea of a breakup for the conglomerate and warning of higher labor costs into next year. Here's what he told our own Manus Cranny.
We have seen that there's quite a bit of cost pressure that has come to us, driven by the fact that supply chains have not been as stable as they used to be pre the crisis. So we've seen significant increases in freight rates. Everybody's talking about the charges that we have to take for transatlantic transportation. We are pivoting to air freight, which is yet even more expensive. But when you have life-saving products that need to come to patients and customers, that's what we do. Secondly, we also see a surge in energy prices that is of limited impact for us, but still we feel it in our production. And last but not least, some input materials that are increasing. And what will follow on the heels is for sure labor cost increases that we will see starting 2022.
Do you think these pressures are going to rise, wages, input side? Do you think they're going to continue to rise, Werner, in 2022?
Yes, I do think that we will certainly see that, when we come to the discussions with the unions, when it comes to merit increases and the like, because people feel the pinch of inflation and cost increases when they go to the store, when they go shopping and the like. And that will, of course, drive their demand up in terms of what the annual increase should be. Yeah. It's always a negotiation, but we will not get away with the relatively low increases that we have seen over the last years.
What kind of percentage increase do you think you're going to be faced with in 2022?
Well, we have seen very low single-digit increases over the last few years. I think it's going to be a little bit higher, but still substantially below 5%, I would hope.
I know that you've committed to the one buyer, the three legs, the consumer, the farmer, and the chemicals, but I look at what GE has done. I look at what Glaxo has done. Why are you still so convinced of the model that you have at the moment?
So we have, over the last 20 years, pursued a strategy of becoming a focused multi-business business. So we shed a lot of businesses that were not driven by science. And the areas that we've been focusing on is actually the life sciences. If you look at our portfolio today, we are active in 3 businesses. It's pharmaceuticals, it's crop science, and it's our consumer health business. All of them are informed by the life sciences as a platform, and we do see significant advantages of running those 3 businesses together under one roof.
And that was the CEO of Bayer, Werner Baumann, talking to Manus Cranny. Let's get now to something that caught my eye, and that is the shares of Deere, John Deere. They are climbing after the company and its workers ended a month-long strike at U.S. plants. The deal will increase pay and boost retirement benefits over a 6-year period. The work stoppage took some 10,000 workers off the line and threw several of Deere's businesses into turmoil. The contract that will increase worker wages now by 10% in the first year, with further increases in other years, is also going to give each worker a new signing bonus, or a re-signing bonus, of $8,500 apiece. Now, coming up, the reopening fuels a cosmetics rebound as people need to go back out into the real world. Getting off Zoom, and before you get into the metaverse, we'll speak with the CEO, Sue Nabi, about the company's brand new long-term growth plan. Next, this is Bloomberg, as we see the Dow Jones Industrial Average coming down 64 points, 34,866, which is very interesting because we see the S&P still rising 0.25% at 4,700. The NASDAQ gaining 0.25% as well, and the U.S. 10-year yield down under 160.
landed with 40% remaining. Years ago, Ewan Dixon was the first guy to do it. It's taken a century for us to change our propulsion system away from liquid fuels. So there you go. There are dozens of international companies in that airframe size who have realised the opportunity, are in a race to get those commercial aircraft out there at that scale. It's an area that can be served by hydrogen, which we're well placed with, through fuel cells.
Lagging profitability that the European banks still undoubtedly have is structural weaknesses, which are linked to cost efficiency, to focus on business model, to investments in digitalization.
every Friday with 30 minutes dedicated to fixed income. I'm Jonathan Ferro. This is Bloomberg Real Yield.
I'm Mark Crumpton with Bloomberg's First Word News. German Chancellor Angela Merkel is holding talks with regional leaders to agree on tougher restrictions as the nation's cases rose by more than 65,000 for the first time. Meanwhile, wearing a face mask reduces the risk of getting COVID by more than half. That's according to a review of 8 studies published in the British Medical Journal, and a more infectious new version of COVID-19's Delta variant is spreading fast in the UK, but it seems less likely to cause symptomatic COVID. Former UK Prime Minister Tony Blair is warning of the risks that a U.S.-China conflict over Taiwan poses. Mr. Blair spoke today at the Bloomberg New Economy Forum in Singapore. Earlier this week, Chinese President Xi Jinping reasserted his country's red line with regard to what he called separatist forces in Taiwan in a meeting with President Biden. The president plans to skip January's World Economic Forum in Davos, Switzerland. Bloomberg has learned the president will instead send administration officials to the Swiss ski resort. In past years, when a U.S. president hasn't attended, the delegation has included senior officials who work on economic issues and trade. Microsoft says that Iranian groups are increasing attacks against IT service companies to invade customers' networks. Microsoft put out more than 1,600 notifications to IT companies in response to Iranian cyber attacks in 2021, compared with just 48 last year. Most of the targeted companies are based in India. Several are based in Israel and the United Arab Emirates. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Hi, I'm Amanda Lang. Welcome to Bloomberg Markets.
And I'm Matt Miller. Welcome both our Bloomberg and our BNN Bloomberg audiences each day at this hour. Here are the top stories we're following for you from around the world. One of the world's leading beauty companies, Coty, outlines its long-term growth plan at its Investor Day. In a moment, we'll speak to the CEO from the floor of the New York Stock Exchange. Plus, retailers vow the holidays are safe from supply chain fears as many companies' earnings come in better than expected, and some even exceeding pre-pandemic levels already. A blowout quarter, for example, for NVIDIA. We'll dig deeper into the numbers as the chip maker hits a record high. All that and more coming up. Amanda?
And we are seeing some of those stories playing out in the stock markets today. Broadly speaking, a positive day in the U.S. We got some negativity here in Toronto, but we are seeing NVIDIA as one of the big gainers on the day, up 8%. Going the other direction, another story stock, and that's Cisco, as it surprisingly misses on its quarter. So we're certainly seeing big moves, and that it is a big decline for Cisco on the day today. Yesterday we saw consumer discretionary in the driver's seat and Amazon to thank for that. It's still leading the gains in this market, but tech, the subgroup tech, is now going along for the ride. So some of the biggest growth names are gaining again today, and there's your 10-year back at 1.5, just south of 1.6. So all the debate, of course, is still around inflationary pressures and what that's doing to retailers, and we're going to dig into that. And for what it's worth, Matt, U.S. retail foot traffic is certainly showing signs of life, up 40% last year, year over year. Now, this is Bloomberg's analysis of mobile phone data, and leading the way, beauty sector. Interestingly, a 52.5% increase. Malls were strong, department stores, apparel with a nearly 40% increase. And I tell you what I find interesting about this is year over year, right? So a year ago in many places, there was a precious little happening. I would expect beauty, for instance, to be up even more than 50% given the comparison. So I guess the question we have to put in context here, Matt, is how healthy are these numbers, although they look like big jumps?
Yeah, you would expect a huge jump, is your point, right? Because last year, a lot of us were completely locked down. And those of us who were we're working. We're doing it via Zoom. For the most part, I was always in the studio, but that's because everybody else in my office in Berlin had gone home. So I was the only person in the office. I still had to wear makeup. You still had to wear makeup, but not everyone did. So I think it's going to be a really interesting conversation because you've gone from the Zoom culture, work from home, back to the office where people are putting on their best faces again. And as we move forward, I wonder what it's going to look like when you get to the metaverse. Are you going to need to buy your makeup from Coty online and apply it in, Second Life?
Am I allowed to just refuse to visit the metaverse for like 15 years? I'm not going to be drawn into that right now.
I think we will be able to. You'll be allowed. Anyone over 25 doesn't have to go.
I'm opting out.
Yeah.
I stayed out of the cloud a long time, too. For more on the beauty business, we have somebody who knows it very well. Sue Nabi is the CEO of Coty with us live from the New York Stock Exchange. The company's hosting its Investor Day. So let's actually start, Sue, with the health you're seeing in your business. We saw some pretty strong numbers on a year-over-year basis. What are you expecting to see for you?
Thank you for giving me the opportunity to outline, the key takings from this Investors Day, Coty's first Investor Day in many years. We've been, presenting to everyone our growth trajectory, and this company has a huge growth potential and growth engines. We've been presenting that the company is going to grow faster than the beauty market for the upcoming years. We've been explaining how we're going to build this growth, be it behind the consumer beauty business with CoverGirl, one of the most iconic American brands, back to growth today and about starting to accelerate already with the repositioning of our consumer beauty brands in Europe. And I would say with the growth engine of the company for the coming decade, it's the prestige business with our, fragrances that are all living in momentum today. You were talking about the consequences of the lockdown, and in fact, we've seen that many people rediscovered the prestige fragrance category, and in a way this category is regaining its letters of nobility, I would say, since it's the category that's been growing the fastest and that's going to benefit from a huge surge in consumption in areas like China. Can you imagine only 2.5% of Chinese people use fragrances today, and there is there a big hunger for high-end fragrances, and Coty with brands such as Gucci, Burberry, Calvin Klein, Hugo Boss, Chloé has exactly the portfolio of brands to benefit from these tailwinds coming either in America or in China. So really the presentation behind these key strategic bets, including prestige makeup and skincare, what I could say a few words later maybe, has really gave strong confidence about how we're going to build this growth trajectory.
What is it about skincare that you want to say? Because I imagine people are using skincare more now that they have to go back out into the real world. But I wonder, in some places the climate is so bad, the pollution is so bad that you really need to, even people who weren't using skincare products before are trying to get the soot out of their pores.
Yeah, thank you for this question, because indeed, in fact, skincare was a key part of the presentation today, and we've been able to present today how we are going to build Coty's footprint in skincare, whatever is the region and whatever is the price tier. And again, to come to your question, I've told everyone the story of this sun protection and anti-pollution protection brand called Lancaster, which is a big leader in Europe, that we are starting to operate in China, in Hainan, and there the brand is gaining very, very quick traction because it has probably some of the best formulations to fight against UV and pollution. We presented the first CoverGirl skincare line, which is all about moisturizing and detoxifying the skin using cactus water. And last but not least, we presented the latest announcement that we made yesterday, which is the fact that Coty is now going to operate one of the most coveted, awarded skincare, ultra-premium skincare brand called Orveda that was born a few years ago in Europe, and that's ready to go to China. So again, we've been presenting all our capabilities.
And I'm seeing some positive feedback to your plans, Sue, including the debt reduction, and you're targeting pretty aggressive growth. I mean, top line growth that's 3% above the peer average, while increasing your profitability. How achievable is that? What are you doing to achieve those numbers?
So again, this strategy was really built block on block, block after block. We are stabilizing our consumer beauty business, and the high single-digit growth of our prestige business is going to help us to go to the next level. And again, it's really built with prestige fragrances, growing our footprint in prestige makeup, and going from less than 4% of skincare today to around 10% in the coming 3 years. And it's really built block on block, and this is really was in a way understood very easily by all people attending our Investors Day.
I want to ask you, Sue, to look into the future, 3, 4, 5 years, maybe 10 years, to the metaverse. We've all been talking about it so much, and Amanda refuses to go there. But I'm guessing people are going to want to wear makeup in the metaverse and probably even pay up for high-quality brands. Have you or your team thought about selling your products in a virtual reality?
So we started in fact to do collaborations with the gaming industry, which for me is one of the industries that's already having a foot into the metaverse. And clearly, having our brands part of this new world. And again, the strategy is always to be where consumers are shopping. So if people are going to be in this area, we have the right brands to give them opportunities to look at their best, including in the metaverse. But I guess that these people are going to continue to live in real life, and therefore using our skincare, using our makeup, or using the latest fragrances we'll be creating will be clearly still part of their life.
All right, Sue, great to get some time with you. I know it's very loud there on the floor of the New York Stock Exchange, but it's an exciting place to be, and we're glad you spent some of your time with us. Sue Nabi there is the CEO of Coty. They run a lot of high-end makeup and skincare brands, like she said, Hugo Boss, Davidoff, but also CoverGirl and others. Coming up, a big week for retail earnings with Macy's and Kohl's. They sell all that stuff, both reporting today ahead of the holiday season. We're going to get insight on the sector from Dana Telsey, the CEO of the Telsey Advisory Group. If you want to know anything about what's going on in retail, Telsey is probably your first stop, and we're bringing you there next. This is Bloomberg.
目前眼前状对我们军方来讲的话，我只跟委员报告，是我从军以来40多年以来看到真的是最严峻的时候。要翻台的话，他目前有这能力，都有的啊，但要看怎么一个结局。所以我们不做任何挑衅啊，但如果把他激怒了，就跟我们人一样，你把我激怒了，我手上能力我也会发挥出来。所以2025是我们研判要全面啊，我们这样研判的。
Well, China has, I've spoken with Xi about Taiwan. We agree we will abide by the Taiwan agreement. That's where we are. and we made it clear that I don't think he should be doing anything other than abiding by the agreement.
I was just finishing what you were saying, Tom. November 3rd is when the decision is. Just in case people got confused, I will. Just one more story, Tom.
Yeah, thank God for that.
We're at 137 right now.
Wrap it
into
up.
weakness. Is this where they play the music and the Academy Awards? Is this it? Do I thank my mum again? Are you in charge of this?
Is she the only one?
Kill the music. You know who's in charge here.
A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Markets. I'm Matt Miller with Amanda Lang. Some of the biggest movers in today's session are tied to retail. Kohl's and Macy's are both rallying despite the talk that we hear about inflation and higher prices, or maybe because of it, they're able to pass those costs on. Macy's with stronger than expected results for the third quarter and raising its full year earnings guidance. Kohl's posting sales that beat Wall Street expectations. And Amanda, you know, companies that aren't passing on the costs are getting hit hard. We've seen over the past couple of days, especially those companies that sell consumer staples, the stuff you have to buy, you don't have a choice to live. They have been punished by the market.
Yeah, this is going to be maybe the question, I think, of the quarter, Matt, is to what extent is margin compression the story, and then to what extent is that transitory? Can a company pass on a higher cost this quarter but drop it next quarter? Maybe. I think their gamble is they're going to take it in their margins, as Walmart is a little bit. But hopefully this is, transitory in a way that means it's only another quarter and not a year or two.
I'm just looking down at my terminal here because Sweet Green has opened. This is the salad-making chain. It's opened 86% above its IPO price in its debut. Started trading just now. I love it on so many levels because it sounds like a Black Sabbath song, and the ticker is actually SG, which is the kind of Gibson guitar that Tony Iommi played when he was in Black Sabbath. But apparently it's a very healthy food chain, and I guess they probably source organic and bio lettuce or whatever. In any case, the kids love it, and I think they're hoping, Amanda, that this could be the next Chipotle because, new restaurant stocks.
They got a long way to go to get there.
True. New restaurant stocks have almost all failed. None of them, Boston Chicken was one Paul Sweeney was reminding me about today that didn't do well. But Chipotle has been on fire. That is a stock that has just been gaining in an unbelievable manner. So if they achieve that, it'll be great for SG owners.
It will.
All right, let's get back to the retail story here. We want to bring in Dana Telsey. As I said, she's a CEO of the Telsey Advisory Group. If you want to know anything about retail trends, she is really your first stop, maybe your one stop to find out what's going on. Dana, we're seeing sellers of consumer disposables or people that sell stuff that you don't necessarily need to have doing really well. Meanwhile, sellers of consumer staples, the stuff that you have to have like food and gas, they're getting pummeled. Why is that?
So I think overall, when you think about the past 2 years with the pandemic, the discretionary goods players really got pummeled as we went into the pandemic and during the pandemic. There was no need to buy any of those discretionary goods. At the same time, the essentials players performed better than expected. The results that we've seen over the past few days, and still more to come next week and a little bit the week after, have been exceptional. And I think they've been exceptional for the essentials players as they have for the discretionary players. Keep in mind that everyone has cost headwinds, whether it's inflation, whether it's supply chain, getting goods, the labor costs that are out there. But in essence, the strength of the consumer and the high savings rate, the benefit from stimulus, the child child tax credits are all there. And now you're seeing this is the first holiday season that we've had in almost 2 years where we're seeing families being able to gather again and able to gather again safely. So whether it's social occasion dresses, whether it is fragrances, cosmetics like you just heard, or footwear, we're seeing an uptick. And I think overall, you're going to have retail with the strength of the consumer be stronger. I think what you mentioned earlier, the S word, what's sustainable in margins going forward as to what we have now is really the drumbeat of 2022, especially when the first half of 2022, we're going to continue to be saddled with supply chain headwinds.
So then let's drill into that a little bit, because it feels a little bit, of course, as though there's exuberance, and I use that word intentionally, in various asset markets, right? In stocks, it feels that way. In real estate, it feels that way. And maybe in cosmetic purchases is what we're going to see, those non-discretionary items. And I'll acknowledge it, in these virtual spaces, people are buying things that don't even exist. Arguably, we're doing that in all kinds of ways these days. Like Matt. I hope Matt's wife is in charge of the finances at that house. That's all I have to say. But how much does that say about what happens if there's a turn for the worse? If we do get a real contraction in the markets because of rate increases, maybe even an economic slowdown, does this exuberance, in other words, is fairly hot money? What happens to those companies that are counting on it now?
I mean, you're seeing stocks go up basically to levels that they hadn't been at in quite a long time. What's interesting is that even though the stock prices are moving up, the valuations remain compelling. Compelling because the rate of growth and the expense reductions that companies have taken, there's some level of sustainability that'll hold. But keep in mind, one of the things with consumer stocks, the minute you see the increasing sales, you can't expect it to go on forever. We have two things that could help continue to sustain sales: international tourism coming back and people going back to work into the office. That would help on the discretionary side. What you're seeing, for example, even on the grocery side, prepared foods matters. But the minute we see deceleration in growth rates, retail stocks trade lower. Acceleration of growth rates in top line or bottom line, and more so in top line, drives an uptick in momentum, which is what we're seeing right now.
Dana, always good to have you. Really appreciate it.
Thank you.
Dana Telsey is CEO of Telsey Advisory Group. Thanks. And checking on shares again of Sweetgreen, it has started trading here, an 86% pop from the issue price. We'll continue to follow this. More ahead. Stay with us. When your shares are down 20%, it's got to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution: fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
Today it's a lot more about things like services. So people come because they want to find the local plumber, maybe a contractor, maybe it's a babysitter, and they tend to convert very fast. So we do well for advertisers, top of the funnel, brand, and then bottom of the funnel, direct response.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Markets. I'm Amanda Lang with Matt Miller, and we are turning now to Stock of the Hour, the world's biggest chip maker by market cap at a record. NVIDIA is seeing big growth in data centers and games. Kriti Gupta here. Just don't say metaverse, Kriti.
It's going to be hard not to, because essentially they're diversifying, they're offsetting essentially the supply chain concerns and doing it in a way that actually means that they're actually serving data centers, and that could potentially mean serving the metaverse at one point. But it's also things like crypto mining, for example, or simply corporate networks, and that's really the essence of why they beat earnings so much, because it was a 55% year-over-year change. I mean, it doesn't come without its challenges, though. It's not all sunshine and rainbows over at NVIDIA. They also had actually a drop in automotive sales because of those supply chain concerns, and that's really where you saw those earnings or those supply chain concerns really show up. But let's just talk about what it's doing today, because it's actually leading the S&P 500 higher, and that's all because of those record third quarter sales. And it's actually the number 30 gainer in the year, following Microsoft, following Alphabet. To put that into perspective, compare NVIDIA to another chip maker that we all know and love, and that, of course, is Intel. NVIDIA is 3 times the size when it comes to that market value. But does that mean it's getting expensive? And it's actually pretty expensive if you look at its price to sales ratio and compare that to some of its peers in the semiconductor index. But investors, they still like it. They are still buying in.
I mean, we were just talking about Chipotle, because I'm so hungry.
Me too.
But also because it's done so well. It's up, if you look over the last 5 years, annually 34% gains, which is insane. Right. NVIDIA, annually 67% gains. Right. It's on fire. This is a stock that's worth $800 billion, is the biggest chip maker in the world. And now it's doing great because of the metaverse, but not all computer-related, internet-related companies are doing well because of the metaverse.
Right, and Cisco is the best example, because it actually comes down to they had the demand, but they didn't have the supply to really meet up with it, and that was the problem here. They even paid more to expedite delivery for some of that supply. It ended up eating into their margins. The CEO said they could have gotten even more than the 8% revenue if they had just been able to meet that demand.
Chuck Robbins. Okay, Kriti, thanks so much for joining us. Kriti Gupta, they were looking at our Stock of the Hour. For Amanda Lang, I'm Matt Miller. This is Bloomberg.
Esta operación definitiva para dar con la captura de este bandido la planeamos el 15 de octubre del año en curso. A las 8 de la noche en una guarnición de Bogotá nos reunimos con los oficiales de inteligencia de la policía, nos reunimos con los oficiales de planeamiento de operaciones especiales de las fuerzas militares y de la Policía Nacional, y es cuando se decide cambiar y darle otro salto a esta estrategia.
City.
Here in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I'm Mark Crumpton with Bloomberg's First Word News. President Vladimir Putin says Russia has succeeded in raising the specter of a threat over Ukraine and must keep the United States and its allies on edge. In recent weeks, the U.S. has warned its European allies that Russia may be planning a repeat of its 2014 invasion of Ukraine, citing a fresh buildup of tanks and troops on the border. The Kremlin denies any aggressive intentions. Bloomberg has learned the U.S. will pay Pfizer $5.3 billion for an order of 10 million doses, or courses rather, of its experimental COVID-19 pill beginning later this year. The purchase is contingent on U.S. clearance of the COVID oral antiviral, which Pfizer has already applied for. Pfizer says it will invest as much as $1 billion to manufacture and distribute the pill. Americans will be able to text 988 to access the National Suicide Prevention Lifeline. The Federal Communications Commission approved the move today, seeking to broaden support for at-risk communities like young people and the disabled. As the pandemic weighed on mental health in 2020, almost 46,000 people in the United States died by suicide. That's according to the Centers for Disease Control and Prevention. Chinese state media broke its 2-week silence on the whereabouts of tennis star Peng Siquei. State broadcaster CGTN posted a letter attributed to Peng on its Twitter account, claiming she is resting. The tennis star has not been seen since alleging an affair with a former Communist Party official. The scandal comes at a sensitive time as China prepares to host athletes and other dignitaries from around the world at the Winter Olympics starting in February. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
The most crucial moments in the trading day. This is Bloomberg Markets The Close with Caroline Hyde, Romaine Bostick, and Taylor Briggs.
It's 2 p.m. in New York, 7 p.m. in London, and we are live from Bloomberg's World Headquarters. This is Bloomberg Markets The Close. I'm Caroline Hyde.
I'm Romaine Bostick.
I'm Taylor Briggs.
And we're keeping our options open. Equities mixed ahead of tomorrow's options expiry, which is forecast to be second biggest in recent history. Brace for volatility. Romaine likes my headline, and he has our retail read. Taylor gives tips on the latest auction. Ooh, see what I did there?
So many pies.
We've got you covered. As we eye inflation, it's the focus of this week's Bloomberg Business Week, and we speak to an expert who accurately predicted at the start of the pandemic the state of price increases and spending today. Find out who that is. That conversation in a moment's time. And speaking of spending, retailers on the rise after department stores posted strong numbers. We'll break down those retail earnings and hone in on consumer spending when it comes to our furry friends with the CEO of Petco. All eyes on you, Mocha Bear, our cat mascot of Taylor's. Meanwhile, so much more coming up, Romaine.
Yeah, so much more. We're going to focus a lot, of course, on the retail sector today, of course, after getting quite a few earnings here. Overall positive here is particularly when it comes to Macy's and Kohl's. You talk about what would have been margin pressure, but apparently those margins working in the favor of those companies, controlling inventory and controlling prices in a way that maybe we haven't seen for some of the other retailers. That's putting a little bit of a bid to stocks. Nothing major here, but back above 4,700. A lot of ruction still going on in the crude space. Gold slightly lower here on the day. And of course, we're going to talk a lot today, Taylor, about inflation.
And let's do it with some of the data we just got about an hour ago, the 10-year tips auction. And coming into this is going to be a key sort of signal of where we are in terms of hedging some of those inflationary pressures. Slightly lower bid to cover ratio than some of the averages, but BMO Capital Markets overall saying that it was a pretty strong result. And overall, you're mostly stable on the day within a nominal 10-year yield. But this really sort of highlights these inflationary pressures that we really talk about. Caroline, it is one professor from the Wharton School, which shall not be named yet at this moment. But in June of 2020, he came out and said that he's worried that the U.S. will experience a spending boom, saying that the first time in over 2 decades we're going to see inflation. Why? Because that is the money market account funds in blue. Take a look at the massive spike up that you had during the pandemic. A lot of commentary that it is this consumer that is driving the demand side of this inflationary story.
It was indeed in June 2020 that we first quoted that particular professor on this subject. And it is this week's Bloomberg Business Week focusing in on inflation, with a story out today on how those working in finance will have to make it or break it calls on the matter of higher prices after decades basically without inflation. But he saw it coming back in June of 2020. He said inflation will be here because we're going to have strong consumer spending. Jeremy Siegel is that professor who called it right. Finance at Wharton School of University, Pennsylvania. Victory lap for you, Professor, please, because you saw it, you felt it, you understood it. And what do you see of it now?
It's going to continue. It's not over. We've seen it go above 6% year over year. And I predicted that until this is all over, we're going to get about 25% cumulative inflation. Don't mean 1 year, but over 2 or 3 years, we're going to see the price level really rise by 20 to 25%. So this is not temporary. And by the way, it could get worse unless the Fed gets a handle on money supply growth, because that was the warning I saw early last year. And I do not see enough moderation to give me confidence that it's going to be over soon.
We'll talk a little bit more about that money supply growth here, and I think we can put up a chart of that. I mean, it's still high, Jeremy, not only relative to where it was in 2020, but of course, even today, and you look at it with regards to historical averages, even when you overlay it over other sort of recessionary and stimulative periods for monetary policy, it really hasn't been this strong. And is there any sense here that the Fed has the ability to really draw that down without, I guess, inadvertently creating a economic shock?
Well, I don't think the markets are prepared for how fast I think the Fed has to go. One more report like we got a couple weeks ago on the CPI, and I think they doubled the speed of their taper. They've got to start raising those rates. That's the way you curb the money supply. You raise the rates, get people to pay back those loans, slow down the spending. So much money was created during the pandemic to cushion the economic effects, but that wasn't pulled back. And that is what's flowing in. So the only solution for the Fed is raising. And you're certainly right. We had 34 years of 5.5% M2 money supply growth, 34 years until the pandemic. And it has been increasing at well double digits since then, actually over 25 to 30% in the 18 months since the pandemic hit. So we're way above any previous target or measure that we had.
Professor, before we get to the Federal Reserve's response to this, come back on some of the inflationary pressures that we see. A lot of economists out of the gate kept saying it's supply chain issues, it's a supply side issue. But I think what you've really hit on is it is a demand issue. It is the strength of this consumer that a lot of economists had been ignoring when they were only focusing on supply. Is this more of a demand story?
Taylor, I think you're exactly right on what I've been saying. Yes, there is some misplacement of containers and there are some disruptions in factories. We do recognize this, but to me, 80 to 90% is a demand shock. The tremendous increase in demand for goods that we see in the data, it just cannot be met. And that is why we're having, they call it supply side problems, but the source is a demand shock. And, wishing it away, saying, oh, when these containers get to the right place, this is all going to subside, I think is missing the big picture here.
But Jeremy, at what point will demand subside if we do indeed see that all compounded 20 to 25% level of inflation? At what point do you start to get a buyer's strike on those sorts of prices?
The only way is to start raising interest rates to stop the spending. We hope that doesn't cause a recession. If it's done mildly, it could. But right now, when I'm looking at the data, I'm beginning to doubt that there may not be a recession, but there would be a significant slowdown in economic activity. We have to curtail some of the buying in order to control the money supply and bring inflation back down to that 2% level. We could do it gradually, but I think already that cumulative 20 to 25% is in the works. Look at commodity prices. They've come down from the highs, still 20 to 30% above pre-pandemic levels. And look at wages. Certainly in the active market, in the market where people are getting the blue collar jobs, the new jobs, McDonald's, Amazon, they're all paying nearly 20 to 25% more than they did 18 months ago for their labor.
One of the big wild cards here, though, for the Fed, there's a huge mismatch between what's going on the ground for a lot of those blue-collar folks and, of course, what's going on in the markets at a higher level. When the Fed starts talking about reacting to some of these inflationary pressures here, and you talk about the overlay of wages, which, of course, are being eaten up by a lot of those inflationary pressures, does the Fed have enough of a handle on the idea that the reaction function to the market and the perception among people on the ground is not necessarily going to be in sync?
Well, you're perfectly right. The people that are gaining are those new, a lot of young people, new workers. They're getting these raises. But most of a lot of blue collar and white collar, they got their 3% raise in January. They've been getting it all along, maybe a little bit of a bonus. Well, look at inflation's over 6%. So the purchasing power's already been down 3%. They're going to come in December and January and say, I'm not going to take another 3%. I need 6% just to keep up with inflation. And the firms are going to grudgingly give it. You see with the labor negotiations, because honestly, they can pass on those prices to the consumer ultimately and maintain their margin. This is the built-in part of inflation that is very, very hard for the Fed to contain just by saying, this is temporary. They've got to slow spending.
So on that note, and I would argue, I spoke with Howard Marks of Oak Tree Capital Management yesterday, and he agrees with you. The Fed should be moving faster. The Fed should be getting out of the market's way and let sort of these free markets come back again. How much faster, both tapering and rate hikes, then, do you think the Fed should be moving?
Well, very honestly, I think the taper should have ended 6 months ago. They're still putting money in the system during this taper, and Powell is still talking about this gap between ending it and raising rates. We have to be raising rates now, in my opinion, to get a handle on the inflationary pressures.
Professor, the bit I don't understand, though, is that if you look at the confidence levels, if you look at the consumer sentiment, the University of Michigan levels, inflation has been a great worry of the consumer for the last few months. They've put it up elevated. They're feeling really negative on it. I don't understand why, therefore, Macy's numbers come in so strong. The department stores are doing so well. People are still purchasing. At what point does the natural consumer sentiment pull back demand, not just rates?
Well, what people are really worried about, and you pointed, it is inflation. They've got the money, and now they're seeing the inflation. A lot of them, said, wow, look at, I'm getting money. I got money from the government, I have more savings. Bank accounts went up. And now, so they're seeing the reality of that is that inflation is eating away at that sentiment. That is the cause. You're absolutely right, of consumer sentiment going down. You want to know the truth? The public seems way ahead of the Fed. I don't, the staff at the Fed should have seen this coming 3 months ago, 6 months ago. But, the truth of the matter is 25 years without inflation, I think, brought the mindset. All the warnings have been, Chicken Little, sky is falling. They weren't right. This is another one of those. The problem is this is not a Chicken Little. This is actually where stimulus on a level we had just never seen before.
Well, I mean, going back to money supply, and you sort of just touched on this, the idea of, I guess, the amount of money that most consumers, most households had during the heights of the pandemic, that savings rate, of course, we saw it get up into something like 33%, I think, at the peak. That's come down pretty dramatically here. I mean, that's the real taper we're talking about here. We're now down to 7.5% here, basically getting back towards those longer-term averages here. Why hasn't the Fed reacted to this chart that we have on the screen right now? The personal savings, that's sort of the ammunition. That's the cash on the sidelines, the cash under the mattress, and it's not there anymore.
Yeah, but don't forget, when we talk about savings, that's as a percentage of income. All that big saving we have is that built up purchasing power that as soon as the pandemic eased enough and people went back is pushed into the market. So you're right in the sense that they're not accruing as much as they did before, but that, pile of cash is now being used to make the purchases that I think is driving that inflation. And as you see, the money supply numbers, and I look at that M2, which is a little bit broader than the chart you showed, it's still increasing double digits. And again, as I mentioned, for 34 years, between basically 1985 and the beginning of the pandemic, it was 5.5%, and that kept inflation at 2%. And now we're in double digit after a tremendous burst, and that money is still going to be flowing into the economy.
All right, Jeremy, always great insights. And, of course, you've been ahead of the curve quite a few times through a variety of business and market cycles. Of course, Dr. Jeremy Siegel, of course, professor of Wharton, of course, author, of course, of Stocks for the Long Run. All right, coming up here, we're going to continue talking about inflation. Think about all the central banks that have been tightening. Thailand, right? You talk about South Africa. Yep. You talk about all of these nations.
Poland, some of the Eastern Europe.
Turkey, for some reason, has decided that now would be the best time to actually ease monetary policy. And well, you're looking at the reaction there of the lira. It got down to 11 at one point on the day. We're going to discuss that, plus a whole lot more coming up on this show. We're also going to talk, about shoppers. They're still spending. Jeremy Siegel was just talking about this here. We continue to see the strength of the consumer helping to sort of boost this economy. Retail earnings out, Macy's, Kohl's, BJ's, a whole host. We're going to break it all down for you. And we're going to talk about, Petco. They did beat estimates, but wow, the shares are really down on the day here. Petco CEO, a friend of the show, he's going to be stopping by just a little bit later to talk about what's going on in that space. All that more coming up shortly, right here on Bloomberg.
Think competition is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever, but nevertheless, talk to me about what you think the competitive landscape is going to look like here.
We've seen a bit of departures in this market, and this market has three very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the U.S., New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one directional traffic from the US to the UK, and now it's open, of course, to UK nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think inflation is getting to be a lot more structural for 2 or 3. Happens is when you start seeing sticker prices of 6 and 7%, that starts building inflationary expectations. And once inflationary expectations get anchored, then you get into the spiral. So I don't think it's such a temporary phenomenon.
I am concerned about inflation because I think at the same time as the supply chain recovering, there are some new issues. Supply chains are repositioning, partly because of geopolitics, partly because of resilience considerations by governments. Oil prices are going to remain high for quite a while.
When I step back and I think about my 40-year career, there have been periods of time when greed has far outpaced fear. We were in one of those periods of time. Given that it feels like inflation's running above trend, chances are interest rates will move up. And if interest rates move up, that in and of itself will take some of the exuberance out of certain markets.
Those were top executives discussing inflation, all from the Bloomberg New Economy Forum. And I want to do sort of a global inflationary story with our emerging markets reporter, Sydney Mackey. And Sydney, we're just coming off of a sort of U.S. focus on inflation, but it is a global story. And you've really started to see some global EM central banks tackle inflation by starting to raise rates.
Yeah, absolutely. So today out of South Africa, we actually saw the central bank raise their key interest rates. So that was the first time they did that in 3 years. Sort of regardless, the rand, their currency there, started falling. So that gets into how complicated emerging market currencies can be and how high stakes it is for traders to figure out what's going on and what markets will be expecting next.
And the markets have given up expecting what the Turkish central bank is going to do, I assume, or do they always now anticipate that it will go the opposite direction of what sort of economic theory often tells us to do?
Right. So today we had a 100 basis point cut, which goes against the 20% inflation that we're seeing in Turkey. There's a lot of risk swirling in the nation's currency, and we're seeing that play out in the lira, which fell to sort of a key 11 level today. So going forward, I think traders are going to be trying to figure out how exactly the central bank will continue to cut rates, sort of regardless of inflation. And some of that can have to do with how the political sphere is weighing onto monetary policy.
And it's weighing pretty heavily over there in Turkey. It's weighing in other countries as well. I mean, we talk about what's going on in South Africa, what's going on in Latin America. You're seeing a lot of sort of pressure on the peso right now because of, I guess, moving in the opposite direction.
Yeah, absolutely. So actually, we've seen quite a bit of movement in the Chilean peso today, and that's coming off of more of a political story. So we have the presidential election coming this weekend, and we have a very conservative candidate and a former student leader. So traders are sort of trying to weigh which way the election will go and how you hedge that risk beforehand.
Yeah, well, a lot of risk out there. I guess the emerging markets are always risky, but it seems maybe a little extra risky right now.
Yeah, absolutely.
All right, Sydney, great stuff. Sydney Mackey there, Bloomberg News, helping us break down what's going on in the emerging market space. We'll be back in a moment with a whole lot more. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Will we get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point, when the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
Wholesale financial decoupling is impossible, and partial decoupling is likely to make the United States, China, and the world more susceptible to financial crises. It is crucial that we have mechanisms for the world's first and second largest economies to coordinate, because the only way to put out the next big fire will be with global coordination.
Former US Treasury Secretary Hank Paulson there, of course, speaking at the Bloomberg New Economy Forum and sticking with all things China. China e-commerce giant Alibaba moving lower after slashing its outlook after the company's quarterly sales numbers. They missed estimates. There's a big move down by some 11%. The China slowdown really hitting, I mean, it's intensifying competition, dwindling consumer spending, which is, of course, going to hit if you're the biggest e-commerce player out there.
Yeah, and that hit. And then did you see the write-downs? I mean, they had a massive write-downs in a lot of those investments. Obviously, a lot of that was tied to the crackdown in China. I mean, when you're sort of invested domestically like that, and then you get those domestic moves, this is sort of the outgrowth of it. But this is now a question of management story. When I woke up this morning and I saw the story, my first thought was, who's the CEO right now?
Good question.
Not Jack Ma.
Well, I know who the CEO is. It's a trick question. But the question is they don't have a permanent
who's actually
CEO.
running it?
It's the former chairman who's basically running things right now, at least the optics of it. But it raises a question of how you manage through a situation like this, particularly when you don't have an operational leader or the visionary leader that you had prior with Jack Ma.
And for anyone who's watching some of the street reaction, it's not just a next quarter issue. It's a longer term 2023 issue as well. Some of the analyst notes we were reading says more alarmingly, it's the full year 2022 that's well below growth estimates when you think about some of
But
those
it's worth remembering Singles Day was a real success. What does that then mean for next quarter's numbers?
That's a good question. We'll have to be back for Singles Day, 11/11. 22? Doesn't really ring.
This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I'm Mark Crumpton with Bloomberg's First Word News. German Chancellor Angela Merkel is holding talks with regional leaders to agree on tougher restrictions as the nation's coronavirus cases rose by more than 65,000 for the first time. Meanwhile, wearing a face mask reduces the risk of getting COVID by more than half. That's according to a review of 8 studies published in the British Medical Journal. And a more infectious new version of COVID-19's Delta variant is spreading fast in the UK, but it seems less likely to cause symptomatic COVID. In the United States, 25 states are seeing a rise in hospital admissions for coronavirus. That has health officials warning against large indoor gatherings for next week's Thanksgiving holiday. Nationwide, the 7-day average of new daily cases has increased 11% this month. At the White House today, the leaders of the United States, Canada, and Mexico are holding their first in-person meeting since President Biden's election. Among the issues likely to be discussed, energy, borders, and auto manufacturing. Trade disputes remain despite the rewrite of NAFTA, the North American Free Trade Agreement. Rupert Murdoch is telling former President Trump to leave the past behind. At the News Corp shareholders meeting, the media mogul said that it is important for conservatives to play an active role in the national debate, but he said that won't happen if the former president stays focused on the past. Murdoch's empire includes Fox News Channel and the Wall Street Journal. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
This is Bloomberg Markets, the close, a little after 2:30 here in New York. Let's get you caught up on what's happening in the commodity space. Settlement right now of NYMEX crude futures looks like for a second day in a row, we're going to settle below that $80 a barrel number there, though higher on the day, up by about 0.7%. Still a lot of folks in waiting mode to see what the next step is going to be, of course, by the United States. A big report, of course, out earlier this morning about a potential coordinated effort of a release of oil reserves worldwide. Gold futures down here on the day. Arabica coffee beans, which had been higher by about 2% in futures markets, pulling back a little bit here at settlement, and wheat futures doing a similar about face. They had been higher on the day. Looks like they're going to settle a little bit lower, right around $8.31.
Meanwhile, let's shift away from what's just been happening in terms of supply chain on the commodities front to what's happening in terms of supply chain when it comes to the bottom line of certain companies at the moment. I'm pleased to say that we welcome now a key company that's been reporting and actually faring pretty poorly in the day from a stock price perspective, but maybe we can get the longer term focus from Petco CEO Ron Coughlin with us. And we want to talk about how Petco is currently, I mean, it's always hard when you've just listed, and for once your shares are down significantly. It's the worst day since your IPO. And it seems to be about worries of margin, the profitability when prices of certain goods are going up. Should investors be this worried?
Yeah, so first, back to the IPO. If you look at the average IPO since its IPO price, they're up low teens. We're up 21 as of the price. Even though we don't like the price today, we're up 21 versus our IPO price as of today. That said, we had a great top line. We were up 15% on the top line, up 17% on the bottom line, but we had some hit on our gross margin line. What's unique about us is that hit was from consumables, food, and treats. We're so strong. So the category grew 13%. Our consumables grew 21%. So that's a sticky customer. The long-term value of that customer is higher, but in the near term, it created a margin mix issue versus supplies. Because year one, what happens is you get beds, you get crates, and then year two, food.
Food, and then at some point, though, I guess I would think there would be somewhat of a concave function there. What do you tell analysts out there and other folks on Wall Street who say, when do you get those margins back? When does that person, from year one down to year two, end up going back up in whatever year down the road?
Yeah, so what we said is that the two consumable and supplies numbers will normalize as we go into next year. We said Q4 will look more like Q3, so we said there would not be more erosion into Q4. But again, a strong consumable business is great for a pet business. So we like the consumables business.
How are some of those inflationary pressures affecting the consumer? We've had inflationary conversations now for 34 minutes. Our entire show has been, when does the consumer start to react? You've been on the show before, and I think, correct me if I'm wrong, I've said we love our pets almost more than we love ourselves. I will spend more on my pet and cut back if there is a pinch in my household budget because there's that sort of affinity for them given the pandemic. Can you then pass on costs faster to the consumer because they are willing to pay more for some of those pet items?
Yeah. So in terms of loving your pets more, I'll give you a funny statistic. They just surveyed pet parents. 80% said they were looking forward to spending the holiday with their pet versus their family.
Yes.
So yeah, that's not a isolated instance. But it's one of the highest price resiliency categories there is. For Petco, we have some of the highest spending pet parents, so it has high price resiliency. But that said, we have great products at all different price points depending on your wallet. But one of the things that's really taken off is fresh frozen, and that's probably the highest ring and the highest frequency of trip in our store. So it's there doesn't seem to be limitation, and we now know that most of those pandemic pets were adopted by millennials and Gen Zers who spend even more than prior generations. So the upward trend is going to continue.
So if there isn't that limitation, you said you could consider raising prices again. Will you? What takes you there to feel that now is the right time to boost prices?
Yeah, so we obviously work with vendors to try to moderate any impact to the consumer. But in terms of prices that are passed on to us, we've been able to pass those through. We also have pricing in our grooming salons that we've had to take. So, we have to offset some of the inflation that comes at us. It's a balance.
Yeah.
It's a balance.
There's still a question, though, of differentiation. And we've heard this come up every quarter, is that what's going to stop a consumer from saying, I'll go to Chewy or I'll go to even a local pet supplier rather than going to Petco?
70% of our merchandise isn't sold at those other scale players. So if you want just food for dogs, you either have to go to Just Food for Dogs or if you have to go to Petco. Our high-end kibble, unique to us, Wholehearted, our own brands. Or 50% of our supplies are our own brands. So we have the ability to, we have unique merchandise that relatively insulates us.
Does that create any issues with regards to the supply chain, with regards to production, with regards to transportation of those goods?
It's the opposite, actually. If you look at the commodity products, if I had to compete with Walmart or had to compete with Amazon to get that product, I'd be pretty low on the prioritization. But those high-end products that we have, we're at the top of those prioritizations, so we're doing better, actually, which is why our consumable business is so strong, because we're being supplied well.
Are most of those products made domestically or overseas, though?
Food is almost all domestic.
Okay.
So what we said on our earnings call is roughly 30% of our revenues are exposed to international supply.
Right. Okay.
A lot's been said about the digital strategy. I think everyone's pivoted to a digital strategy by now. If you haven't, you're probably not in business.
Yeah.
How is the digital strategy competing on like the shipping costs, where some people are loyal because if you spend over $50, you get free shipping. It's super easy just to continue to go back to that company. Where is your digital strategy? How do you feel about it?
Yeah, great question. So first, our repeat delivery, which is, you sign up and you get it delivered to your doorstep, was up 40%. 50% of our e-commerce revenue is recurring revenue, so that's good. Our e-commerce business on a 2-year basis did over 150%, one of the highest in all of retail. On a 2-year basis, we did over 30% this past quarter, which was really strong. But I have this little theory about retail 1.0, 2.0, and 3.0. 1.0 was the Sears and the mass players were going to take over the world. 2.0, the online players and Amazon was going to take over the world. And 3.0 is the promise of omnichannel that we've all been talking about, but the pandemic accelerated it. When you have that online plus the pet care center experience, number one, that's advantage, but number two, we ship 80% of our e-commerce orders from our pet care centers, our stores. They're lower cost and faster to the customer, and that's competitive advantage.
I'm not going to start asking you about metaverse and how that fits into the 4.0,
yeah.
But what
You're way above my head on that.
But Ron, what I am interested in is actually the people now, because we talk plenty about the consumers and about the love of pets, but what about your labor force and how much are they wanting to come, stay with you, remain loyal, and how much are you having to meet them on some wage increases?
Yeah, so the only word I would change is having. We have been proactively raising wages. So we were up double digits before the current labor crisis. One of the first things I did is I gave bonuses to all of our employees, not just to management. We've set up employee emergency funds, et cetera. We've absorbed every healthcare cost increase since I've been at the company to reduce employee copay. So we have raised that. And what that turns to is our attrition rates in pet care centers for full-time employees is actually lower than it was in 19. And here's the amazing thing. Our applications are up 40% since the beginning of the year. So when you have that value proposition of, hey, if you love pets and you want to be treated well, Petco's a great place. It's working for us.
All right, final question. This one's, I guess, for the investors as well. How's the debt situation going? And can any investors out there expect a dividend in the future?
Yeah, on the debt, we once again reduced our debt level and paid down further debt. And from a dividend standpoint, right now, we have such great opportunities for growth. So between debt pay downs and pursuing those growth, whether it be digital, whether it be the fastest vet build out in history, now at 173, we're focused there. Once we get past that, the good news is we're a cash generation machine, and we can look at some of those options.
This one's for me. How's Yummy?
Yummy is awesome. I am missing him. I've been away for almost 9 days, so I'm going to see him tonight, and I'm looking forward to it.
All right, Ron. Always great to catch up with you. Ron Coughlin there, the CEO of Petco. All right, still ahead, we're going to stick, of course, with the consumer, what's going on there. Bath & Body Works hitting a 52-week high. This after our earnings beat in its first quarter as a standalone business. That's our stock of the hour. Coming up next, from New York to our viewers worldwide, this is Bloomberg.
an extra $1 trillion in spending, not increase inflation?
By increasing the productive capacity of this country. And that's a very important thing that we frankly have not successfully done across most of my lifetime. You know, I've been waiting for this legislation for months since I became Transportation Secretary, but various presidents have been hoping to reach this day for decades, and it hasn't happened for all kinds of reasons. The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future. Let me also point out to the fact that Part 2 of the President's agenda, what I like to call the big deal, but Part 2 of that, the Build Back Better Act, has even more that will help beat back inflation by lowering some of the costs that Americans feel most acutely, the cost of childcare, the cost of health care, the cost of housing, the cost of prescription drugs, bringing those down while also making sure that we ease some of those labor market issues we have by making it easier for working parents to afford to go back to work.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says I look like I'm 101.
I noticed that.
Do you think I need a lift? Is it time
what
that
did it say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I have no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
The mobile app is doing exceptionally well. So let's talk about the paid users for a moment. Our strategy has been to create value-added experiences that our users want to pay for, that adds value to their experience.
Time now for another stock of the hour for you, because we've just been doing Petco. Now let's do Bath & Body Works after its earnings. And of course, as a standalone company. Let's get Kriti Gupta to examine how the results look. I mean, the shares are popping.
They are, in a big way. They really came out, they beat their estimates. And we've been hearing this across the board, though. We've been talking about retailers, whether it's Macy's, whether it's Kohl's, whether it's Home Depot, doing really well. No one expected the bid for lotion, for hand sanitizer, for hand soap products, basically.
To continue.
Right, well, to continue, right, because they had this big pandemic boom. Everyone ran out of hand sanitizer, including Bath & Body Works. But look at this, net income up $244.8 million. The estimate was $160.9 million. That is a 52% increase in the third quarter. But of course, it's not all sunshine and rainbows. Some things that actually fall, and direct sales is what that something is. But on a year-over-year basis, that's really the story for Bath & Body Works, because it comes back again to that pandemic boom. So what are they doing now that the holidays are coming up? The third quarter inventory was up 30% year over year. 80%, this is the one I think is interesting, 80% of those products were sourced in the U.S. to avoid the supply chain issues, to avoid the shipping issues, and any kind of tariffs, any sort of cross-border issues. And on top of that, they increased their margins. They really are bracing for what's coming up next quarter. But let's talk about the stock in particular, because not only is it up today, but it's been up slowly and steadily for the past about year and a half, really, since their spin-off from Limited Brands. Remember, this was under the company Limited Brands, which also owned Victoria's Secret at the time. And if you now compare the two spin-offs, Victoria's Secret had this major boom and then kind of slowed down. Bath & Body Works did it differently. Like I said, slow and steady.
But that's different, right? Well, what Victoria's Secret, they sell more stuff, and Bath & Body Works is just, I assume, on Bath and the Body.
Right. Well,
well, you never know. They might diversify.
I encourage everyone to go visit a Bath & Body Works.
They have a 3-in-1 hair and face and body wash.
They have everything. They
and
even
have. This is the men's part. They have Whiskey Reserve, Noir, and Classic Flannel.
Oh, is that what you want for your Christmas present?
I don't think I want to smell like Classic Flannel. Now I think Matt Miller might want to smell like Classic.
Yeah, he might wear it tomorrow if you're not careful.
You speak of the holidays, the Christmas shopping that Romain's doing while on set, on air, trying to do his regular job too. What is the evidence that these holidays are going to be full of consumers willing to spend?
Yeah, well, you're already seeing it, and it's foot traffic. It's really the best gauge of people going into stores and spending, because with e-commerce, you can spend, you can return. It's a little bit more fluid. But with shopping, people are actively going in to shop, to not just to window shop, to actually spend money. And right now, store traffic is up across the country, across the board, and beauty is really what's leading it. And right now, lotion, etc., does actually fall under the beauty category.
I keep hearing this. We got to do our show like at a mall somewhere, because I keep hearing that the foot traffic is just off the charts right now at some of these malls and some of these
Hudson
retail
Yards?
stores.
You're going to do the American Dream Mall?
The American Dream Mall.
Muni Bonds.
I heard the ski lift is broken.
Oh, how's the Lego store though? That's all I care about.
wet.
Can I just say the best kids' toy at the moment is a catalogue. My kids are obsessed with the Lego catalogue, the Amazon catalogue. They sit there for hours just like circling whatever fictitiously they might want. Yeah. I'm not buying an $800 Lego kit for them, though.
Okay. All right. Well, there you heard it first.
Insights. Nothing but value add.
All right. Well, sorry to Caroline's kids. You get nothing but catalogs this year. Bloomberg's Kriti Gupta there with our stock of the hour. We're going to continue, of course, on this topic today. A lot of people are shopping in stores, as Kriti just said. They're also shopping online. Macy's and Kohl's appear to be straddling that line. We're going to dive deeper into those earnings right after the break. This is Bloomberg.
Common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector, in Scotland around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising. All right, time now for our top calls to look at some of the movers on the back of analyst recommendations. First up, Oatly, upgraded to overweight over at Morgan Stanley with the $14 target. The analyst calling it a fallen star. Of course, shares down 70% from that all-time high, but now saying valuation looks a little attractive relative to long-term growth. Shares up about 6% on the day. Next up, Hilton Grand Vacations upgraded to buy over at Jefferies, 62. That's the new target. The analyst citing recent acquisitions and the company's third quarter earnings. Hilton Grand up 6% on the day. And last, let's take a look at NVIDIA. The price target there going to 365 from 225 over at Raymond James. The analyst citing supply increases as the data center demand continues to accelerate. NVIDIA having a great day, record high, up almost 9% on the day. And those, Caroline, are some of our top calls.
Some great top calls. And we are not stopping on the corporate news there. We're going to dig now into Macy's, Kohl's, reporting stronger than expected third quarter results today. Both of them showing consumers they're back. They're back in department stores of all places as they gear up for the holidays. For more, we're joined by Bloomberg's John Edwards. And it's fascinating to me that we all sort of wrote off department stores. We thought they were dead, and no, seemingly everyone wants to get back in them. Why?
No, they are absolutely not dead. You know, it's the amazing strength of the consumer that we're continuing to see, and it's basically anyone who has goods to sell is going to be able to sell them. And so department stores, people are looking at them with fresh eyes, saying, you know, I want to buy things. You know, I've got some money either from stimulus or from savings, excess savings from the pandemic, and department stores have a lot of stuff all in one place.
It's there. It's tangible.
And it's exactly that. So they're thriving.
Well, let's talk about what they actually have, because there was a lot of concern. I mean, a few months ago, you walked in some certain stores, and the cupboards were bare, literally. Yeah. And we've started to hear from some of these companies that their inventory levels are much higher, and that appears to be deliberate to try to make sure that when people come into the store, they can actually buy something.
Yeah, that's that's exactly right. And I think because these chains were so worried about having enough available to meet demand as people started coming in, they've managed to do pretty well at navigating the supply chain difficulties. I mean, I think we saw some of the retailers earlier in the week, like Walmart and Target, talking about high costs that they were not really fully able to pass along. But Macy's and Kohl's, having the reputation of offering discounts but not being discount retailers, they have more pricing power.
Talk to us about the strategy, believe it or not, of in-store shopping, where Kohl's in particular at one time had that partnership with Amazon where you could return things in-store, and that was, I think, deliberate to get the foot traffic in a Kohl's store.
Yeah.
A Sephora partnership, right?
Yes.
How much of this is a bet on bringing people back into the store?
Yeah, I think, retailers like to call it an omni-channel approach, so they want to meet you wherever you are. And Macy's specifically said today that they find that having a physical store available helps their e-commerce and vice versa. They sort of feed each other. So they definitely want to pursue both, but I think people are particularly excited about Macy's with their digital strategy. They announced a new digital marketplace coming in the second half of next year, and they're exploring exploring possibilities for their digital business, which activists have wanted them to do.
I'm really interested in how much, I felt like Etsy and those companies got a pop in the hope that they were going to do particularly well when inventories run low, when people aren't able to source things. Is there going to be a flip side that some of these companies don't get that halo effect because actually all these other bricks and mortar companies have served themselves so well?
Yeah, that's very possible. I mean, it definitely seems like there's not going to be a wholesale shift away from brick and mortar. The old line retailers, they have trusted brands. They're in front of people's faces. And people, I think, also coming out of the pandemic, which is fits and starts, but they're realizing that they want to be out in the world, shopping, and feeling goods and picking them up.
Just real quickly, is there any sense here that there's been a pull forward in some of the shopping? Because everyone was saying, buy everything now because it's not going to be around if you try to shop after Thanksgiving or something.
Yeah, a lot of retailers have really pushed that, and I think we've seen considerable evidence of it. And so as we go into next week and go into Black Friday, it's for a lot of reasons it's going to continue the trend of being slower and slower. Not as many people in stores, and I think part of that is the pull forward. Yeah.
All right, John Edwards there, Bloomberg News, helping us break down a lot of the retail earnings. Of course, a lot of those retailers are the big movers on the day: Macy's, Victoria's Secret, Kohl's, Children's Place, Signet, Guess. Also want to bring you some breaking news here. This is more of a reiteration of the news that we broke the other day about the selection process for potentially a new Fed chair. Jen Psaki, the White House spokesperson, reiterating the Biden plans to make a Fed decision before Thanksgiving. Of course, that is 1 week away from today. All right, let's get you caught up on what's happening in the broader markets here as we reset and get ready to count you down to the closing bell.
S&P 500 up 0.3%. Russell 2000 again having a lousy day of it. It feels as though there is desire to get into the big caps. The small caps, the question of the economy, the question of the inflation is still very much on investors' minds.
A 10-year yield that is mostly unchanged on the day. You're holding in relatively steady at a 158, but really the long-term trend has been a lot of range bound in some of these yields. This is Bloomberg.
there's a pretty good chance that you use products made by Meta every single day. If you've never heard of Meta, that's because it's the new name for Facebook Inc., the parent company of Facebook, Instagram, and WhatsApp.
All right, perfect.
In a spiffy presentation on Thursday, Mark Zuckerberg showed off his vision for what he's dubbing the metaverse. That's a sort of mix of augmented and virtual reality worlds which will let the user explore virtual ecosystems. Much of what he showed isn't yet available. It's really his vision. In that sense, it was more like the sort of presentation Elon Musk does, where he looks at what he hopes might happen one day, than what Steve Jobs does, or Steve Jobs did, which is showing off products he already has available. He also, in the course of it, announced a name to Meta. The company will be called Meta from now on.
Our mission remains the same. It's still about bringing people together.
That's an effort partly to show the vision for the future, but also a way of casting adrift some of the toxicity associated with Facebook. But if this new company is going to be a success, or the new company vision is going to be a success, he will still have to deal with a lot of the same challenges that Facebook has faced. Concerns about privacy, content management, those are going to be just as pertinent, if not more so, in the metaverse as they are right now on Facebook's existing apps.
It's a question of how do we, as rapidly as possible, transition ourselves away from a fossil fuel-based economy, and that, of course, has a huge focus on the transportation products, but it also includes energy products.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
I'm Mark Crumpton with Bloomberg's First Word News. President Biden says he's considering a diplomatic boycott of the upcoming Winter Olympic Games in Beijing. That means the United States would decline to send a delegation of government officials. The president made the comments during a meeting with Canadian Prime Minister Justin Trudeau today. Some lawmakers have urged a boycott to show American disapproval of recent Chinese economic and military actions and the country's human rights abuses. Billionaire Bill Gates says that COVID deaths and infection rates may dip below seasonal flu levels by the middle of next year.
Well, the vaccines are very good news, and the supply constraints will be largely solved as we get out in the middle of next year. And so we'll be limited by the logistics and the demand. The idea that economic activity will resume in full once you get to flu levels, it's very likely.
And Mr. Gates made his comments today at the Bloomberg New Economy Forum in Singapore. Bloomberg has learned the United States will pay Pfizer $5.3 billion for an order of 10 million doses of its experimental COVID-19 pill beginning later this year. The purchase is contingent on U.S. clearance of the COVID oral antiviral, which Pfizer has already applied for. Pfizer says it will invest as much as $1 billion to manufacture and distribute the pill. Microsoft says Iranian groups are increasing attacks against IT service companies to invade customers' networks. Microsoft put out more than 1,600 notifications to IT companies in response to Iranian cyber attacks in 2021, compared with just 48 last year. Most of the targeted companies are based in India. Several are also based in Israel and the United Arab Emirates. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
The most crucial moments in the trading day. This is Bloomberg Markets, The Close, with Caroline Hyde, Romaine Bostick, and Taylor Briggs.
Counting you down to the close, less than an hour to go in this day of trade.
Yeah, and look, the markets are really looking for direction. A lot of the inflationary pressures, that continues to be the story, but you're still seeing people kind of pick off at the margins.
Yeah, and that's interesting because you're seeing sort of that push-pull feeling within some of the sector levels as well, with the overlying headline index in the green, but overall then it's mostly 50-50. I will say with technology and some of these consumer discretionaries remain, those are up more than 1%. That really sort of hinted that push-pull within risk on and maybe some defensiveness.
Yeah, and you see that reflected in some of the individual names I have on the board. NVIDIA, that's basically your outperformer on the day. The earnings really were lights out here. Jensen Huang, and you talk about the valuation, and I should say the shareholder value that he's created just over the last couple of years. You're talking about basically a company that's doubled its revenue over the last 2 years, almost tripled its operating income here. And of course, for shareholders, you're basically sitting on about a 500% total return gain here over the last 2.5 years. Apple shares higher on the day. Mark Gurman reporting that the company moving closer to sort of making a decision on that sort of self-driving car, actually moving towards a fully autonomous vehicle rather than sort of a limited sort of self-driving vehicle like we have on the road today. Cisco Systems going down here. Supply chain issues really hurting the company, and that transition that Chuck Robbins has been trying to make from hardware to software. Apparently that's not coming fast enough. And Rivian Automotive, which of course more than doubled off its IPO price, giving back some of that today, down 15% today after a 15% drop yesterday.
Bit of profit taking, maybe in the world of Rivian. Also, when we talk about the overall macro theme, it has been one of inflation. It has been one of when we get to hear about the new members of the Federal Reserve. All of that got the market on tenterhooks. It was interesting. Seth Carpenter, of course, of Morgan Stanley, the global economist there, joined a little bit earlier. And no news on whether or not he'll be joining the Fed anytime soon. He laughed that one off. But he did have some interesting takes in terms of how inflation is just so distorted when you look at what's happening on Main Street versus Wall Street. Take a listen.
There is a massive disconnect between the way that macroeconomists talk about inflation and the way that everyday real people talk about inflation. People who are in the course of their everyday life are not running regressions. They're not sort of scanning the data to see what's going on. They're paying attention to how much money they're paying to fill up their gas tank. They're paying attention to how much money they're paying at the grocery store when they buy food. It seems entirely reasonable for the average person to be feeling the high prices that are going on here. And I think therein lies a real big communication challenge.
Communication issue that could become even worse, Romain, because while the Fed looks at PCE, the world is looking at CPI. There's a distortion there that sometimes it's very hard to get across. And it's interesting what we were talking about with Jeremy Siegel a little bit earlier, into all of that.
Yeah, and the world looks at the prices they pay at the grocery store and what it costs to fill up their gas tank. Those are high, a lot higher than what they used to be. Let's bring in our next guest right now. Carissa McDonough, fixed income strategist for Community Bank Trust Services. Get her insights on the market. And particularly, Carissa, we want to get your insights on how inflation folds into this market. Inflation that is, for lack of a better term, very real right now. I guess the question is can the market adapt to it, and will the Fed react to it?
That's a great question. Thanks for having me. I appreciate it. I think, some of the inflation numbers that we have been seeing, I mean, certainly the print that we saw last week was well above market expectations, and it was, quite a shocking number. But I think what we need to look at is, let's recall that one of the two mandates that the Fed has, it's controlling price stability and unemployment. And for the last, 30 years, the Fed has not even reached its 2% inflation target. So when we have just a matter of a couple of months of a higher print, because the economy continues to work to open back up and we've got those supply chain issues, I think that the Fed is really looking past this. And, a few months or even 12 to 18 months, that's still considered transitory. So what we also see in terms of, inflation expectations priced into the market, they're very high for the next 2 years. In terms of those break-evens between nominal rates and tips rates. But if you look out even 10 years or 30 years or 5 year forwards, those are all much lower, which suggests to me that the market is actually somewhat comfortable that the Fed is effectively looking through and is going to manage this transition wisely.
And is that why the 10-year can't even get close to a 2%?
There's so the two primary factors that go into nominal rates are growth expectations and inflation expectations. And yes, like we have really high inflation today, but like I said, the market is not expecting that to persist longer term. So if you're looking at 10-year rates or 30-year rates, those expectations are actually lower. And then same with growth expectations. Usually economic growth is the strongest when you're first coming out of this recession. This was a very unique short recession, a deep one, but it was short. We're already seeming to move past kind of the highest levels of growth expectations, and it's going to start to moderate longer term. So if we see both of those primary components moderating, then it stands to reason that interest rates would also moderate and not raise across the curve. Longer term rates are going to kind of stay range bound, like you said.
Stay range bound. What therefore? I mean, have you been making any changes to the overall portfolio or allocation of late when we've been range bound, but we have seen bouts of volatility?
Yeah, so that's an excellent question. So, in the old days or whenever we talked about, the Fed hiking rates, well, duration was this terrifying concept that you were opening up your bond portfolio to, any degree of rate sensitivity was certain to mean losses in the bond portfolio. That's not necessarily the case today. If we expect that interest rates in very shortest maturities are the ones that are going to be rising the most because of Fed hikes, and longer maturities are going to stay range bound like we just talked about, this would actually be a reasonable time, whether you're talking about your equity portfolio, take some of those gains you were talking about and put them back into more of a longer term, treasury or corporate type allocation. Short maturities is where the losses are actually going to be. And so this is a reasonable time to kind of extend duration, and it's a unique time for bond investors to kind of get comfortable with that concept.
It's going to take some, I guess, convincing, though, Carissa, because a lot of people, they look at, I guess, the performance in recent years when rates were basically at zero or near zero, and then they kind of factor in the prospect that, okay, we could be normalizing here. Is there a way, I guess, to sort of hedge against the possibility that maybe that duration play does not sort of match up one-to-one with whatever's going to come down the pipe with regards to the change of monetary policy?
Yeah, that's an excellent question, too. So, you should be always careful about the exposures that you're putting into fixed. I mean, fixed income is essentially all about risk management. So I'm not suggesting that you load up on necessarily 30-year treasuries, but, to the extent that you can get closer to the kind of the market duration around a 5 to 6 year duration position, but you would also kind of temper that with some credit, because companies at the, during this cycle, they're the best capitalized they've effectively ever been. They've all pushed out their maturities. So in terms of taking on credit risk, this is a reasonable time to do so. Mortgage-backed securities, another place to go, which is quite interesting. Again, if we're feeling more, more reasonable about duration exposures, that would be also a consideration.
Great to get some picks for the here and now. Carissa McDonough, we thank you so much. Fixed income structures for Community Bank Trust Services. Stay well. Meanwhile, coming up, we're going to be keeping a close eye on these markets, as we always do, as we run up towards that closing bell. Kristen Bitterly's with us, Regional Head of Investments for North America at Citi Private Bank. And we're going to be digging into the world of crypto. Gemini Crypto Exchange completing a $400 million funding round that values the company at $7 billion. We'll look at why the valuation of the crypto-related startups are, well, some would say ballooning. And we bring you more conversations from day 2 of the Bloomberg New Economy Forum. It is HSBC CEO Noel Quinn. Controlling inflation, perhaps Bill Gates on controlling the COVID-19 pandemic. We hope. All that and so much more coming up. This is Bloomberg. front, when your shares are down 20%, it's got to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution, fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is the countdown to the close. About 46 minutes left to go here in the trading day. Another sideways day like we've seen over the past few days. S&P 500 higher on the day, but only by about 0.3%. You are seeing big tech contribute to a big part of the move that we are seeing higher. Some of the smaller cap cyclicals not necessarily participating here. Your 10-year yield basically still camped out where it's been now for the last few days, right around 160. The VIX slightly elevated here on the day. The other big driver, of course, in this market is what we're seeing in the retail space. You take a look at Macy's. Of course, that's your outperformer on the day, up about 21% here on Macy's after a good earnings report that not only showed good growth with regards to revenue, but more importantly, holding those margins. That seems to be what a lot of investors are looking for, rewarding those companies that can do it and punishing those that can't. BJ's Wholesale also had a great quarter, although they did not provide any guidance. That caused some concern, but then investors shrugged it off, sending those shares higher by about 21%. And we get more retail earnings after the bell today. Williams-Sonoma, a big favorite of Taylor Riggs, that's going to report after the bell, as is Ross Stores. And every day at this time, as we always do, we usually bring in Abigail Doolittle for our Options Inside segment. Abigail's taking a good, well-deserved break off today. So, Taylor, it's all up to you.
Yep, let's do it. And, you know, Romaine, you had the VIX, of course, on that board. And when you think volatility, what do you think? Not rhetorical. Crypto. Come on, Romaine. Don't leave me hanging.
Drinking water.
All right, fine. So let's do all of this and more with Matt Shapiro, CEO of MWS Capital. Matt, talk to us about some of the volatility that we've seen. Look, it's not new to the world of crypto, but have some of the volatility, is that just the name of the game? How are you thinking about crypto, some of the cryptocurrencies, and when it comes to volatility?
Well, it is volatile, but I get a lot of clients asking, how do I play crypto, without necessarily going in and plunking money down into Bitcoin at $60,000 when there is so much infrastructure around cryptocurrency where we think really all the money is being made. So one stock we've been very interested in is called Bakkt, which is a venture of the Intercontinental Exchange, the owner of the New York Stock Exchange. We think one of the most well-organized cryptocurrency and payments platforms, has relationships with MasterCard, with Google, with Starbucks, a developing story here. The valuation, we think, at $4 to $5 billion is well under, just the one that just coming out with a private funding round of these various enterprises and exchanges, about $7 billion, just mentioned before the break. So the stock took off from 10 to 40, back down on post-SPAC merger arbitrage activity. Now we think at $17 is exceptional value for those who want to play the cryptocurrency infrastructure.
But how do you do some of that fundamental analysis when there's sort of memes and this gamification going on within the industry as well?
It's you either want to do it or not. So you either want to be in Tesla and see if lightning strikes, or you want to be in Amazon or not. That is the game of investing nowadays. So you have to devote parts of portfolios to some kind of situations you think represent some potential. So here we're comfortable with Bakkt. other stocks like Rivian, for instance, we're not comfortable with. So you got to pick your spots.
Is there a trade that you're looking at with some of the call options and maybe short covers?
Well, yes. In back, there's no float. The lending rate, if you own shares, is about 150%. So that means the calls can explode if we ever get a turnaround, another meme surge in this stock.
Matt, is this an inflation hedge?
I don't think investors are concerned about inflation when they're playing the cryptocurrency. But it's also really, Taylor, a broader question about how to invest over the next decade when we have this massive expansion post-pandemic supercharged by crypto. So it's a really important thing and trend for even a traditional advisor like myself to advise my clients of how we can get in this trend, because there's a lot of money being made in cryptocurrency, even if you don't want to buy them at these levels.
Really appreciate your time. Matt Shapiro of MWS Capital. Thank you as always for joining us for Options Insight today. Romain, did you drink your water?
No, that was good. I love when you ask me questions when I've got my mouth full. Nice beverage. Try to
just keeping you on your toes.
You know, I'm a professional here. All right, what are we going to talk about next? We're going to talk about HSBC. We're going to talk about CEO Noel Quinn. He was actually out at the Bloomberg New Economy Forum, a big deal, folks, talking about the relationship with China and the impact on inflation. Really hit on a lot of topics. You don't want to miss what else he had to say in that interview. We're going to show you that coming up next, right here on Bloomberg.
Just finishing what you were saying, Tom. November 3rd is when the decision is. Just in case people got confused, I will. Just one more story, Tom.
Yeah, thank God for that.
We're at 137 right now into weakness. Is this where they play the music in the Academy Awards? Is this it? Do I thank my mum again? Are you in charge of this?
Is she the only one?
Kill the music. You know who's in charge here. Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Lagging profitability that the European banks still undoubtedly have is structural weaknesses, which are linked to cost efficiency, to focus on business model, to investments in digitalization.
The Bloomberg New Economy Forum. It's underway, and the HSBC CEO, Noel Quinn, sat down with Bloomberg's Francie Lacroix. Now, he says controlling inflation is an art, not a science, and discusses where he's seeing opportunity in Asia. Take a listen.
The world's economy is recovering. It's recovering well. There are tensions in the supply chain. We shouldn't be too surprised by that. We went into fast reverse. We're now going fast forward. There will be friction in the supply chain for a period of time. But take it as a positive that the world is recovering and economies are rebounding. If I then look at the concerns for the future, I am concerned about inflation, because I think at the same time as the supply chain recovering, there are some new issues. Supply chains are repositioning, partly because of geopolitics, partly because of resilience considerations by governments. Oil prices are going to remain high for quite a while because there's constrained supply. And the investment cost of new sustainable infrastructure is going to have a premium in the near term.
But do you worry about
about shocks, or do you worry about monetary mishap? What does it mean for a big bank?
I think controlling inflation is going to be a fine art as opposed to a science. And I think we're going to have to make careful judgment calls in the central banks over the next few weeks and months as to how they keep the balance between economic recovery and making sure inflation doesn't get out of control. And I think they'll do that through pulling back on QE and progressive, gradual increases in interest rates. And I think countries will move at different times on that, and that's okay. But it's going to be about balance.
We just heard from the former Treasury Secretary, Hank Paulson, also saying that it's almost impossible for the U.S. and China to decouple.
Yeah.
Like, how do you read the Chinese economy right now? And has HSBC rebuilt ties with them?
Well, listen, the Chinese economy has been big as a manufacturer of the world for many decades. It's also huge as a consumption market for the future. And I don't think the world can decouple from one of the biggest manufacturing nations of the world and what will be one of the biggest consumption markets in the world. So I really hope it doesn't decouple. Will there be differences? Differences in views on technology, differences in views on politics, yes. But I think it's important that there is a level of connectivity between the world and Asia and between the US and China.
In general, for your wealth business, do you see, how many bumps along the road do you see? Do you see it like a clean trajectory upwards in terms of how you build and
grow?
For
us, it's continuous investment. We already start with a very strong platform in Hong Kong. We're one of the biggest wealth managers in Hong Kong. We have on our balance sheet over 1.6 trillion of assets under management, wealth assets under management for our clients, whether it's in private banking, asset management, it's in our retail operations. Now, for me, it's about a continuous investment program. I guided the market that we were going to spend $6 billion over the next 3 to 5 years. $3.5 billion of that is building out our wealth business within Asia, and we're going to do that across all of Asia. I think there's wealth opportunities in Hong Kong still. China, definitely. Singapore, absolutely. And also India. Now, that will be a combination of organic investment, recruiting people. And as you've seen in Singapore, we bought a business, or are in the process of buying a business from AXA. Bring that business together with our insurance business, and we have a much more powerful wealth proposition here in Singapore. And I'm looking at 3 or 4 other opportunities like that as bolt-on acquisitions over the next few months across Asia.
Noel, have you spoken to Hong Kong authorities so that you don't have to do a quarantine next time you come back, as they rolled out the red carpet for...
I'm not planning a trip at the moment. I think it's important for Hong Kong to establish what they need to establish with China on reopening the Hong Kong-China border. I don't want to do anything that may jeopardize that. I would love to get back to Hong Kong as soon as I can, and when the authorities feel it's right for me to go back, I will do.
All right, the CEO of HSBC there, Noel Quinn, speaking a little bit earlier to Bloomberg's Francine Lacqua. Of course, that's out at the Bloomberg New Economy Forum, and you want to be sure to catch the last day, of course, of the forum, the 4th annual, wrapping up on Friday in Singapore here. We've actually heard from a lot of great folks there. I mean, look, they've talked about not just the economy, but, of course, a lot of the issues facing some of our social issues like climate. And I guess the whole hope is that you get some sort of solutions to some of these problems.
Yeah, discourse, but to an end.
Yeah.
And hopefully that change will, when you've got change makers, power players there, they can discuss the upshot of the China-US relations, actually make steps in some direction to alleviate the situations. Inflationary pressures, supply chain issues, I'm not sure how much any of them can directly impact those situations
But you
right
told
now.
me it was the Davos 2.0.
Yeah.
It is Davos 2.0, but does Davos fix problems too?
I'm going to keep them all on that.
Maybe they think they do.
But maybe they could send us out there next time. I mean, well, look, we solved the supply chain issue when they sent us out to the LA port just a little while ago.
Yeah, your sofa's here,
So-
my dining table's arrived, and it's all because we went to the Port of LA.
All right. Well, it's a big deal here. Also a big deal, of course, what's happening in the broader markets here as we count you down to the close. Just a little bit more than 30 minutes to go here on this Thursday afternoon. 47.05 roughly right now on the S&P 500. The Russell slightly down on the day. Yields relatively unchanged. Your VIX slightly elevated at 17. From New York, this is Bloomberg.
represent 5,500 forecourts, which is roughly 65% of all service stations in the UK. Of the ones that we were able to survey yesterday, roughly 1,500, 27% said they didn't have any fuel, 21% said that they had one fuel type or another, so that's either petrol or diesel, and 52% said that they were fully stocked. Northern Ireland, Wales, Scotland seem to be okay, but we still are seeing, like your reporters are seeing, some stock outs at sites around London and the South East, I'm afraid.
When do you feel confident that this will 100% be in the rearview mirror?
Well, what we're hoping is those people that got fuel over the last few days obviously don't need it again for another few days, and that will give us a chance to actually start to restock the network. So we're trying to get it back to a reasonable level today and tomorrow, and then over the coming weeks, because it will take a number of weeks, to get it back to the sort of more normal running levels.
Do you think competition is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever, but nevertheless, talk to me about what you think the competitive landscape is going to look like here.
We've seen a bit of departures in this market, and this market has three very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the US, New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one directional traffic from the US to the UK, and now it's open, of course, to UK nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I'm Mark Crumpton with Bloomberg's First Word News. Former UK Prime Minister Tony Blair is warning of the risks of a US-China conflict over Taiwan.
A big anxiety. And I think it's important that we understand what China's position is in relation to Taiwan, how deep this one China policy is. But they have to understand that Taiwan is not the same as Hong Kong. And, you know, there are very strong views on this in the West.
Mr. Blair made his comments today at the Bloomberg New Economy Forum in Singapore. Earlier this week, Chinese President Xi Jinping reasserted his country's red line with regard to what he called separatist forces in Taiwan in a meeting with President Biden. President Vladimir Putin of Russia has succeeded in raising the specter of a threat over Ukraine and must keep the U.S. and its allies on edge. In recent weeks, the U.S. has warned its European allies that Russia may be planning a repeat of its 2014 invasion of Ukraine, citing a fresh buildup of tanks and troops on its border. The Kremlin denies any aggressive intentions. Oklahoma Governor Kevin Stitt commuted the death sentence of a condemned inmate today, Julius Jones, the day of his scheduled execution. Jones has proclaimed his innocence from death row for more than 2 decades in the 1999 killing of a suburban Oklahoma City businessman. Last night, protesters gathered in front of Governor Stitt's official residence. Stitt commuted the 41-year-old's death sentence to life imprisonment without the possibility of parole. He had been scheduled for execution at 4 p.m. local time. Oklahoma's Pardon and Parole Board recommended in a 3-1 vote on November 1st that Governor Stitt commute Jones's sentence to life in prison, with several members of the panel agreeing they had doubts about the evidence that led to Jones's conviction. European countries are making a U-turn in their fight against a brutal fourth wave of the coronavirus pandemic. Just months after a return to the office in Germany, people are mandated to work remotely as long as there are no operational reasons that stand in the way. Belgian government employees are ordered to work from home 4 days a week. In Ireland and the Netherlands, people are also instructed to work from home where possible. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
The most crucial moments in the trading day. This is Bloomberg Markets The Close with Caroline Hyde, Romaine Bostick, and Taylor Briggs.
Counting you down to the close, less than half an hour to go.
Yeah, sideways day for the markets. S&P up, Russell 2000 down.
And you really see that too on some of the individual sector levels where it kind of looks like half in the green, half in the red. But what is in the green, this is interesting, is some of the discretionary stocks coming off of some of those good earnings remain that we've gone from some of those retailers, and technology also up more than 1%.
Yeah, you talk about some of the individual movers. Alibaba having a rough day. The ADR is down 11%. Keep an eye on CVS. We haven't talked about this here, but they're actually going to shut about 900 stores over the course of about 3 years. This is a huge turnabout on that retail strategy that they had taken under Neela Montgomery, who had just come over there maybe about a year ago from Crate & Barrel. She's out. They're going to appoint 2 new co-presidents here of that retail unit here to kind of refine that retail strategy. Investors like what they hear. Shares up 3%. Also keep an eye on Activision. The pressure here continues. Yesterday we heard from the chief of Sony's PlayStation unit saying that he was concerned about some of the allegations surrounding Activision and I guess the response by the CEO at Activision. Now we're hearing from the head of the Xbox division over at Microsoft saying that they're going to potentially reevaluate their relationship with Activision. This is based on Bloomberg reporting, based on a memo that reporters have seen. And Applied Materials higher here on the day. We're going to get those earnings after the bell.
We are. And of course, chip stocks feed into the overall supply chain narrative and the inflationary pressure that we've been talking about from the very start of this show, and how, well, investors thus far have been looking through it. This is as we try to find ourselves the perfect inflation hedge. People looking to gold, real assets, they're looking at real estate. But stocks have still managed to win out because we're probably not at such elevated levels like 10% and above where equities really start to erode their value. But at the moment, look at the purple line in the US. Of course, we reached above 6% or thereabouts for CPI. But in the blue line, S&P 500 crescendoing up into the new record highs. Here in Europe, inflation less elevated, but at about a 4% level in the yellow line. The S&P, the stock 600 at a new record high. For now, equities have done well. But are we now turning our attention to those hard assets, real assets, the likes of gold? Or maybe, dare I even say it, digital gold, Taylor?
Oh, is digital gold the inflation hedge, Caroline? I don't think we can answer that today, but maybe with some more evidence in the future years, we'll start to answer it. Gemini, though, cryptocurrency exchange, and that, as you know, founded by the Winklevoss twins, they've raised $400 million in a round of funding. It values the company at about $7 billion. Joining us now is Bloomberg's Olga Karif. And Olga, I mean, you sort of just have to ask, why now? What do we know about? Look, there's always been interest in cryptocurrencies, but sort of this renewed push, if you will.
Absolutely. There have been news of gigantic rounds in the crypto space, especially in the last few months. I think one reason for this is that we are in a bull market for crypto. So Bitcoin hit an all-time high in early November, and I think a lot of people are excited about the flow of retail and institutional investors flocking to the space.
I was curious. I mean, we talk about, this is being the big first round of funding here for the Winklevoss twins for this particular company here. And I'm curious as to why it took so long. Is it just now that the institutional money, the interest is there now? Where was it, I don't know, back in 2015?
So, like you said, they started the exchange in 2015, but they were actually very early on, Tyler and Cameron Winklevoss, they were very early on to spot this trend of crypto. They were early investors in Bitcoin, and I think early on they were just able to fund this exchange on their own. But since they started the exchange, it expanded into all kinds of areas. They do custody, they invest into startups, and they're expanding geographically. And I think there is such a huge boom in opportunities that they could expand into that it just makes sense to raise this round of funding so that they have more capital for M&A and for jumping into new products.
I mean, the twins, they bought, 11 million or so of Bitcoin back in 2013, and they're now billionaires off the back of it. So interesting that they're going to the capital markets. And Olga, also interesting that they're going for equity. Why did we start to see these sorts of crypto exchanges and other crypto-related companies deciding to raise money rather than doing ICOs and their own coins? Why are they going to the capital markets?
You know, the ICO boom, I think, kind of died down after the regulatory crackdown, and Gemini has been just one of those very, very compliant exchanges. They've always, talked with regulators before launching any new products. They haven't listed many of the, coins that some of the larger exchanges have listed. They're very selective and very compliant. And so the ICO route just would not have worked for them. But I suspect that maybe this round of funding could be a stepping stone towards an eventual IPO. Their bigger rival Coinbase went public earlier this year, and perhaps Gemini is going in the same direction.
Olga Karif, we thank you, of Bloomberg. Always great insights. Meanwhile, there's another crypto story that caught our attention. It's kind of fascinating. A kind of loosely organized group of crypto investors. They're raising money from people across the internet to buy a copy of, get this, the US Constitution when it goes up for auction via Sotheby's on Thursday. And this is kind of some sort of, coming together, banding together of crowdfunding, if you like. Yeah. Donate your Ethereum through Juicebox, it's done. But remember, other DAOs have done this. Preza DAO, they raised money. And what did they buy? The Wu-Tang Clan original album, once owned by Martin Shkreli.
This is the Constitution. So we should point out, this is not the Constitution.
Is it the Wu-Tang Clan? No, I'm
there was only one with Wu-Tang Clan albums, but there's multiple copies.
So wait a minute.
This is the only privately owned copy of the Constitution.
It's a group. So if they win the auction, who gets it?
Yeah.
Well, that's the point. I think it's the sort of the collective ownership amongst the DAO. And I mean, look, in all seriousness, it kind of shows you, I guess, both the purpose and I guess the progress that they've made kind of in this space. I mean, this is kind of the dream of a lot of these folks, right?
Yeah.
This sort of sense
of
Is it
a libertarian dream for the Constitution?
Oh, gosh, don't say that. I don't know. How does the Constitution feel about this? Can the Constitution be owned? Well, these are existential questions.
It's a copy.
It's a copy. It's not a tungsten rock, though. It's a Bloomberg.
We landed with 40% remaining. Years ago, Ewan Dixon was the first guy to do it. It's taken a century for us to change our propulsion system away from liquid fuels.
There are dozens of international companies in that airframe size who have realised the opportunity, are in a race to get those commercial aircraft out there at that scale. It's an area that can be served by hydrogen, which we're well placed with, through fuel cells.
On the supply chain, are you starting to see things improve? And if you are, where specifically, sir?
Well, this year we have been mostly affected by the semiconductor situation, and we believe that the quarter three was the quarter that was most affected.
Well, we've got 60 minutes to go, and the S&P 500 is a new record high. Once again, it's this time, consumer-related stocks that are doing particularly well. Think of the likes of Gap on the higher side. You've got Bath and Body Works as well. Almost called it Beach, but it's not. S&P 500 up 0.4%. Consumer staples, though, on the downside, but consumer discretionary on the higher side, one of your better performers. We've got the emerging market index kind of doing pretty poorly today. We've had some surprising moves, as ever, from the likes of the Turkish Central Bank. Keep an eye on what's happening in terms of central banks around the world and how they're potentially getting more dovish than certainly they are in the developed world. New York crude up 0.8%, maybe a little bit of dip buying going on there. Kristen Bitterly is with us, regional head of investments, of course, from the North America at Citi Private Bank. Kristen, great to have you, as always, as we run up towards this market close. And, I mean, we've got the push and the pull of inflation versus a strong economy and even consumers going out there and spending.
Absolutely. I mean, that's what we've seen in a lot of the earnings that have been reported is that consumer demand is still there. There was a lot of concern coming into earnings season, obviously, about supply chain disruptions. And what we found is most companies have been able to successfully navigate this, both in terms of consumer demand, but also in terms of pricing power. So we've seen that kind of chug along and continue march higher of the S&P 500.
Why do you think people still remain, though, worried about it, Kristen? I mean, I'm talking just strictly from a market perspective.
So I think the thing is there's a laundry list of reasons to be concerned, right? So everything from inflation to supply chain to what's going on globally, what's going on in China, is the Fed going to raise rates too quickly? So you can come up with this very strong list of reasons why you shouldn't be invested, why you should be concerned. But I think the best way to combat that is really with the record high profitability that we've seen and to recognize that not all parts of the market are created equal. And the market has been differentiating and delineating between winners and losers.
All right, we're just getting warmed up here in conversation with Kristen Bitterly, regional head of investments for North America over at Citi Private Bank. She's sticking with us as we count you down into the closing bells. Just about 15 minutes to go here in the trading day. Let's get you a quick check of where we stand right now. 47.05 right now on the S&P 500.
Yeah, new record high on the S&P 500. How are the new IPOs doing? Well, how's Sweetgreen doing?
Sweetgreen came out today.
It's killing it.
83,
guys.
Salad. It's the future.
It's literally like a $52 salad. That's the salad tracks the stock price.
What are the margins on the Sweetgreen salad?
High. It's incredible.
Russell 2000 having a down day once again. We're not loving our small caps on the day. On your yields today.
Unchanged. And pretty good 10-year tips auction nonetheless, but not enough to move the nominal yields as well. This is Bloomberg.
目前眼前状对我们军方来讲的话，我只跟委员报告，是我从军以来40多年以来看到真的是最严峻的时候。要犯台的话，他目前有这能力，都有的啊，但要看怎么一个结局。说我们不做任何挑衅啊，但如果把他激怒了，就跟我们人一样，你把我激怒了，我手上能力我也会发挥出来。所以2025是我们研判要全面啊，我们这样研判的。
China has, I've spoken with Xi about Taiwan. We agree we'll abide by the Taiwan agreement. That's where we are. And we made it clear that I don't think he should be doing anything other than abiding by the agreement.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
For us today, it's a lot more about things like services. So people come because they want to find the local plumber, maybe a contractor, maybe it's a babysitter, and they tend to convert very fast. So we do well for advertisers, top of the funnel, brand, and then bottom of the funnel, direct response.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Countdown to the Close. I'm Caroline Hyde.
I'm Taylor Riggs.
And I'm Romaine Bostic.
And we're having a look at how small caps, once again, really lagging on the day vis-a-vis the likes of the S&P 500 and a new record high. Money moving into the NASDAQ in the blue. And the downside, though, Russell 2000 getting beaten up, down by 0.7%. Still all eyes on inflation to a large extent, Romaine.
Yeah, all eyes on inflation. The retailers continue to sort of be the outperformer here on the day. You can see the consumer reflected in that consumer discretionary line at the top of your screen, up about 1.5%. We've seen the transports weak all day. They're actually well off the lows of the day. They were down more than 1% here, at least as measured by the Dow Jones Transportation average. A lot of the airlines really under pressure for a third straight day. Chip stocks, meanwhile, doing well. Nvidia's earnings knocked it out of the park last night. We're going to get Applied Materials after the bell today, and keep an eye on some of the oil and gas stocks, of course, still waiting to see if there's going to be any release of any sort of strategic petroleum reserves in the U.S. or in other countries as well.
Still with us, of course, Kristen Bitterly, Regional Head of Investments for North America at Citi Private Bank. And coming off of some of the inflationary conversations before, fold that into some of the fundamental analysis, how you're thinking about, well, closing in on these record highs again, a cyclical rotation and a rotation into small from large.
Yeah, so just getting to the inflation conversation, I think this is really important because you have to first set the stage for what type of inflationary environment that we're going to be in. And we talk a lot using words like transitory, which we are no longer using anymore because, quite frankly, I think it's a little bit misleading. So our view is one where the inflationary pressures that we're seeing is going to moderate next year. So we're expecting headline inflation to be anywhere around, let's say, 3 to 3.5%. Now, here's the thing, is that moderation is still going to feel a lot higher than it has for the past decade and is probably going to average that level going forward. So I think we have to get used to a higher inflationary environment than what we've been accustomed to, but it's not going to be at the levels that we've seen.
Kristen, are people asking you for hedges? Are you finding hedges a little bit more in terms of that inflationary pressure?
So I think this is the key thing. If you're worried about inflationary pressure, if you're worried about rising rates, what should you do and shouldn't you do in your portfolio? So the first thing is cash. cash is actually punitive in this inflationary environment. And when I say cash, it's actually very different than operating cash that you need for operating expenses. We're talking about cash as an investment. So cash is punitive, duration is punitive. So the key thing here is really finding alternative sources of yield. And that can be in dividend grower stocks. It can actually be in using the options market to help monetize volatility when we've seen those spikes. But finding yield without duration is really the key in this type of environment.
With regards to equities, though, I mean, how do you value things in a market where I guess some things seem to be very overvalued? You talk about some of the run-up that we've seen in some of the tech stocks here. They continue to sort of act to a certain extent as a defensive play, but it's going to be a long time coming for some of these names to sort of catch up with some of these multiples.
Do you know what's really interesting when you look at some of the multiples is if we actually take out the top 8 stocks in the S&P 500, which account for, granted, about 30% of the market capitalization, the forward PE ratio is trading at about 18 times. So it's very different than some of the headlines. So really you have those largest companies that are really making up the bulk of that. And so the question is adjusting some of our expectations for profitability. And I think that's a key because corporate profitability growth at around 45%, somewhere in that ballpark, right? What we've seen year over year, we can't anticipate that going forward. We have to moderate some of our expectations, just like with inflation. We have to moderate some of our profitability expectations to really come in at about 8% over the next 2 years, which is going to feel different.
All right, in conversation right now with Kristen Bitterly, Regional Head of Investments for North America over at Citi Private Bank, helping us count down to the close, just about 6 minutes away. Going to get back to Kristen in just 1 second. I want to jump over to Taylor. You're at the board. What are you watching?
I want to take a look at some of the big tech stocks from Maine that we've been following. We're talking a lot about some of the EV makers, some of the autonomous vehicles. Take a look at shares of Apple. You're up 3% on the day on reports that they are working on their cars to make it just that fully autonomous model. This has been a years-long project, but now we hear that they are concentrating on just fully that self-driving ability, all without human intervention. We know, of course, that the Apple car is Silicon Valley's worst kept secret, but Dan Ives coming out today and saying it is a matter of when, not if, when it comes to this car. Those shares are up about 3%. Change of board. Kristen, let me bring you back in here. It is a 5-year break-even chart that we show you, and near these records that we come off just a little bit today. But fold this into when you start to get worried about inflation hitting the consumer, because we know that it is the consumer that's driving this economy. Are consumers getting the sense of pulling back on some of that demand? And then does that feed through on some of the top line revenue growth of these companies?
Well, I think the key that no one really talks about, we tend to talk about the supply side of the equation when it comes to inflation and some of the supply chain disruption, but we don't focus enough on the demand side. And so I think one of the things in terms of demand, there's a number of different things that won't directly impact the consumer, or maybe I should say are actually driven by the consumer. So part of it, just the seasonality, right? Going into the holiday season, going into the winter months, we always see these spikes in demand. I think the second thing is also with the discontinuation of the stimulus checks, you basically see that savings rate coming down. So we've seen that excess of around $2 trillion in terms of what's being held in accounts. You're seeing that start to come down. And I also think the last thing that we have to talk about is the pandemic, right? Delta did impact the US, and we saw that in terms of that shift from instead of spending on services, we were spending on goods. So we could see with some abatement of the pandemic, a shift there. So we expect the demand side of the equation actually to stabilize.
Kristen, just on that point of the pandemic abating, when we're seeing numbers tick up so significantly in parts of Europe, is there any worry, any caution that you're currently having in the United States?
So I think there's always caution and worry, right? And we're celebrating all of the victories that we have. So, for example, my children getting their first dose of the vaccine was a big day in our household. But I think when you look at, we now have vaccines, we now have really positive information around treatments as well. And so, yes, we're going to have to learn. I think everyone's using the term endemic, right? So this is something we're not going to have a post-COVID world. It's something that we're going to have to learn to live with. But now that we have all of these tools, if we continue to see vaccination rates going up and we continue to see this development on the treatment side, it's a very positive piece of news in terms of it becoming endemic as opposed to a major disruption.
We want to thank you so much always for joining the show, Kristen Bitterly. Great to have our regional head of investments for North America at Citi Private Bank with the takes on inflation, takes of the risk of COVID, and that dampened, risk sentiment earlier in the day of trade, but now we're powering to new highs.
Yeah, we're on the highs of the day for the S&P 500, the NASDAQ higher as well. But again, a lot of this is being led really by two sectors, some of the retail and consumer discretionary names and a lot of those big tech names. Nothing else is really participating right now.
And both of which are passing through inflation pretty well if you think about the consumer, and you saw that sort of demand for some of that inflation protection with that 10-year tips. That was a pretty strong auction that we had, and that is that sort of level of gauge of where we can see, Romaine, of where this market stands when it comes to hedging some of that inflation.
Yeah, and just to put it in perspective here, you're talking about basically more than half the stocks in the S&P 500, 330 down right now. We're taking you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to that closing bell, and here to help take us beyond the bell. Our global simulcast, Carol Massar and Tim Stenovic, bringing together our audiences across Bloomberg TV, radio, and YouTube. Carol, looking at S&P 500 higher on the day, but again, you're talking about more than a third of the stocks, more than two-thirds of the stocks, are in the red.
Yeah, so it's kind of not an all-in at all in terms of the trade. A bit of a struggle here, but nonetheless, I am wondering, will we ultimately get a 66th record on the S&P 500, NASDAQ 100 too? Will we get a record thanks to the likes of NVIDIA and some other names, Tim?
Okay, so a good day for the S&P 500 and the NASDAQ, but another bad day for crypto. It's the fifth straight day of declines for Bitcoin, slipping below $57,000 for the first time since October, down about 15%, Caroline, from the record high that was reached just over a week ago for Bitcoin.
And it's interesting where the correlations live for that, because we're starting to see a breakdown. They'd been seeing whenever big tech did well, or indeed tech and growth did well, so too did crypto, disassociating itself perhaps from the rally that we're seeing in the NASDAQ. But notable also, it's not getting much of an inflation hedge bid on the day either, Taylor.
And interesting, we've talked a lot about the equities and the bonds. One thing I failed to do at the top of the hours that we usually do is talk about some of the economic data as well. The jobless claims, Caroline, showed a little bit of a hint of moving in the wrong direction. But overall, the economic data up to this date has been strong. The economy has remained strong. The consumer, Romaine, we're learning from these earnings, has remained strong.
And we should point out, too, you talk about some of the sideways action. There's so many catalysts up ahead here. You got a potential decision, I guess, on the Fed. Let's just call it a decision, not necessarily a change, but that could affect monetary policy. No matter who's in the Fed chair seat come next year, you're talking about a normalization of policy. You got a lot of fiscal policy issues, a lot of geopolitical issues. If you're an investor and you're sitting on 70, 80% gains in some of your holdings, now might be the time. Right?
Hey, taxes, though, capital gains taxes on those.
What are you going to do it ahead of 2022?
I guess so.
All right, well, let's get you caught up here on the closing bells. Dow Jones Industrial Average going to finish the day in the red, down about 0.2%, or about 60 points here. The S&P 500 going to close out the day right around 47.05, let's call it. That is a record high here on the day, 66 the year, according to Carol's count there, up about 16.3%. The NASDAQ Composite also going to close at a record high, 15,993, and the Russell 2000 really just didn't get any traction today. Going to finish the day down about 0.6% here at 2,363 and change.
All right, I'm listening today, so I'm not going to repeat what's going on with the small caps, Romaine. I'm just going to let you know that. But what's interesting is the amount of records that we have seen this year, and the momentum, even though it was kind of a bouncing around trade here. S&P 500, though, as Romaine did mention at the top, 168 higher, 336 lower. So overall, you're seeing a lot more of a risk-off trade in today's session, Taylor.
Yeah, Carol, and you can really see that on a sector level as well when you take a look at the composition of the S&P 500. For our radio audiences, we do on the charts, it's green and it's red, but there's some red even in the winner's circle here. And I have to say it's two themes. It's chips and retail. So basically your NVIDIA, Macy's, and Kohl's are doing pretty well. Those are the two sectors that are up about 3% on the day. Really, really strong earnings from those companies. You take it down to the bottom and it's an unwind of the defensiveness, right? Utilities, household products, food and beverage, and some telecoms off about 0.7%. 1%.
All right, let's get to some of the gainers. I thought you were going to say it was about chips and kale because Sweet Green, man, off and running in today's session, doubling at one point by the end of the session in its first day as a publicly held company, up about 76, 77% here, 49 and change here. Coming out, upsizing its IPO, sold above the IPO price, but it's pretty amazing to see this IPO just strong out of the gate. Mention retailers real quickly. That was definitely on our radar today. Macy's, Kohl's among them, really rallying. Macy's up about 21% here. This is after the company, in terms of the third quarter, stronger than expected results, raising its full year guidance, and strong consumer demand going into the holidays. And I do want to mention NVIDIA. That was really so much strength for the technology trade today, up about 8.25% here at the close. The company reporting a strong third quarter, boosting its sales outlook for the rest of the year, and that stock hitting a record, certainly in the trade today, Tim.
Oh, you got the gainers. I got the decliners. Let's start with Cisco, leading the pack at the bottom when it comes to the S&P 500, both on a percentage basis and on a points basis, down 5.5% on the day today. Shares falling after the company gave a lackluster revenue forecast for the current period, hurt by a shortage of components. That makes it difficult, the company says, to keep up with demand. Cisco's executives say they expect this part shortage to last until the second half of the company's fiscal year. Cisco also dragging down the Dow today. Shares of Petco slumping the most since its January IPO, down more than 13% today. It was a really solid quarter for the company. You guys spoke to Ron Coughlin. We spoke to Ron Coughlin on Bloomberg Radio as well. They beat on the top line, the bottom line. They boosted their outlook. Gross margin, though, was the issue that came in slightly below consensus due to supply chain costs. Coughlin told us that the company is getting creative when thinking about supply chain challenges, especially when it comes to ports, and actually, Romain, going to different parts of the country with their goods. So checking out ports in the Northwest rather than in California. And then also in Texas as well. Rivian lower on the day,
All
too.
right.
Down
we got a lot of earnings crossing the wire right now. Just going to get to Applied Materials real quick. Those shares down 6% here in the post-market. Their fiscal fourth quarter numbers here not looking great here. They missed on adjusted EPS, $1.94 versus $1.96. The street was looking for on revenue $6.35 billion. AMAT gave them $6.12 billion. So a miss on that. Here's your forecast here. 1Q net sales, fiscal 1Q, $6.16 billion plus or minus $250 million. And as far as the EPS numbers go, 178 to 192. The street was looking on average for 197, guys.
All right. So we're seeing shares of Applied Materials down about 6.2% in the after hours. Let's go to the retail side of things because Ross Stores coming out. We've seen some really strong performance from Macy's and Kohl's. They really rallied in today's regular session. Ross Stores, though, out with their third quarter EPS. It's a big beat, folks. $1 to $9 a share, $1.09 a share. The estimate was for 78 cents a share. Talking about the outlook, fourth quarter EPS 83 to 93 cents. So that is light. 101 is the estimate. Fourth quarter comp sales, they're looking for up 7 to 9%. Fiscal year comp sales up 12 to 13%. Looks like they're bumping that up. They had seen about 10 to 12% higher. So taking a look at that company, Caroline, in the after hours, we're seeing that move up about 1.8%.
It is just extraordinary how department stores, some of these key retailers just powered back the moves from Macy's, the moves from Kohl's, and the fact that we'd sort of written them off, thought that type of buying was different. But e-commerce, now people want to get back into bricks and mortar. They want to actually be able to touch and feel the things they're going to purchase if we're worried about supply chains to a certain extent. And these companies have really managed their inventories ahead of the holidays.
But is that want or is that kind of necessity right now? A lot of people have been spooked by the fact that you order something online, you have no idea whether it's going to show up or not, or when it shows up. So maybe there's a sense of, let me just go into the store and see what I can get and what's physically there.
Well, Ross Stores is certainly highlighting all of those topics as they're saying that it has significantly exceeded all of our expectations despite waning government stimulus, huge uncertainty relative to the spread of the variants. Even though their operating margins are down just a little bit from 2019, that is offset despite some of the big headwinds that they're getting from, wait for it, higher freight, wage, and COVID-related costs. So managing all of those supply chain has been a theme, Tim, that we've seen throughout all of these earnings.
Yeah, I want to go back to something that Caroline said that was fascinating that we learned from Macy's earlier in the day today, because even though consumers do want to get back and be in stores, still there's a lot of pressure on Macy's coming from JANA Partners to actually spin off its e-commerce business into a separate company, similar to what Saks did. And we think about it in the context of, direct-to-consumer companies actually going and adding stores, at least before the pandemic. So there is this sort of bifurcation dislocation happening when it comes to retailers that have been reporting of late.
Well, we should point out, too, I mean, just on this same conversation before we move on, Farfetch is out with earnings, and they're not necessarily good. Obviously, they're pretty much only an online sort of network rather than the omni-channel thing that we're talking about. A loss per share that was not necessarily as bad as what the street was looking for, but still a loss here. And then you talk about some of the gross merchandise volume. It's growing here, but you're not really seeing the reaction in the shares. And I'm wondering if this does become sort of this play for investors between some of the more brick and mortar and omni-channel names and some of the more pure play e-commerce names.
Yeah, sinking 10% post-market as that revenue does indeed miss for Farfetch. It's interesting that we continue to see, of course, some pretty ugly numbers coming out of the Chinese e-commerce giants as well. Alibaba was pretty underwhelming, to say the least. We got Baidu coming out and saying, look, it still sees its fourth quarter revenue at 31 billion to 34 billion yuan, but they had a profit beat overall, but a soft ad market. And just your Oatly update after a rough kind of week. They're opening their first Chinese factory.
Nice.
Is that going to stem some of the supply chain issues for them?
To do what? What's in the factory?
You got to make the oat milk. It doesn't grow on trees.
No, it doesn't.
Where do
cartons? Maybe that's what they're going to be making.
Oats don't milk themselves.
But it is funny what you say about Alibaba.
Where do oats come from, Tom? Now I'm confused.
Oh, I guess they do grow on trees.
Don't they grow somewhere?
Oat milk doesn't grow on trees, though.
I don't know.
Oats, peas, bees, and barley grows. I think that's how it
Maybe
goes,
Tim's
right?
living in the metaverse and oat grows differently.
Apparently none of us are farmers.
In the metaverse.
He's just vertically farming all of his oats.
Vertically farming. He's a Brooklyn boy. So I'm sure he's got artisanal oats.
Artisanal oats in Brooklyn. Come on over.
He's just juicing them at home.
All right. He's probably growing on the roof. All right. I think we've got to run. That's going to do it for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We'll catch you again, same time, same place tomorrow.
And we will see Carol and Tim as Tim gets back to his oats for a moment. More
you look so disappointed in us, Taylor.
Taylor doesn't find our loathing of oat milk funny.
I mean,
she's a vegan.
Literally grow on the farms, on trees.
I thought so too.
Right.
I didn't know what Tim was talking about.
We'll
talk to him after the show.
Send Tim to the Midwest.
Just get send him to China, to that factory.
Yes,
that's what we need.
That's where they're made, apparently.
Let's have another key conversation. Talking of China, talking of Asia, the Bloomberg New Economy Forum is where it's all been happening. And in fact, I've been having conversations with the likes of Bill Gates, of course, as co-founder and co-chair of the Bill and Melinda Gates Foundation, discussing the global fight against COVID-19. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
And well, just look at that. New record highs. We're back at them. S&P 500 up at 0.3%. The NASDAQ up 0.4%. Yes, we're still worried about inflation, but the consumer keeps on buying. And that's why we're seeing Rostals coming out with better than expected numbers. That's why we're seeing it as one of the best performers on the day ahead of those earnings. The fact that Gap is up, the fact that Macy's has had such stellar report. This is all being driven by, of course, your desire for the consumer to look past those inflationary pressures, those price points, and get back into real bricks and mortar store and start spending. We're up 0.3%, as I said. Russell 2000, though, really not catching much of a bid at the moment. We're still worried perhaps about the overall global economy. Remember, the Swiss franc and some of your other haven bids did well today. On the back of, we're worried about maybe some of the pickup in COVID cases in Europe in particular. And what does that mean in terms of overall economic growth? We still have, of course, the overwhelming decision that we're still waiting for in terms of the Federal Reserve as well. What does that mean for monetary policy? I leave you with what's happening in terms of Bitcoin, because yes, we're still up 100% year to date. We're actually falling of late, down for 5 straight days. We haven't seen that sort of sell-off, well, consecutive sell-off since May. And we're also seeing perhaps some technical levels being hit. Look out for the likes of 58,000 is low. We're seeing perhaps some support level. We're currently at 58,160 when it comes to the king in crypto. Romain.
All right. Look, let's talk about the chip shortage right now, because it continues to dent profits, particularly in the auto industry. Ford, it's going to explore buying chips directly from global foundries. It could be one of the first direct collaborations between a major automaker and a chip producer to result from the semiconductor crunch. Joining us right now, Bloomberg's Gabriella Coppola joining us, who covers autos for us. And Gabby, explain to me why this is a big deal, because as Ford and the other automakers, are they primarily getting their chips, I guess, from effectively middlemen? Have they not necessarily been going directly to the manufacturing source?
Hey, Romain. Yeah, that's right. Usually their chip suppliers, maybe it's the tier 1 supplier or just kind of deep down in the supply chain. But the real thing is that in the past, the auto industry is such a small consumer of chips compared to, say, Apple, consumer electronics, that they didn't really bother to kind of make tight relationships with chip makers. They just said, whatever you're making for those guys, we'll take some and, throw them in and we'll put them in the car. Now chips are becoming so central to the car because of all the software features that are going into cars now. They need to be more strategic about it, and the chip crisis really taught them that lesson.
But also the supply chain woes of getting their chips from outside of the United States. How much is Global Foundries a bet on, making your chips more locally?
Well, that is definitely part of it. Global Foundries, they just went public last month, and they have a factory in upstate New York where I believe Ford went to visit. You had, Senator Chuck Schumer, all of these kind of American politicians there. And they're also, I believe, lobbying Congress to pass a bill to kind of get the government to support or provide incentives to expand chip capacity or, chip production in the United States. So that was definitely part of it, I think, for Ford is, hey, not only are we going to buy this directly, but we're also going to buy it in America. But I think that's a couple more years, or at least a few years down the road. It takes a while to ramp up a production like that.
And speaking of that timeline, we spoke earlier this week with the Qualcomm CEO, who talked a lot about the automotive business being a smaller but yet fast-growing portion for that company's revenues. But yet it's so complicated to do, and it takes so long, and it's so detail focused. What then do these car companies do when they're looking at all the complications and trying to control their own destinies and create all these chips and have these partnerships, but knowing it's going to take a while?
Yeah, well, I think they realized that they have no choice. That was another lesson of the chip crisis. And, it's funny, not only did Ford announce this morning, but then GM, also an executive from GM, came out and announced that they are going to massively consolidate the number of the types of chips they buy. So they're not doing it off the shelf. Now they're being much more strategic in their orders. But yeah, the other thing in these announcements, it's not just that they're going to buy them. They're actually thinking about designing the chips as well, which is something that Tesla already does, and other automakers like Hyundai have said they're going to do. So they want to, because they want to have a kind of a firmer grasp or control on the kind of functions their cars are going to have, the software that's going to be in the car. So they need to be involved at the chip level. So that it's still early days. I mean, Ford executives told me it's still early days, but that is kind of the goal. They're going to look at working with Global Foundries to get into R&D as well. This is just more of automakers kind of realizing they need to vertically integrate more. They need to do more, control more of this technology in-house if they're going to be able to kind of confirm their seat at the table as all this disruption happens in the auto industry.
Gary, always great to have your time. Thank you, Gabrielle Coppola, talking all things Ford and chips. Meanwhile, we talk all things, well, retail strength, and this time we're coming from Williams-Sonoma, and of course this is a company that is raising its full year 2021 outlook in the same way that Ross Stores did. Third quarter adjusted earnings per share, $3.32. The estimate was for $3.10. They're seeing comp sales, so like-for-like sales up almost 17%, well ahead of expectations. And overall, they're saying they're extremely proud to deliver yet another quarter of outperformance. They say overall, successful execution. They're talking about their customers' response to holiday and gifting assortments. They are ready to drive outstanding finish to the year. So clearly they're confident about, well, their inventories, it would seem, remain, although the stock seems to be down on the day. So we'll have to keep a close eye on how those forecasts do indeed look.
Yeah, I like this place. I'm going to create a registry so you guys, I mean, it's only 37 days until Christmas, so you guys know exactly what to get me. So there's no mystery.
Do you need something to go with your sofa?
Absolutely. You know, a little throw pillow.
So that we don't ruin it when we come to sit on it.
I was thinking about getting one of those tubular pillows. That's
You
what my wife said.
never fail
She
to
said,
blow my mind.
A tubular pillow?
Are you
Have you seen these
listening to
things?
this, Caroline? Here's a
What's a tubular pillow?
I don't know. But now we're going to have tubular pillows, and apparently wallpaper is part of the deal, too. I didn't realize that was part with the couch.
Here's the strength of these numbers.
project.
Caroline, West Elm is 22.5%. Pottery Barn, 15.9%.
Oh, I spent a lot on
Kids
Pottery
and
Barn.
Teens, 16.9%. But Williams-Sonoma, that brand specifically, only about 7.6%. A 30% gain the year before. I don't know if that means why some of the shares are weaker, but maybe that brand relative to everything else looks like a little bit slower growth.
The House of Scalamandre oval platter is on sale now for $39.99. It was $75.99.
You should. Sounds like a good deal.
Christmas registry for one Romaine box.
For all of our viewers, you can go and buy Romaine something for his Christmas present. Meanwhile, let's get to our first word news with Mark Compton.
Caroline, thank you very much. Oklahoma Governor Kevin Stitt today commuted the death sentence of condemned inmate Julius Jones the day of his scheduled execution. Jones has proclaimed his innocence from death row for more than 2 decades in the 1999 killing of a suburban Oklahoma City businessman. Last night, protesters gathered in front of Governor Stitt's official residence. Stitt commuted the 41-year-old's death sentence to life imprisonment without the possibility of parole. He had been scheduled for execution at 4 p.m. local time today. Oklahoma's Pardon and Parole Board recommended in a 3-to-1 vote on November 1st that Governor Stitt commute Jones's sentence to life in prison, with several members of the panel agreeing they had doubts about the evidence that led to Jones's conviction. President Biden plans to skip January's World Economic Forum in Davos, Switzerland. Bloomberg has learned the president will instead send administration officials to the Swiss ski resort. In past years, when a U.S. president hasn't attended, the delegation has included senior officials who work on economic issues and trade. Chinese state media broke its 2-week silence on the whereabouts of tennis star Peng Shuai. State broadcaster CGTN posted a letter attributed to Peng on its Twitter account claiming she is resting. The tennis star has not been seen since alleging an affair with a former Communist Party official. The scandal comes at a sensitive time, with China preparing to host athletes and other dignitaries from around the globe at the Winter Olympic Games starting in February. President Biden says he's considering a diplomatic boycott of the Beijing Games. That means the U.S. would decline to send a delegation of government officials. Mr. Biden made the comments during a meeting with Canadian Prime Minister Justin Trudeau today. Some lawmakers have urged the boycott to show American disapproval of recent Chinese economic and military actions and the country's human rights abuses. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
reducing global warming continues to be an uphill battle in the fight against climate change. 1.5 degrees Celsius. That's the temperature deemed the safe limit for global warming set by the Paris Agreement in 2015. To limit warming to 1.5 degrees Celsius, CO2 emissions would need to be reduced by 45% by 2030. 191 Paris Agreement signatories committed to setting national targets to reduce CO2. But current national targets project a 16% increase in greenhouse gas emissions by 2030, with global temperatures expected to rise to 2.7 degrees Celsius by the year 2100. Among the most vulnerable to global warming are many of the world's smallest and poorest countries.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics? The fourth annual Bloomberg New Economy Forum, it's underway, where key voices are all weighing in on some of the biggest global concerns. As we brace for winter, keep a close eye on the impact of COVID-19. Bill Gates is predicting deaths and infection rates by next year. He spoke with Bloomberg editor-in-chief John McGoldthwait earlier. Take a listen.
Well, the vaccines are very good news, and the supply constraints will be largely solved as we get out into the middle of next year. And so we'll be limited by the logistics and the demand. In a lot of countries, it's not clear what the demand level will be. Ironically, in a country like many in sub-Saharan Africa, where the epidemic hasn't been as visible, your demand for the vaccine, it's challenging to generate that, but we'll do the best we can on that. The other thing that's pretty impressive is that, Merck and now Pfizer have oral antivirals that the Merck drug, we've been able to reformulate to get it to be less than $8. And so we'll be able to have anyone whose age or medical condition makes them have significant risk immediately begin what's called presumptive treatment as soon as they test positive. So between natural immunity, vaccine immunity, and these oral treatments that can scale up in a way that the antibodies never did, the death rate and the severe disease rates ought to be coming down pretty dramatically. And, by next summer getting to be, say, quite a bit lower than the average seasonal flu level is, assuming there's no surprise variants, which right now the evidence is that's not that likely, but it can never be ruled out.
What do you think, you just mentioned next summer, what do you think victory looks like in this? Is it effectively taking COVID back? You also mentioned the flu. Is it effectively making COVID a kind of flu-like disease? I know it is, but is that the kind of version of what victory is in your brain?
Yeah, things are fairly binary. I mean, if, death rates from driving were 10 times what they are, people might think, wow, shall we do it or not? Flu is accepted. The, average years of life lost for both flu and COVID is about 8 years because it's so